Good morning and welcome back to another great Traders Corner Investors Summit. My name is Anthony Chapman. We have an amazing show for you, and it's a pleasure to be your host today. Thank you for joining us. With the election behind us and a new administration preparing to take the reins, the current trading environment has been creating incredible trading opportunities, has it not? On our panel today, we handpicked the industry's top trading experts, as we always do, to join us. They've agreed to share their most consistent and profitable trading strategies with us in an online educational forum. Today's show is packed with great information, discounted special offers. So let's get started. Our first presenter is a favorite. He's a professional trader who helps traders collect long-term income from prop trading. He's run one of the largest options firms in the country early in his career and has worked for Payne Weber as a commodity trading advisor. He has over 1 million views on his program, 4-minute drills for traders, that's helped launch his current site, thedisciplinedtrader.com. He believes that prop trading could be the best thing that's happened to retail traders since exchange traded contracts. Ladies and gentlemen, one of my favorite and one of the best in the biz, here to present prop traders 3 keys to defending open trade equity is Mr. Norman Hallett of the Disciplined Trader. Norman, welcome back and thanks for meeting us today at Traders Corner.
Okay. Thank you. Thank you for that glowing review, Anthony. It's like my life just flashed before me. Yeah, I've worked for big corporations like Payne Weber, and I've had my own thing in different forms since about the middle 90s. And I've focused on different things in my career. I would say that I try to get more and more focused. My recent focus over the last few years has been the fascinating world of prop trading. And I try to work directly with traders to understand them and have them move forward with successful prop trading where they can develop a long-term income. That's kind of my thing. And I say one-on-one, I like to talk one-on-one with my traders because trading is largely a mental and emotional challenge. And that's why it's why my company is called The Disciplined Trader and thedisciplinedtrader.com. But the parent company of The Disciplined Trader is actually Subconscious Training Corporation, where a lot of things have emanated from over the years. But we have focused since 2000 on helping traders with the mental keys, as well as taking advantage of the fact that I've written several books on running and creating trading plans. You can do one of 2 things to get the mentality going in the right direction, to get that positive expectation as a trader. And one thing that you can do is work on your subconscious mind. But I have to admit that most traders don't have the patience to do that. They want action, they want now. So the other thing that you can do is make sure that your trading plan has the elements to offset what can be your mental and emotional issues, like over trading and lack of patience and things. And I'm going to mention, I wanted to introduce you to kind of the base of what I like to have in my base when I talk, and that's at least respecting the mental part. I mean, this is really why most of you out there, if you're anything like the traders that I talk to, have bought trading plan after trading plan after trading plan, and always looking in that direction for success, where really the success is within you. And one of the keys to having the right trading plan is having a simple trading plan. I'm going to emphasize that at the end. But let's today focus on making money in the realm of prop trading. And the one thing about prop trading, especially with the big firms like Apex and so on, are defending your open trade equity. As a professional trader, I can tell you that that's something that we do all the time. Right from the beginning, when you're hired by a large firm, they want to know how you're going to defend the money that they give you to trade, and not how much money you're going to make. So that's the same question you need to ask yourself and the same skill that you need to develop. And that's defending open trade equity is the key. If you have a good trading plan, and especially a good trigger in your trading plan, that when you take a trade that you have a good confidence that it's going to move at least in your direction very early in the experience of the trade, then you have open trade equity to defend right away, and you can capture some of that. I'm going to show you how to do that right now, in fact. But little on me, I went to the University of Cincinnati, the home of Oscar Robertson and some other individuals. I went because it was a work-study school. I could work a quarter and go to school a quarter and pay for it as I went. And so the University of Cincinnati was good to me, and I graduated with a degree in math. And within about, I was in the nightclub business for a while, and you can only stay in that business for so long. I ran clubs that were, they were actually the competition for Studio 54, $1,000 memberships and so on. So I'm used to dealing in the higher echelons of numbers and people and so on. But when you're in your 20s, like I was when I was running those places, you can only stay in it so long for obvious reasons. In any event, I decided to use my math degree. Within about a year and a half of working for one of the largest option firms in the country, I was running the home office and was training other managers to manage groups of traders like this. I had 63 in my office, and I was in charge of making sure that they did the right kind of, they were getting they were making money for their clients. And when they came into my office, and when I came into my office, I'd have my red pen out, because most of the problems with the traders who were struggling for their clients, they had a trading plan that was much too complicated, and they were hesitating to get in, and they needed another shoe to drop before they got in. You know, of course, I would rather be out of a trade wishing I was in than in one wishing I was out. But I will also say that you can't make any money unless you're in a trade. So there's a balance there that you have to figure out for yourself. After I ran that option firm, I was kind of hired as a free agent by Payne Weber as a commodity trading advisor. Winds up that a lot of that was not only selling but raising money, and I really didn't like the salesy part of it. So did that for about a year and a half with them. And one thing I would mention about that experience as a commodity trade, when you're managing millions for a firm of clients' money, you only make 20% of the profit. Now that's 20% of a much larger number than you're probably trading at Apex or whatever, but still, it's not 90% that some of these prop terms, including the one that I use most of the time is Apex. They'll pay you 100% of the first 25,000 you make, and 80 and 90% actually of all of anything else. And why can they give away most of that money? Because most traders are just paying the very small fees that add up. But when 90% of traders are paying small fees, they're making plenty of money. And they give you tight parameters with Apex. I'm going to show you a little bit of that in a second. I've written several books on prop trading, not on prop trading. I'm coming out with a book in January on prop trading, but this is a book on the design and construction of effective trading plans. I think that one's still available. I've written several of them in papers and so on. There have been books written about me because, as you can see, I'm an exciting presenter that uses humor a little bit with to kind of offset some of the pain that I know that traders are going through. So I started the Disciplined Trader in October of 2000, so we're in our 23rd year. We concentrated for the first 15 years on the mental and emotional construct of traders, but I couldn't help myself after a while. I just saw too many lousy trading plans that traders were taking advantage of and not taking advantage of, and so I decided to get back into my expertise, and that's building and running trading plans. But my recent focus in the last few years has been the effort that I call Their Money, Your Profit, which is also the name of my new book. And it's all about prop trading, because I think it's the best thing, as Anthony said in the introduction, to ever happen to traders. Let's get into the keys. The keys of frequent, reliable trigger. I call it an A+ trigger. An A+ trigger to me is a trigger that will result in a pop When I say a pop, I mean a reasonable movement higher in a long trade, a reasonable movement lower in a short trade. And if you can have a frequent, reliable A+ trigger, and when I say reliable, I mean somewhere in the neighborhood of 2/3 of the time to 70 or even 72 or 3%. When you hear traders that talk about having 80% winning trades and 90% winning trades, I think I want to ask you to prove it. Because they're very few and far between. And if they are, maybe you have to wait for 2 or 3 days to find one of those trades. And even they don't always work. But what I'm saying to you is that if you test strongly, and I've done, of course, all that testing, and whoever you're following should have done that testing for you in a live sense, not just looking back at charts, because you never know where it went in that 5-minute bar period, let's say. But the idea is that if you have a frequent, reliable trigger, the first thing that happens is again, you need a pop to be an A+ trigger. Okay, A+ means that it will give you a positive trade 67 to 72% of the time, but it may take a few bars to get there. An A+ trigger gives you that pop right away. That's the plus sign. Okay, so I have a way of rating and testing triggers that, of course, I reveal to my clients. In any event, the main benefit is that you have a scalping opportunity. You're not starting from a deficit. So and that has a positive. That's positive with respect to your mental game. If you can be taking a profit 2/3 or more of the time immediately after placing a trade, that really does something to your belief that this is possible to win, and in the end it becomes a reality, that winning becomes a habit. Listen, losing and struggling is a habit. Winning is also a habit. And one great way is finding an A+ trigger that gives you a pop so that you can take a quick scalp. And I showed traders how to measure that scalp. But the idea is that if you start your prop trading with a frequent, reliable trigger every time you take a trade, it means you can capture some profit early and capture that open trade equity so that you can build that distance to what I call the red line, and that's the line at which you bust out an account. And in a $50,000 account, you only have a $2,500 red line below any open trade equity high. What do I mean by that? I mean that if you don't take that open trade equity and you come back and you break even on the trade, that open trade equity that you didn't take is calculated to that 2,500. So if you had a trade that had a $500 open trade equity and you didn't take it, let it be break even, that's not a big deal with your own money. Well, it is, but I can explain why that is at some other time. But at least you're even, you didn't lose any money. With prop trading, that $500 you take is counted against you, so that instead of now 2,500 floor, it's only 2,000. So they do not want you to give away, and a professional trader does not give away open trade equity easily. And when you have a system, a frequent, reliable trigger where you can take that pop, you're constantly padding that, and then move any other positions that you may have, contracts, to a break even, you're doing much better. So the benefits is a scalping opportunity and not starting from a deficit from a mental standpoint, but also giving you some padding. Again, a reliable trigger works 67 to 70. I said 60. I wrote this about 6 months ago, part of this presentation, and it's about 72% we've been getting over the last 6 months. So it varies, but it always stays over that 67, and sometimes it's even better. Again, you need a tested trigger, okay? A reliable means it works, and it's tested to work at least 2/3 of the time. You pull the trigger with confidence, no hesitation. When you have a reliable trigger, you're not saying, should I take it or not? You're pulling the trigger because you know that most of the time you're going to have that pop to pad that distance between the red line and give you some freedom with any remaining positions. And I'm going to show you what I mean by that. Okay, frequent means that is good for the mentality because your patience is not tested. for those 15 years that we were concentrating primarily or exclusively on mental and emotional assets of the trader, the patience piece was the piece that we got the most testimonials on about our courses, because most traders, they have a short period of time to trade. Some of my traders only trade an hour or 90 minutes a day, which I think is great, incidentally, and I'll explain in a second why that is. But the idea is that frequent and reliable is what you want, because the reliable gives you confidence to take a trade without hesitation, and the frequent offsets any problems that you have with your patience. So instead of fighting me on this notion, on these notions of hesitation and patience, go with me on it. Admit it, that it's an issue with you, as I admitted it. I admitted it to myself that it's an issue with me. Only then did I start to succeed with trading and have a comfortable and then a terrific career. But it's the patience and the hesitation and the fear of losing. You've got to get rid of those. And then the right trading plan, and it starts with a frequent, reliable trigger, you can offset some of those issues. Okay, so that's key one. Key two, now I'm a twin, so I can put this picture up. But you want to take at least 2 contracts upon entrance. Okay, I find that, I think it's more important than one would anticipate with prop trading. You need to take, rather than taking one big contract, let me just say this up front, and I'm not covering it here, but in a $50,000 testing account with the prop firm, I like to divide that $2,500 room that I have before the red line. I like to divide that in 10 parts, meaning that that in each trade, I am not willing to lose more than $250. Okay, 2,500 divided by 10, $250. And so when I get a trigger, I measure my risk, and I'm trying my best at all times to take at least 2 contracts. The idea of micros are very good for trying to fit into, for definitely fitting into that. The currency contracts like euro dollar and Japanese yen, these are contracts that can fit easily with $250 risk in most times. If you're using a 5-minute candle chart or a 2-minute candle chart, even a 10-minute candle chart, which I trade off of, you can get 2 positions in those currencies and in your micros, micro gold, micro S&P, micro NASDAQ, whatever you trade. Find a way to get at least 2 contracts upon entrance. And here's why. The first contract is for scalping. I've just taken some time and explained why scalping is important, okay? Of course, the most important is that it minimizes your drawdown. In other words, as I mentioned, when you take, maybe drawdown is not the perfect word, but when you take a scalp, if you're in 6 micros, let's say, in a NASDAQ, and you treat them as 3 and 3. When I take more than that, I may trade them as, in micros, I trade them as groups, but I 3 and 3 when I put on 6. Okay, and when the pop happens in your frequent reliable trigger, you take those 3 out, and you may capture. It's not a lot with 3 micros. Maybe you capture $75 or $100, and then you move to break even on your second position. But let me explain that in a second. So the benefits of the first contract is to minimize the drawdown. You're putting distance by taking that money between you and the red line, and it capitalizes on what you've already tested as a jump start trigger, that A+ trigger. Now in the loaded gun simple trading plan, which we use and that I train people on, it's probably the best, I think the best trading plan I may have ever built, especially because it's built for prop trading in this particular case. It capitalizes on that jump start trigger. You want to have at least a couple of them. We have 2 right now. I'm always looking for more, but 2 is really all you need when you have something that's frequent and reliable. Okay, so you want to have that first contract for scalping to pad that distance from the red line. Okay, the second contract is what I call a runner. It's an expansion. You want it to be able to expand. Look, there are there are scalpers. I've never been a scalper in my career. I've always done a little bit of scalping, but it's never been my entire approach. I believe there's a better way. I think I've proven it to many of my people in my lectures over the years that if you have an element of expansion in a trading plan, you're giving yourself a chance for that big movement. I've had a single micro S&P contract that netted me $800 in a day, a single micro. It was a day where the market was, where the S&P was down 100 points and ended up 100 points. I don't know if you remember that day mid-year, but I'm just saying to you that it is possible to have big returns with very small risk at a runner. Look, we all want that runner, and you don't want to deny yourself the runner. Again, it's a mental construct kind of thing. But if you do the right thing by the scalp, then you can allow yourself the runner, because when you put on the frequent reliable trigger trade and you have that pop, you take off the scalp first and then move your stop to break even on the second runner position. And I show my clients, and as it runs, if it is to run, and if it comes back down, you're break even and you're no closer to the red line because you took you took the first half of your approach. If you get that runner, you really want to trail that runner in a responsible way to, again, to maximize that open trade equity. So listen, there's a lot of good reasons to do it, but everybody wants the opportunity for a big winner. I know I do, and I you know, if I put you up against the wall, I think you would say you really want that big winner too. Okay, and you've got to defend against the growing profit as a trigger, as that runner moves. You need to move up your stop in a responsible way. One way that I like to do it is once it passes all of the resistance and in a long trade or all the supports in a short trade, I like to use two candles back. The high in a long trade, the low of whatever, the two candles back from the active trade, two candles back, I put my stop below the low of whichever is lower of the two back candles. And as the next candle approaches, I reassess those next two candles. So that's a good way to do it when you have when you now have breached and crossed over the major resistance points. Otherwise, it may be very good for you to take that beautiful runner right at the constructed level. But more on that at some future date if you want to work with me. But I'm just saying that one contract for scalping and one contract for expansion, and then defend. That should be your approach when you're prop trading, okay? And again, minimizing the drawdown. Now, the other benefit of this is that there is a common dilemma. When you put on a contract in the futures market, or pretty much in anything, but if you put it on in prop trading, you're going to be trading a futures contract. If you put on a one contract, or you treat your multiple contracts as one piece, and then it starts to go, you have to say to yourself, when you have room to take a scalp, you've got to say to yourself, should I be taking this scalp or should I let it run? That's the kind of decision that will kill a trader over the long term. You should have all your decisions made before you start trading. So if you don't have the decision made and you decide at the moment, well, let's take the scalp. I had two losing trades before this. Let's try to get it. Let's take the scalp. You take the scalp and then the thing runs. And you say to yourself, you know, why did I do that to myself? Or you decide to treat it as a runner, and it comes back and takes a loss or breaks even. You say, I should have taken what God gives me, as my mother used to say, take what God gives you. But I will say that if you have your decision right away, where you know you have a tested positive pop in your trigger when you put it on, you know to take the scalp, and you know to leave the other for the runner without any further risk, because you're moving the stop on that runner to break even after you take your scalp. Do you see the mental and emotional difference between the two? I'm saying that, you know, trade these gurus, and listen, most of the gurus, they're responsible and so on, but there are some that will just put something in front of you and expect you to just run it without any notion of the human being that's running it. We can talk about bot trading and so on in a place, but I believe in having you understand what you're doing. okay, rather than have a computer, because when the computer loses for you, then you have nobody to blame but yourself for giving up the power. I will say that when I was a commodity trading advisor, I had to report all of my trades to the accounting firms on a monthly basis, and they actually on a daily basis, but all the trades for the month, and they would calculate it, and you know, I'm looking to be one of the top 10 traders in the country. Well, my sister-in-law worked for the trading, one of these major firms that did the accounting for commodity trading advisors for professional traders. And she told me one time that the 10 top traders who are mostly using bots and whatever from last year, you'll be lucky if there's 1 or 2 in the top 10 this year. Things change in the market, and it's much easier to change if you understand what you're doing and having control. Okay, that's my speech on bots. All right, so key number 3, we've got about 20 minutes left. This is perfect. The key number 3 is taking a smaller contract and giving you a wider range. I'm going to stop right here. I'm going to go to the chat real fast. Let's see if we just want to see if I guess it's the questions that we too far from the mic. Am I too far from the mic right now? I'm not sure if that was me or that was somebody else. I think that may have been Anthony. He did sound a little bit alike, but very enthusiastic. Okay, I am okay. All right, let's go. Let's keep going. Well, thank you, everybody. All right, so taking smaller contracts and giving you a wider range. You know, there's 2 things that you can do when you have when you're trading, and in prop trading. And again, I'm zooming in on that. Look, as Anthony suggested, and he is absolutely correct, that the future, the next couple of months, especially the next 6 months, I believe that you're going to have some pretty wild and violent markets at certain points, as some of these changes that our president-elect wants to make, and the resistance to those changes. What do they mean? No, yes, are they happening? And those kinds of and there's a direct, you know, higher tariffs may lead to more inflation, which is a direct impact on, you know, if you believe that, it's going to have a direct impact on S&P and NASDAQ prices, all the indexes. So you need to consider giving yourself a little bit more room and taking smaller contracts. Okay, so smaller contracts and giving yourself a wider range, very important. Okay, and let me see if I can. There we go. Current market volatility demands allowing a position to breathe. Again, the real benefit is the whipsaw, against the whipsaw, and I can talk a lot about that, but I'll do that at another time. Smaller contracts allow more contracts to be initiated and scaling out of. That is another very important aspect of prop trading. The more you can scale out of trades, and this is only for the more experienced trader in general and the more experienced prop trader, that you learn to scale out and continue to pad that red line. Okay, the benefit, another defense again against that drawdown by saving open trade equity. This presentation really has a heart in saving open trade equity. That's what it's about. Here's a chart that I put up. I'm going to show you one more chart before I'm done, but I only have about 15 minutes here, but I want to give you an idea of how I look at the chart. This is you know, my charts don't look much different than that. I'm going to show you the chart that I trade off in a second, but this is an example. This is one of the one trigger that we like to use. You can see that this is an engulfing pattern, a full engulfing pattern. If you ask Steve Nissan, the great candlestick guru and friend of mine, he will tell you that even a partial retracement, in other words, this particular candle engulfs all of the previous candles. Even if it's part way, it's an indication that you may have a turn. A full engulfment means that there's even more of a chance. What's happening here? What's happening here is you have a downtrend going on, and then you have a lot of individuals, people shorting here with this next expansion of the downtrend. And people who just initiated a short position in this bar are now all losing after this bar. So the person who bought down here has a pretty big risk going on. This person here has a little less risk. The person that bought here at the top of this body has the smallest risk. But you have different dimensions of risk here and different degrees of fear that is coming into the trader. And when all of a sudden, all of these traders and that's the purpose of a full engulfment, all of the traders in the previous bar are now losing. Now they're saying, did I get in on an exhaustion? And I can train you and talk to you about exhaustion and when that happens. But on a third major bar like this, you're now in that 50% plus area to get exhaustion. And so that combined with what's going on here in a full engulfing pattern where the most recent people are now losing, it becomes a lot of pressure. And so what we're looking for is that first pop. Now, here would be the place where we would take our first. There's a number of reasons that are very clear and simple, but let's use the most important reasons. You have here a downtrend. What is a downtrend? Lower highs and lower lows. Okay, you have a downtrend, but when a market turns around, these same points are the new resistance areas. Now, you'll meet a new trader who will try to take, when they put their limit sell in after going long at spots like this, and they look to trade take their profit before the resistance. You don't want to give it some room. This is the highest point I would take on this. Maybe I would even take it here. Why? Because the less you ask from a market, the more it will give it to you. The more you ask from the market, the less it will give it to you. There is a fairly high probability, I won't go into all of that, but that a market, once it starts to confirm, will test this resistance area. So you want to take your first one here. Now, as the market extends that, you can see where it did fight during that period of time, but you got your scalp nice and early in this congestion, and then you had another move higher. But you already had your limit sells in when you took this trade. So if you took this trade and took 6 micros, let's say, you would take 2 out here, take 2 out here. Why here? Because I'm looking at the point of high on this resistance band, and I'm taking a lower spot here. Again, I'm not asking for all of it. I've told you why before. So now I'm taking my second one here, and I'm taking my and I'm moving higher if this were to go. But this would not have gone as at this point I'm going 2 back, and I would be out on my third one here. So this would be a very nice trade for 3 positions I took out, 6 positions I took out, 2 here, and 2 at 2 before. And I'm not explaining this exactly. So, but when this thing backed off, we would have been out in this area. Okay, so I wanted to give you an idea of the importance of what a simple trading plan looks like, and I want to show you. But to put in summary, you need to employ a frequent, reliable trigger and test it with a pop. Okay, you want that pop in prop trading so that you can pad with consistency. The more you're padding, the less anxiety, the less fear, the less negative emotion can creep in, the more positive. Boy, I'm doing this right, took another scalp, that's great, the system really works. You start putting those things in your head, and you start to think like a winner, and therefore you will start to act like a winner. Initiate a trade with at least 2 contracts. 50% or more of your entries should be scalps. In other words, sometimes I will take on 3 positions in a 3 contracts. Especially when I'm trading bigger accounts, or when I'm in a funded account and I've already built that account up considerably to 60 or 70,000. Then all of a sudden the red line doesn't mean as much. You can go a little bit bigger. But if I have 3 contracts, even when I go big, when I have 3 contracts, I treat 2 as a scalp and 1 as the winner. Why? Because it's the more sure thing. And traders, you want to put all of the odds on your side. And you always at least 50% on when you initiate a trade of your number of contracts or triggers. And if you take on more than 2 contracts, you want to always favor 5 contracts, 3 scalps, 2 runners that you want to scale out of. Okay, so hopefully I'm giving you some background, whether you never see me again, to help yourself. I hope you do, because we're making winners out of prop traders, which is really what it's all about. Smaller positions with wider stops are preferred. I've mentioned all of that, why that's important. But I want to give you a couple of extra tips with my final 10 minutes here. I want to give you these 2 tips. I want to show you a chart. I'm not even going to make you much of an offer today, except for something that I think is going to be important to you. Here's a few additional tips for you as a prop trader. Limit the time you spend trading. If you trade all day, I'm going to guess that you're very frustrated. I'm going to guess that most of the time you even start off your day pretty well, and then somehow you give it back. Or you start off well, or you start off poorly and then spend time trying to get that money back. And half the time you do, and the other half you take a much bigger risk. Okay, limit the time you spend trading. Why? Because when you limit the time, even to a couple of few hours. I limit my time from 8 to 12, Monday, Wednesday, and Friday. That's when I trade. 8 to 12, Monday, Wednesday, and Friday Eastern time. But even if you're trading 90 minutes, the more restrictive you are in your time, the more you will focus on doing the right thing, because you don't have a whole lot of time. You understand what I'm saying? So if you only have 90 minutes to trade, or 2 hours to trade, or even 60 minutes to trade, and you're trading from a 2-minute chart, let's say, because you want you want to generate some triggers. So you need to have a smaller time frame, usually to trade. Usually you're dealing with a smaller time frame when you're trading, because any responsible trading plan will work in most time frames, of which the loaded gun simple trading plan will. And so you want to limit your time by intention, so that you can see what happens when you focus on doing the right thing. And I'm going to that's one of the prescriptions of me taking a frustrated trader or a losing trader and turning them into a winning trader. I immediately restrict their time. This way, if they don't do the right thing, they don't have a lot of time to correct themselves. So I think I've pounded that into you. Limit the time you spend. You're not going to hear most of these things from other traders out there that have been doing trading. They're just going to talk about their trading plan. I'm talking about having a trading plan that fits you and doing it the right way. Don't trade against reports. I mean, there are ways to trade against reports, and I've written trading plans for professional traders that ask me to give them a trading plan, and to do that, you've got to defend. The easy way that some do it is to have stops in on both sides of the market. But with current speed that the market trades with, you can get whipsawed even doing that. Don't trade against reports. When I talk about putting odds on your side, that is a 50-50 deal. It's not only is a 50-50 deal that you get it right on the onset of the report's release, but if you stay in it even 30-60 seconds, will it still be right? So anyway, that is that's I'm hearing too far away from the mic. I guess that's not me. Okay, as long as I'm sounding okay. All right, so don't trade against reports. You're putting your odds against you, not for you. Don't do it, okay? And a simple trading plan beats a complex trading plan every time. Why? Because it offsets. In a complex trading plan, you need to be waiting for all of the shoes to drop. The volume has to be right, the position has to be right, the pivot point has to be there, and all of the things that need to be right, you're chomping at the bit. And sometimes you can't wait. Sometimes you don't take the trade and it goes without you because that last thing didn't fall. Look, I believe in having parameters, okay? But 2 or 3 are all you really need. There's no reason to have an RSI and a MACD. Choose one. You look into what they are and do one that you believe in. Okay, I believe in the RSI. I grew up with it. I have confidence in it. I know how to use it. I train my people on how to use that. It's one of the simple, and we use it not to get into a trade, but to but for position sizing, which is also a big thing that I like to talk to, especially experienced traders with. But a simple trading plan beats a complex trading plan because it offsets the lack of patience, and which is a problem with a lot of traders. Okay, so I want to show, this is what one of my charts look like. Unbelievable, huh? I mean, this is the charts I trade off of. A couple of moving averages, and I trade with. You don't even need one of the moving averages for the basic system. And I'm looking for triggers. I just put the arrows in for you so that you can see some of the frequent triggers. This actually was a 10-minute bar chart or candle chart on the S&P, but you can see what a frequent reliable trigger does. It gives you the pop right away, right away, right away, right away, right away, so that I'm always taking that, and I did not give you any triggers that didn't exist here. I only gave you the triggers. Okay, so I didn't cherry pick here. This happened to be a good day. It's yesterday, but not, you'll have a loss or two along the way. I just wanted to show you, and here, this is what my RSI looks like. Okay, there are different ways to do it, but if you're not familiar with HIMA, HIMA, go to her site, learn about the HIMA Reddy, REDDY, I believe. She is the queen of RSI. She trained me on the RSI. She refreshed me from the old days, but she has a very good free course that you may want to look at. But all right, simple beats complex. All right, here's what I wanted to say. I've got 4 minutes. I'm just going to offer you something. It's got no price involved in it, but I want your help on something. I'm releasing a book called in January called Their Money, Your Profit: Cashing In on the Prop Trading Revolution. And I believe it's going to be, I know it's going to be a big hit, but I need case studies. So I'm putting together a loaded gun, simple trading plan case study group. I want new people, okay? I want the strugglers. I want those that are at break even, that are in the great, and that's the worst place. I'd rather be a loser and walk away and not spend all of my time going sideways and spending. Break even is almost the most frustrating. It is the most frustrating kind of trade. I want traders who know that they can do it, but just need the kind of logic that I'm giving you, the kind of support that I'm giving you, and that's what I'm looking for. A loaded gun. I'm putting together a case study group. I want 50 to 100 case studies between now and the time the book is released. Okay, so this is what I'm putting together. I want to get you in this case study. If you join me, I want you through the evaluation, the funded stage, and then I want money wired to you. That is the promise part of being in the case study. If you join me in this, we're going to be working one-on-one. You're going to be reporting some of your trades to me. You're going to be accountable. You'll have unlimited one-on-ones with me. But I want you to be responsible to yourself, but first to me, and then to yourself, and to yourself at all times. And then I want to leave you, and then you'll see what it's like to be responsible to yourself with a trading plan that works. What I'd like you to do, if you want to be part of the trading plan and you want to be part of the case study group, just email me at admin@thedisciplinedtrader.com. Okay, admin@thedisciplinedtrader.com, and just say I'm interested in the study group. You put it, hey Norman, in the subject line, I'm interested in the case study group. Okay, that's what you want to put, and I will send you. I will send you the PDF on the case study group. Okay, and it's a 2 or 3 page. I'll show you how it works, what we're going to do together, what the cost of it is, what the investment is. But think of what the value is of you getting from where you are right now to money wired in your account within really a 6-week period. That's the, if you're an experienced trader, it should be really 4 weeks to start. If you have an evaluation count, or if you're funded right now but you can't make it move forward, it'll be shorter. But for a newbie that's just starting to trade, maybe it'll be 6 to 8 weeks. But I am convinced that a trader that is responsible can really take advantage of the beauty of prop trading. So I want to help you do that with and I'm going to do it for you if you help me with this case study group. I want you to be successful so that you could be a case study for the new book. So that's my offer to you today, Anthony. I'm sorry I wasn't able to take any questions, but I didn't want to be late from. I think Marina's following me, so she gets angry at me. Yeah, she doesn't get angry at me. She's too sweet to get angry. She's a free spirit. I mean, this woman is just fantastic. She lived in Colombia. Now she's living in Spain. She's the one that you see in the coffee shop trading and trading successfully. So Marina knows what she's doing too. So in any event, if you're prop trading, which is my specialty now, join me and let's do it together.
Thanks, Norman. Make sure to email Norman, reach out to him if there's any other questions. Congratulations as a successful prop trader. You're killing it as usual. Great information, and your presentation was certainly enlightening. It's always great to have you on Traders Corner. Ladies and gentlemen, that was the ever so likable disciplined trader and coach, Mr. Norman Hallett of thedisciplinedtrader.com. That's thedisciplinedtrader.com, which that's what Norman is, the disciplined trader. If you're interested in being mentored by a professional trader with 40+ years of experience who can pass a prop trading evaluation with ease, then look no further. You can learn more by clicking on the link in the chat box. Norm, if you haven't put that in there, please do. Thanks again, Norm. It's always a pleasure to have you on Traders Corner. Please come back soon. Always love when Norman starts off the show, but let's keep the ball rolling. Our next presenter specializes in helping people to day trade with confidence and ease. If you have the desire to learn to day trade successfully, she simplifies the process with great energy and enthusiasm by completely breaking down the art of identifying high probability trade setups. Here to present 4 steps analyzing the live market for high probability trades is Marina, the trader chick Villatoro. Welcome back to Traders Corner, Marina.
Hi, thanks for having me. Can you guys hear me okay? Hello, hello, hello. Can you hear me?
Yeah, we can hear you.
Oh, okay. Hi, everybody. Norman, if Norman is still there, I have a really cool story about Norman. About 12 years ago, when I first began trading, I was truly struggling, like I can't even tell you, until I found the disciplined trader. I didn't even know it was Norman until I started to watch his 4-minute drills. And he became literally the reason why I became a successful trader. No joke. Then fast forward about, I don't know, 7, 8 years later, I was living in Guatemala, and some guy said, hey, my wife is a manager for Norman, the disciplined trader. And all of a sudden, here we are. Me and Norman have become friends, and I think Norman is absolutely amazing. I could never get mad at Norman. But anyways, it's a really interesting story because he was the reason why I became a successful trader. So well, just saying, you guys need to get that.
I appreciate that. You're the greatest. I mean, they talk about the the student surpassing the teacher, and I think that you could be one of those examples. So give him hell today.
Thank you. All right, guys, I'm so happy that you are here on this Saturday. Well, it depends on where you're at. Saturday afternoon, Saturday evening. For me, it's evening because I'm actually in Barcelona now. So I live in Barcelona, and I am going to get into that just a little bit. This is me, Marina, the trader chick. And today I want to talk about how to get over yourselves and have fun with day trading, because a lot of times we get too stuck in our heads. And before I do that, I have an actual question for you guys. Who here actually enjoys having fun when they trade? Does anybody here actually have fun when they trade? You guys can put it into the question box, because a lot of times we think we do when we're winning, but when we're losing, we are miserable and hating life, right? So that's kind of a conditioned fun, yet we sit through a lot of the bad times. And the thing is, we can actually have fun with the bad times just as much, because here's the thing. How many of you drive a car, right? Or have been in a car? The thing is that there are thousands of car accidents. It's a sad, sad thing to hear, but the reality is it's true, right? Yet every single day, knowing the statistics of having a car accident and that it could truly be serious, We still get into our cars. We still have fun in our cars, right? So why is it that we cannot do the same when we are trading, right? Because, hey, when we're in the car, we know that the risks are there, yet we're still texting, we're still being distracted. And this is how we were used to doing it in Guatemala. We were literally on scooters, 3, 4 people with our pets, and sometimes texting, okay? We knew the risks, yet we still did it. So my other question is, how many of you guys have lost money in the markets? Because the reality is, we've all been there, and I have lost a ton. You know what, though? I'm still here. I still get to hug my kids every day. I still get to go out with my husband. I still get to travel. Just because of the loss in the markets, it doesn't stop my life. So why is it that we can get into the car where the chances of real life injury and fatality is real, but we still can have a really good time, right? But when we trade, when the losses happen, the worst that could possibly happen is that you lose money, but we take it so much more seriously, right? And we drag it through the day. If we did end up losing, if we did, you know, we shut those charts down and then we put it on our kids, on our spouses, on our pets, when the reality is it's just part of the job. But it's how you manage those losses, right? That is the most important thing. And that is why it becomes so serious to a lot of people, is because they are not managing it properly. They are permitting their egos to win, right? That is what it's all about. So before we get into it, right, you have to definitely understand that you cannot just get in a car and wing it. You do need to know how to drive a car, right? You have the basics from when you start to drive a car. You know where the steering wheel is, you know where the shifts are, you know where the clutch, you know where the brakes are, correct? You know where all of this is, so you're not winging it, but you do have a system when you get in the car. There is a strategy. Even though it is pretty much automatic to us today, there is a strategy. And trading is exactly like that. A lot of people don't realize it, but it's a strategy. Once we understand the basics of trading, we are able to do anything with it. And it's truly all about the basics. And if you do not have those basics, right, if you don't even know how to shift from neutral into first gear, you're never going to be able to take off properly, right? You end up crashing. And after many years of following other people, the thing is with trading, with the financial markets, is you don't need, there's no barrier to entry, right? Anybody who has a little bit of money all of a sudden thinks that they could just get in and go crazy with the trading, right? Unfortunately, with the car, you're stopped, right? There is a massive barrier to entry because you do need to know the basics. With trading, you could just follow along, sit in a chat room, listening to other people, and just following. And that was exactly what was happening to me. I was in all these chat rooms. I spent all this money on all these different courses, and I was never taught the basics. So I just kept on listening to these people who I thought that they knew what they were doing. Turns out a lot of these moderators are literally like minimum wage workers that are just moderating chat rooms. I know that that sounds terrible, but that is an actual reality. And I ended up losing because they didn't know what they were saying, but I was following them. And because I didn't understand the basics, I ended up losing over and over again, until the point that I ended up losing almost $4,000 in one day within 5 minutes. And the reality was, I didn't stop. I revenge traded for another 2 days. And that's when I had a complete and total breakdown. I literally totaled my car completely, and I had a breakdown. So what happens when you have a breakdown, guys? What happens? Usually you have to face 2 decisions, right? One is you quit, you're done, you don't want to deal with it anymore, correct? Or the breakthrough. And I have found that the majority of our learning that we get to do in life is usually through the breakthrough, right? Like when we have collapse and then there's this massive breakthrough that takes us to the other side. And there is this one funny scene. I don't know if you guys have ever seen Nacho Libre. Really, really cute movie. One of our favorites, my family's favorite. And there's this one really cute scene in the movie when Nacho, this character who really wants to be a luchador, he wants to be a wrestler. It's a lucha libre, it's a Mexican wrestling. And he's dying to be a wrestler, and he's really bad at it, right? And he's standing in church and he's praying to the Lord and he's saying, Lord, why did you give me this passion to be a warrior? And I am just so bad at it, right? And I had felt like that so many times. And of course, the movie turns around and he wins the most important match, of course, everything. But I literally was able to relate to him because I felt like that for so long. And I'm not kidding when I say that I found Norman in my darkest days. And with his 4-minute drills, that was what he was doing back then, it got me out and it really allowed me to become a disciplined trader. And I had a breakthrough. One thing that I realized the most is that I never learned the basics because nobody actually taught the basics, because they treat you as if though you are born with it or completely ignore the whole basics thing. And that's when I went back to the basics. I totally left. I quit for about 4 months, and that's when I began to learn the market language. All right, so before we hop in, I want to just give you a quick intro because a lot of times we forget that we are people. Okay, we are people sitting behind those charts. We are not robots. And what you bring as a human to your charts is really important because it's how you filter those charts. So I am Marina, the Trader Chick. I have literally been an expat now for over 22 years. The first 20 years, me and my family lived in Central America, Costa Rica and Guatemala. And now for almost 2 years now, we've been living in Barcelona, Spain. Absolutely love it. And that's why I was saying that it's evening for me because it's 6 p.m. here for me while it's noon on the East Coast of the States. Before I was a trader, I was a fitness instructor. Why is that important? Because so many people have this misconception that you need to have an economic background, a math background, or any of those kinds of backgrounds, when the reality is you don't. I was literally a fitness instructor before I became a day trader. All right, guys, and I wanted to just bring this up really quickly that I speak 3 languages. I was a refugee from the Soviet Union, so Russian is my main language, was my mother language, and then I moved to the States when I was 6. So I didn't actually learn English as much as I learned how to continue learning to speak. But I learned Spanish in my late 20s. And when you learn a new language, it's this whole process, right? Like we know that there's this process, right? Like it's a commitment, it's a discipline, and we always start from the very beginning, right? When I was learning Spanish, I would never in a million years consider entering a room full of native speaking Spanish speakers and just get into a really intense conversation. I mean, that's just crazy, right? I wouldn't understand anything. Yet so many people who are getting into the financial markets literally enter that room of people speaking a whole new language and never learning that language, right? So that's one thing that I wanted to show. It's really important to learn that language. And today, that is what we're going to start doing. We're going to learn the basics of the market. Okay, because the market speaks to us the same as a new language, and once we understand it, we can dominate it. But first and foremost, you need to have the right charting software. You need a charting platform. Okay, there are so many really good ones today. Some of them are free, and they all have universal indicators. It's really important, guys. You do not need to invest in anything else, just a good platform. Now, let's begin. What is the language of the market? It really breaks down to being the trend. It's the trend, right? So what does that mean? Look, there are 3 trends. We know that there are 3 trends, right? Like we know that there is an upward trend. We know that there is a downward trend. But do you guys understand the importance of the sideways trend? Why am I bringing up the sideways trend? Because if you look into your trading journals, into your trading back testing backlogs, one thing that you're going to see consistently over and over again is that is where you end up losing the majority of your money, because this is that indecision zone. This is the chop. This is the area where there is no direction. It's the consolidation. It's the exhaustion pattern. I don't care what you call it. This is an area where the market is flat. And if you are in this area, you're normally thinking that you could beat the market or you want to predict what the market is going to do. And normally we never can. We just can't. We're too small of traders. So what we do instead is we listen to the market. And that's what I'm going to be showing you guys today, is how we can listen to the market, because this is the most important thing. Let's just break it down. What is an upward trend? It is literally each pivot is higher than the next, right? That's all it is. It's each pivot is higher than the next. Is the bull market. It's the market trending up. It's the market going up. This is where you buy. This is where you go long. What does that mean? It literally means you enter at a low price point, exit at a higher price point, and you take the profit in between. That's it. There's nothing more to it, okay? That's exactly what it is. You enter low, exit high, you're going long, you are buying, all right? This is all it is. And then there's the downward trend. Each pivot is lower than the one before. Don't overthink it, guys. This is where you are selling. This is when you are shorting the market. I'm sure that you've heard this term many times. Don't overthink it. Don't be like, well, if I'm shorting, that means somebody's losing. It's so much baggage that comes along when people start to hear that you're selling or shorting the market. There is none. If your technical analysis is showing you that you need to sell or short the market, that's what you do. So what does it mean in a nutshell? You're entering at a high price point, exiting at a low price point. Boom, that's it. And you're taking that profit in between. So simple. Short that market, guys, because traders usually make more money on the down than they do on the up, the bear market, when the market is going down. Okay, so now we're going to get into the most important part of this presentation, the trader's worst enemy. This is the consolidation area, the transition area, the channel. All right, this is when the market is consolidating. What does that mean? It means that there was one time a strong trend, and all of a sudden there's indecision. The market isn't sure what it's going to be doing, right? And all it is telling us is that stay out. I'm not really sure where I'm going to go. I know a lot of people are like, oh, the buyers are fighting the sellers. This, that. Who cares? Do you know those buyers? Do you know those sellers? Who cares? All you know is that the market is saying right now it is a flat zone. There is nothing going on. And that is exactly what we need to understand, right? We need to understand that this is the consolidation area. So the problem that happens when a lot of traders see this is they try to figure out what the next step could be. For instance, some will be like, well, the market's been going up all day. It's going to continue. I'm going to go for a long. Or the contrarian trader is going to be like, you know what? The market's been going up all day. I'm going to short it because it's time for a correction. The reality is neither are true. Neither, because we don't know what it's going to do. But what we do know is that we need to sit out and not do a thing, because you could have a strong market, it can consolidate, and it could completely change direction. Or we could have a strong market, consolidate, and then it can continue going down. And once we spot these areas, once we understand this channeling area, that is when we could, number one, stay out and save ourselves a lot of money, and two, figure out when the breakout or the transition is going to happen, because that's when we get confirmation and that's when we make the most amount of money. And that's why it's so important to recognize these areas. But if you're going to be driving a car and you don't know which lane is which direction is going, chances are you're going to crash if you're accidentally on the wrong side of the street, right? Because that's part of the strategy. We know where we have to drive, right? In the US, it's on the right side. If you're in England, in the UK, or any of those colonies that they used to have, it's on the left side. But this is the strategy. It's the same thing when it comes to trading. You need to understand the strategy. You need to know when that sideways market is happening, and you need to understand that you need to stay out. Now, the most important thing is a lot of people say to me, well, how do you spot these areas? How do you know what they are? So the thing is, the market respects areas, right? It respects areas. And we, as the individual retail trader, we also need to respect these areas. And these areas are support and resistance. I call them the seat belts. This is the safety net of our markets, right? Like when we are able to recognize the support and the resistance areas, when we are recognizing these areas, we protect ourselves because now we know where the market is respecting and we stay out. So to break it down into really simple terms, resistance area, it's literally the ceiling of the market. So if the market is going up and all of a sudden it starts to hit that mark, it starts to hit an area 1, 2, 3, more times, you draw in an area, and that's the resistance area. And now you know that the market is respecting that area, right? So you stay out of it and the market can revisit. So if it's revisiting that area and you're drawn already, you already are protecting yourself. You know that this is an area that is strong and you don't want to be in it until it either breaks through or fully changes direction. Okay, now what is the support area? It is literally the floor of the market. So your market is heading down strong, you have a downward market, boom, it keeps on hitting over and over and over again, right? So what does that mean? It is the floor of the market. It is literally an area that is revisited over and over again. Normally, these areas after 3 hits, that becomes a significant area, okay? So you have to have these drawn in. And the thing is, guys, it's free on any software. Drawing tools are free. As long as you have a good software, you could just draw them in, and you need to draw them in because when you are in the live market and you just entered a trade, you are going to be looking to the left of your chart because you need to have that confirmation that you made the right decision. This is how you recognize if it's a right decision. You do the work before you enter the trade, okay? Now, when you have a consolidating market, it is literally a resistance and a support area in a channel. You draw those areas out. That is when you recognize that this is not a place you want to be entering. Look at this choppy, ugly area. Does that look like something you want to be in? Does this look like something you want to be in, even though it's a wider channel? So choppy, it has no direction. Look at this. All right, so once you start to recognize it, you are able to stay out. Now, how do you start to spot these areas when they're first beginning? All right, usually, to me, this is my absolute go-to. And this is important, guys, because this is all completely free. It could be done with any market and it could be done with any charting software as long as you are able to recognize what is happening with the price action. Reversal areas and divergence. To me, this is my holy grail. I absolutely live for these. And once you start to recognize them, I guarantee you will be emailing me saying, thank you. I've never even thought about this. I cannot even tell you the amount of people that write to me and just say, this is my biggest aha moment. So let's really focus on these reversal areas and divergences. Reversal areas, double tops, triple tops, double bottoms, triple bottom, head and shoulders. These areas, they are not 100% indicators of reversals, but what they are 100% indicators of is that the market is slowing down. It is losing its strength. And the last thing you ever want to do is be in a market that is losing strength. You do not want to be putting your money or fueling the market that is starting to lose its direction. And divergence, to me, is my absolute favorite. It is literally when the price action is going in one direction and my other indicator, which I personally use, is the MACDs, starts to go in the opposite direction. Again, it's not an indicator of it's going to reverse. It is an indicator showing me that right now I need to sit out. And this is also an indicator showing me that there is an area forming. And I need to understand that. Now, when you couple reversal patterns with divergence, there is a very high likelihood that it will start to reverse, like almost a 90%. So when you always want to be in the probabilities of the higher end to understand all what this is about, okay? So I want to put all of this together because one thing that I can guarantee is that one of the most powerful trades that you could take are breakout trades, right? So what is a breakout trade? So a breakout trade is the market is going in one direction and all of a sudden it hits that area, right? It's 1, 2, 3, and so on. It's hitting an area. It is now coming into a consolidation zone, right? So this is when we're sitting out and we're waiting. But all of a sudden, boom, it breaks out in the same direction and continues. That is on market being refueled, and now it has that extra energy in the same direction. That is the breakout trade. And once you are able to spot it, this is where the majority of the people earn money, right? Is with these amazing breakout trades, because that's like renewed energy in the market. All right, guys. So the breakout trade. This is how I look at the breakout trade. I use my MACDs, as you can see here on the bottom. The red dots is the MACDs. The dashed black line, that is the 0 line. That is an area showing me that this is a flat zone, right? This is a flat area. What does that mean? It means this is where there's least amount of strength in the market. But then all of a sudden, boom, it breaks out through the area and it flies up. This is when I enter the market because my MACDs are strong. There's no divergence. The price action is running strong and it broke through a very significant area. Okay, now, interestingly enough, the other super, super strong, highly probable trade, it is what I call the initial reaction trade setup. What does that mean? So once it breaks through to one side, the same side, we also have the transition, the shift in direction trade. So basically what happens is that the market has now chosen a new direction, okay? It has shifted momentum. It has shifted direction. What does that mean? Oops. What does that mean? So think of yourselves when you want to go jogging, right? You put on your jogging clothes, you put on your jogging shoes, and you are raring to go, right? You are full of energy. Usually, if I was to bet on you, if I was to put money on you, that would probably be the best place for me to say you're going to run the longest, right? So it's the same thing with a new trend in the market. It usually has the most amount of fueled energy behind it. And if you could spot it in the beginning, that is when you can make the most amount of profit. And you need to recognize that because you have the areas. You have to understand when that shift happens, when there's no divergence, when you had other signals beforehand. And the coolest thing of it all those signals can be done for free because you're just using the universal indicators, and boom, you are raring to go. And that is the best spot to be in. Now, here's the thing, guys. We have absolutely everything we need to take action, right? Everything we need. We have these amazing presentations with a lot of cool experts really showing you some of their tricks and hacks and information. There's a lot of YouTubers, there's gurus, you could read tons of books, podcasts, you name it. But at the end of the day, how do you know that you are doing it right? How do you know that you are doing it right? Because here's the thing, all of this is great, but the real question is, how do I truly get started? How do I get started? And this isn't a question that I get from beginners. This is from seasoned traders. I get this quite often, right? From seasoned traders, they're asking me, how is it that you can continuously be consistent and profitable? Make this a livelihood, not just like one, the one-offs, big wins, and then even bigger losses, okay? And I have to admit, the number one thing is usually lacking the basics. And when you say the basics, it's really that simple. It's not easy, but when you get the basics down, that is life-changing, right? This is the greatest thing of it all. Once you understand the basics, and that was literally my thing. Remember when I showed you about the car? Everything in the car that you're looking at right now is so automatic for you, right? When you enter that car, you don't even think about it because you've got the basics down. The steering wheel, the shift, the clutch, the brake, where the windshield wipers are, where the directionals are, but they weren't automatic for us, right? We learned the basics, and without knowing the basics when we drive, we can never drive. Imagine, I just want you to go into your creative thinking for just a moment. Imagine somebody gets into your car and they've never been in a car before, and you're telling them, all right, buckle up, it's going to save your life. They don't know what that means. They're like, buckle up, what am I buckling up? What is it that's going to save my life? Because if no one taught them what a seatbelt is, how are they going to know, right? It's that simple. And once you know that seatbelt, once you know how to buckle up, you feel safe. You can drive. There's no problem. And that is going back to the basics. And honestly, this was my own sad truth. Like I mentioned earlier, I spent over $20,000 on my education and trainings. Yet I struggled for years and end up losing so much. I mean, almost $4,000 in 5 minutes because I was constantly following and struggling the others without understanding what was truly going on. And that's when I just quit. I ended up completely quitting. It was just too much for me. I never learned the basics. Every time I asked in the chat rooms or mentors explain something, they treated me as if they treated it as if though I was born with that information. And nobody's born with that information. No one, right? We learn. And I ended up quitting. I literally ended up quitting. I walked away for about 4 months. But the thing is, this is the reality. We are all here because we are bit by the trading bug, and it does not stop itching, right? And do you know why that is? Because deep down inside, we know that we could do this. So when I walked away for 4 months, I was still watching others, and I'm like, you know what? They could do this. I could do this. If they can, so can I. And that is exactly what happened. I decided to come back, and this time what I did was really revolutionary. First of all, I had 3 monitors. I removed 2 of them entirely. I mean, I gave them away. I went back to the basics. I gave away 2 monitors. I had 1 chart. I eliminated all my indicators. I was watching just the bare naked charts of just price action. And then slowly I started to put in indicators. And now I am down to 2 indicators, 1 chart. And I focus on the basics. And when I started to share what I was doing with, friends and then some other people and other traders, people were like, you know what? I want to learn more. And as I began to teach a lot more, I had a student come to me. He's like, Marina, your trading philosophy and the way you teach is very similar to this one guy, Coach John Wooden. And I never heard of Coach John Wooden. So, of course, I looked him up. And this man was revolutionary coach, and legendary coach. And his entire philosophy was, when in doubt, get back to the basics. And I'm talking about this guy was a legendary basketball coach for I think UCLA. They ended up winning 88 national championships, 10 NCAAs. I mean, this guy was amazing. It was all about the basics. And he trained his team players were all A-list players. But every time they started a new season, he would go back to the basics because your ego could really get to you. And what he was doing is how to tie your shoe, how to roll up your sock, how to dribble the ball. These guys were winning championships, but he was always going back to this because if you forget this, if you do not apply the basics, you can sprain your ankle and sit out for the rest of the season, regardless of the amount of NCAAs you have won. And today, I have a very special offer only for the participants that are here right now, because I really, really respect the fact that you guys took your time to be here, and time is our greatest commodity. And I have a special offer just for you guys, my introductory course, Bootcamp for Day Trading. Bootcamp for Day Trading. Guys, you can do this on any apparatus, laptop, desktop, tablets, phones, you name it. And all of this for $97. Okay, I want you guys to go right now. Please take a few seconds, go to your browser and put in http://bootcamp4daytrading.com. If you just put in bootcamp4daytrading.com, Google is being weird. You need to go in to the address and remove the S. Okay, so it has to be HTTP. Trust me on this. So go to bootcamp4daytrading.com. So I want to talk about what we get for $97 because honestly, you don't get much these days, right? As far as other stuff. So $97 is nothing. Okay, you guys like to play golf? Chances are you can't even do for one person $97. Going out to lunch? $97. This is what I'm talking about. Like you are going to get all this education for something that is less than a lunch for two people. So I'm going to break it down for you. Here's what we are getting, what you'll be getting in the $97. You're going to get a simplified day trading package. And on top of that, I know that it could be a little bit intimidating to set up your platform. I have a full platform tutorial to take you through it all so that you guys are just on it right away and you do not have to worry about the platform, and we get right into the fun stuff. Then we're really going to get into the dissection of the markets. Uptrending, downward trending, sideways markets. And once you recognize those magic telltale signs, that is life-changing. I promise you. Reversal patterns and divergences, you will be thanking me always, because to me, this is the holy grail of it all. Honestly, divergences is what has changed my entire trading, and I will show you exactly how to spot them. And once you do, you'll be able to recognize them all. And once we have that taken care of, we can jump in and master the breakout trade, because this is literally the most important trade. And once you're able to recognize it, you're able to do it. And a lot of times there is a fake out breakout, right? Like, and we want to learn how to avoid them. And they are very easily to avoid once you understand what it is, right? I call it the FOBO. Okay, so once you're able to find the FOBO and also recognize the actual breakout, that is when you are going to be profitable and in the green. All right. All this is valued at $1,600. You get all of this included in that one-time price of $97. And before I go any further, let me talk to you about my students. So I have students from all over the world, because that's the cool thing about trading, right? You can do it from all over the world. Here is one of my students, Michelle. Best money I ever spent. I just finished the boot camp. Derek, you're the only mentor that truly checks the work and works with you. Adrian, I am so enjoying the boot camp. Now, I want to go back to an important question, and let me share this with you. Remember, I asked you, how do you know that you are doing it right? So we could do all this and learn all of that, but at the end of the day, how do you actually know if you're putting it in correctly, if you're seeing the market properly? So what I've included in the one-time price is a 1-month mentorship with me. You will have one-on-one mentorship with me for an entire month, 1 month coaching with me, okay? Completely unlimited 1 month time. And this alone is priceless, because having a mentor is literally what can take you to that next level. All right, guys. So on top of that, I also have a chat room where it's me. There are no other moderators. It's me in that, and you will get 1 month of free membership with me as well. All this is valued at $2,600. For you guys, $97. So I want you guys to go here right now. Bootcamp4daytrading.com. Bootcamp4daytrading.com. Remember what I said about the HTTP? Some of you will come out with an S, especially if you're in Google. Google has really been kind of up and down lately. You need to remove the S, and then you are able to open this. All right. So what do we get in this $97? Everything in the course, 30 days one-on-one mentorship with me, and 30 days live chat room. All of this is worth less than one trade. We all know that, right? What is the average trade cost today? What do you guys normally put in? I know that my trades are usually between $200 to $400. It's the average trade. This is the less than the average trade, and you will 10x your return on the investment so that you get 100 of these dinners. But here's the one thing. Because of my mentorship, I'm only able to open up for 25 spots. Only 25 spots are available. And I know for a fact that this is a full house right now. There are so many people in this room right now. And I sell out really fast. So join right now. This is what you guys will see. All right, so I want to show you right here. So we'll go to Bootcamp for Day Trading. You have to go in here and you will see that it goes to, you have to put in maybe also www, and it will take you to here. Okay, so Bootcamp for Day Trading, this is what you'll put in to your browser, bootcampfordaytrading.com. And this is right here, the order form. So as you can see here, one-time payment of $97. Here's everything you will get in that $97. If you want to do a payment plan, I also offer for 2 times $59. But once you get in, immediately you have full access right away. All right. So again, go here, guys, Bootcamp for Day Trading. And you can see here, how does that work? Oh, I'm not even sure to show you. I think it is here. If I copy and paste, interesting. There we go. All right, so if you guys go in bootcampfordaytrading.com, you'll be able to go here right away. All right, so hang on just one second. All right, guys, so here we are. Let me know if there's any other questions or any concerns or anything at all. We could go here right now. You guys could see what is in the order form and any other questions that you have. Please let me know. And I am super happy to be able to work with you guys, to show you. And honestly, once you understand the reversal patterns, those areas and divergences, I know for a fact that it will take you to the next levels. Okay. Yes, Nick. So when we do the chat room, that is when you could also be part of that as well. Absolutely. All right. So hang on just a second here. How do I go in? I think, where can I put in? Oh, here we go. I'm going to put in the address, Bootcamp for Day Trading, actually. Oops, here, a second. And this is the main right here. Okay, here we go. This is the main link right there. And I will also put it in here. You guys could see it. So everybody right there, bootcampfordaytrading.com. And if you guys have any other questions, please let me know. And thank you everybody so much for joining and for taking your time out. And I look forward to seeing you in the course. If you have any other questions, please let me know. And thank you. Oh, hang on a second here. So the mentorship begins only when you are ready, because I know a lot of people, especially with the holidays coming up, they go through the course, and then when you decide, all right, now it's time for the mentorship, you tell me and we work around your schedule, because I totally understand it's about your schedule. A lot of people work or whatever, they have other engagements. You tell me and we work around that for sure. Okay. Thank you, and thanks Anthony for having me, and let me know if there's any other questions.
Thanks, Marina. Love how you simplify everything so anyone could understand and succeed at the art of trading. Great information. Thank you for taking time out of your day to join us today on Traders Corner and for making such a generous offer to our members. Ladies and gentlemen, that was Marina, the Trader Chick Villatoro, and she's put her special offer link in the chat box. You can also find Marina at thetraderchick.com. That's thetraderchick.com. Marina, we hope to have you back on Traders Corner. Thanks again.
Thank you. Bye, everybody.
Marina's great. Thank you so much. At the top of the show, I mentioned we had a great lineup, and our next presenter is no exception. He had a good career going as a telecommunications engineer, but he burned all his bridges and quit a six-figure salary once he saw the potential of making even more money and the opportunities through trading options. He has been an independent trader and fund manager for the past 20 years. He loves to communicate complex topics in simple terms. Here to present creating an income campaign for 2025. Sounds like a great idea. Is Mr. Doc Serverson of 12-Minute Trading. Welcome back to Traders Corner, Doc.
Hey, thank you very much. It is an honor to be here on a Saturday afternoon when everybody should be watching football. Can everybody see my screen okay? Should read campaigning for income in 2025.
I see it, Doc, but maybe some of our members could also let us know as well.
Okay. Well, tell you what, I will get started here and then we'll get you to the next presenter on time. All right, everybody, welcome aboard. And again, my name is Doc Serverson. And if you don't know who I am, I've been around for, gosh, about the last 20 years or so. I've been an individual trader and performance coach since that point. And what I found was when I quit my job and started trading for a living on my own, people started knocking on my door and saying, hey, could you teach me the same thing? And I found that it was a great thing. It was a way for me to be accountable, and it was a way for me to help other people. So I've been doing that since 2005. The current services that I provide are through 12minutetrading.com, as well as I do crypto services through readysetcrypto.com. You may have heard of me at places like Options MD, TheoTrade, Doc's Trading Tools, and the original Options Linebacker. So my specialties are fractal price analysis through multiple timeframes, options and futures strategies, trading mindset, because I had to figure out what was going on in my own head before I was able to be profitable, and ultimately using my engineering background to simplify the complex. I've written a couple of books. Here you can see these are available on Amazon, so Fractal Energy Trading. So if you're interested in multiple time frame trading and a strategy that you can use in any time frame on any asset over any stretch, look at Fractal Energy Trading on Amazon. And if you're having trouble with the space between your ears, as we all do, that is usually the biggest impediment to trading. I wrote a book a while back called Hacking the Holy Grail, available on Amazon as well too. So if you want to see who I am, check me out for cheap on Amazon and give yourself some reading material. Okay, that's who I am. My purpose today, why I'm here to help you guys, is I find a lot of people are stressed out trying to replace or augment their income. I find that most people are not really set up for retirement yet. They somehow, for whatever reason, just don't have the amount of funds to be able to fund their retirement. And with inflation, that's making things worse. And then on top of that, learning how to be an individual trader, it feels like you get some momentum only to lose it and have to start over again, just like Sisyphus rolling that stone up the hill. So this was me 18 years ago, trading like my life depended on it, but having no answer as to what the market was throwing on me. So my purpose today is to share with you something that has lowered my stress level immeasurably and supercharged my returns over the past couple of years. I want to share something different with you today, and I'm going to show you how to do it in the hope that it's going to help you as well. Okay, so that's who I am. That's my purpose today, and let's get into the objective. So everybody is here taking time out of their schedule because they're trying to set themselves up for financial freedom. You know, some people do it as a hobby, but generally everybody's here trying to become financially free. So the problem is here, though, that guys, using yesterday's methods won't work anymore. And a lot of us are still trying to squeeze that square peg into a round hole. So what we're taught from the really since infancy is to grow the pile. The old paradigm of investing was to continue to build your pile of assets and then live off the interest, right? The legacy income solutions from money managers are compound interest, dividends, annuities, and guess what? Those guys are still pushing the same solutions as from 40, 50 years ago. There's one small problem though, inflation. The median net worth of Americans is about 193K, which is just not going to create any meaningful retirement income at 4 to 5%, regardless of which of these legacy income vehicles that we use, interest, dividends, or annuities. Inflation has quickly put a 20% surtax on everything like food, shelter, and transport over the last 3 years. My auto insurance, I just can't believe this, has doubled in 2 years, and I don't have any accidents at all. Clean record, and it's doubled over the last 2 years. So what we need is income. Guys, growing the pile is great, and we should all continue to grow that pile, but income is going to be the big difference for you. Now, there's a couple of different types of income. You can earn passive income, which is really earned without active participation. This is the holy grail of income, interest and dividends and things like that. And there's other ways that we're going to talk about later about that. And that's great, but it usually requires a lot of money to make money on your money, and 193K is not going to do it. So active income requires participation and effort to earn that income. Typically, that's a job or active trading. So the majority of uneducated retirees can only fall back on one solution that they know for earning income, continuing to work by trading their limited time left for money, which is not going to cut it. Welcome to Walmart. So what I would anticipate the solution is that options are the answer. Using options allows us to replace our interest income from the old paradigm. Passive, we can sell longer term options to act like an insurance company where we're selling the risk premium to buyers, or active income. We can look for short-term opportunities to either buy or sell options using the leverage of options to more efficiently use capital. So my assumption here today is at Traders Corner, if you're here at Traders Corner, you know what you're doing. You probably already have some exposure to options. They understand their potential to deliver real-world returns to solve our income gap. So we're going to skip the basics on what options are and what they do. If you need more information about that, you can certainly hunt me down, and I've got some materials for you. But my focus on the next 30 minutes is going to be how do we generate active income using options, and I'll show you exactly how. Okay, so that's our objective. Financial freedom. Using the same old things are not going to work anymore, so we're going to focus on active income. Here's the challenge, though. Remember Sisyphus? Here's him rolling that stone up the hill. How do we create wins without giving them back? So a lot of people will start out by going what I call high probability, right? So we go high probability for strategies. We'll go with a 90% probability of success, or we're selling at 5 or 10 delta, things like that. So in this case, we're making $70 per contract, but we're risking 430 to get that kind of probability. So this is how most people start. Now the numbers here, we really need to go through the numbers. If we place 100 identical trades with an 86% probability of success, over time, if we place enough of these, we're going to win about 86 out of 100. We're going to lose 14 out of 100 with some level of variability for closing in the spread, right? So a win is going to generate $70 minus your commissions. A loss is going to subtract 430 plus your commissions. So if we do the math here, we're not winning if we just let these things expire. So if you play these to expiry, the only winner here in the situation is the broker. So we can fix the high probability. The usual path to fix these trades involves different permutations of, we could take earlier profits, we could define bad exits and take earlier, smaller losses. We can roll the trade. There's various forms of dynamic defenses, which I've taught in the past, like using butterflies and debit spreads. Guys, I've tried these all. There is only one real answer for improving the high probability trade that we all start with. And that is this root fix is the implied move, or the implied volatility in the options needs to be overstated versus what is the realized move. So these are normally seen during times of fear. So when During bear markets like 2022 and during corrections that we've had recently, this is where we have a little bit more risk premium, although there's no guarantee that this is going to lead to success for us. But usually this is the root fix to the problem. The problem is, how do we fix that now? Even with the price moving down the last 4 or 5 days or so, we still have really low implied volatility. On a day-by-day basis, we're still going outside the expected move intraday, but it's not being priced in. So this is really, really frustrating to a lot of iron condor sellers, that even though they're selling the trades that should provide a 90% probability of success, they're not seeing that. They're not even seeing that. So we're not, the market is underpricing options right now. So what do we do with this? We need a different solution. So the challenge here is consistent income. We try going high probability, but it's not working right now. And it really hasn't worked all that well for the last few years, quite honestly. So what we're going to do is we're going to fix these high probability trades with time. We're going to use time spreads. Now, these are a distant cousin of the iron condor. So some of you might be familiar with these, some of you might not. They're simple, but at the same time, they can be a little bit more complex. So a time spread is a strategy where you're selling the front option. Front option means has the least amount of time. And you're buying the back option, which has more time, which could be a few days or a few weeks further out in time. So selling that front option and buying a back term option at some distant point in time. And it creates this sort of triangular, this looks similar to like a butterfly, but it's a little bit different. And what makes it different is that there's more variability to it. You're used to playing iron condors where you set up that iron condor and the expiration graph will not change going forward, no matter what happens. The expiration graph will not change. With a time spread, however, things do change. So we have to be aware of what's going on. This expiration graph can actually shrink or grow, can actually get bigger and can get smaller too. So we have to understand things in more than one dimension. So what's the edge here? This is an inherent edge and this won't go away. So there's so many things that I've seen in trading through the years where somebody's knocking it out of the park, they're killing it, and they're using a specific edge, and it's usually a technical edge. You know, it could be something like, I don't know, a stochastic hook or MACD divergences or something like that. But you know, they say, oh, this is the best thing in the world. This edge is great, and I'm knocking it out of the park. What we find is that markets change in character. And so an edge that was working a year or two ago may not necessarily work now in today's market. This is why trading based on an edge, which is based on technical analysis, sometimes can be suspect. But this is an inherent edge that will never go away. And why is that? This is because if we look at the option value here on the vertical axis and then elapsed time here on the horizontal axis, we know that that option value will exponentially decay. And if this is a front option, maybe one that's going to expire in a day or so, that's going to decay much, much faster right near the end, where if we have a back option over here that's maybe a few weeks out, it's going to decay a little bit, but maybe not that much at all. And so the differential here is where our profits come from, this gap that is created near the expiration of that first option. This is a fundamental edge. This will never disappear. However, you have to take care to keep the edge. There's a few things you have to understand when we trade this. So we're trading the differential between the two. This edge will never go away. So keep this graph in your mind, because 5 years from now, this will still be exactly the same. Won't matter. So how are they different versus an iron condor? So the similarities are you're creating income by selling a wasting asset. So if you're used to that idea of you're selling garbage and you're being paid for it, It's kind of the same thing. It's the same insurance company business plan, right? So we're an insurance company. We're taking risk out of the market. We're being paid for that risk. And it's our job to keep as much of that premium as we can and pay as few claims as possible. Now, the difference is these are generally entered for a debit. So an iron condor, you get a credit, you get money into your account right off the bat, and then you have to, aggressively defend it. The difference is with a debit spread like this, that you're paying up front for the trade. It's really the same thing. Synthetically, it doesn't really make any difference. This is also a long Vega trade. This has nothing to do with that terrible 1970s car, but a long Vega trade means that if implied volatility goes higher, this trade will also rise in value. And the opposite will occur too. If implied volatility crushes on you, this is something that I saw last Tuesday or the previous Tuesday, a week ago, election day. We came into the day on that Tuesday, and all of a sudden, the back options just fell on the floor. They just started bleeding very, very quickly. So understanding how things move is very important with a trade like this. So time spread is therefore better for low volatility markets. What kind of market are we in most of the time? I would say 80% of the time we're in what I call quiet and trending markets. Quiet and trending markets are those where you're stair stepping. You break out, consolidate, break out, consolidate. Generally a positive drift to the market. This is what we typically see most of the time. Quiet and trending, and then we have low implied volatility. Now, when that switches into corrective, like at the beginning of 2022 or in March of 2020, times like that, this is where we have to use different strategies. Maybe a time spread's not going to be the right strategy for that, but 80% of the time, you've got it working for this. So if you want to use a strategy, which you're going to be able to use the majority of the time, and then maybe put it up on the shelf during times of corrective, then this is going to be enormously useful to you going forward over time. So this is how it's different than an iron condor if you're used to that. So again, condors versus time spreads, a high probability iron condor is easier to qualify. So they're easier to place, right? There's not much to it. You're just trying to find an area that's range bound, can create more distance. So you're just trying to trade within a range. And it generally can create a lot more distance than a time spread, an equivalent time spread would be. So it could be a more hands-off trade, but the payoff is slower. What I've done over time myself, personally, I started off with high probability trades that were a very poor reward to risk. And over time, what I've gone to is better reward to risk, higher credits, faster trades. So more close quarters combat, if you will, for my strategies over time. And this is what I mostly see with people. They'll start out with high probability trades because they'll do anything to get that high probability because it gives them confidence. However, this is where you can get clocked when the price starts to really move, especially with low volatility markets. So time spreads, we're playing at the money. We're playing at the money. And if you know anything about options, this is where all the jack is. This is where all the premium is at. And consequently, this is where you can get your fastest decay. Much faster profits. I like that. I like being in, getting my fair share, and then getting the heck out of the market. I'd prefer to be out of the market during most times. I can also be out of the market overnight as well too, when things get squirrely. So again, time spreads are best for low volatility markets, much more appropriate for quiet markets that show the potential to transition to more volatility. So my conclusion for you guys is the time spreads might be a better choice for today's low volatility, high velocity market. Something to think about. Okay, so that's how we can fix high probability trades. There's nothing wrong with high probability trades. It's just that they have an Achilles heel. The Achilles heel is called the black swan, right? Where you get these moves overnight, or you get these strange things that happen where you don't anticipate it. Or maybe, Jerome Powell talking Thursday at 3 p.m. all of a sudden changes his stance and says, hey, we're not really that excited about, we don't feel any need to continue to cut rates at the same pace. Uh-oh, what does that mean? And all of a sudden the black swan kicks in. Where does this come from, right? So high probability trades are great until they no longer are. So my preference these days is to trade them versus time. Okay, so what we've done then is we've created campaigns for them. Now, again, I want to challenge your paradigms right now. So a lot of us are used to just playing trades, almost like keeping score like baseball, right? So we keep score like baseball. What's your win rate? And for most people, that's the most important metric that they have. They care about their win rate like nobody else's, right? So this is how people keep score. We keep score by the win rate. If you know what you're doing, you're looking at things like profit factor, which is the gross wins divided by gross losses, and keeping that above 1.5. So that's always a good thing to do. But, win rate's everything for most people. The downside is that human beings lose interest if we're not receiving constant encouragement and reinforcement. And I know this too, because it's like you can have a great win rate and all of a sudden you lose a couple, you start doubting yourself. You start wondering, well, you start trading not to lose instead of trading to win, which is fatal. You cannot do that. You have to trade to win at all times. You can't be afraid to stick your toes in the water. So if our batting average slips below the Mendoza line, we'll lose interest in that strategy. And this is what I see from students that I've mentored over the years, is that they'll invest into a strategy, right? So they'll pour themselves into a strategy. They'll put money and capital and time and effort into learning things. And so they take a couple of trades. And if they don't immediately work out, they'll kind of walk away from it. And then all of a sudden they'll see over in the corner over here, hey, there's somebody else with a strategy which never loses and it's easy to learn. And so what they do is they go thundering over here en masse, and then they do the same thing all over again, right? They put their capital involved in this. They spend time learning about it. They learn the people, they learn communities, and then finally they put a couple of trades into place. And if they don't immediately work out, all of a sudden you get discouraged until you find this guy over here, which has got this brand new strategy, right? And this one never loses, and this one always makes money. So they go thundering over here, and they go through the same cycle again. So instead of getting 5 years of experience, you get maybe 1 year of experience 5 times. And so unfortunately, you're never really going to achieve mastery doing something like that if you're just constantly running around. And this is what happens when we focus on the win rate. So if we're not immediately getting confidence and confidence for something like that, we want positive feedback. I get it, right? So how can we beat that? How can we do that where it's like the market's going to be in charge? Where there's not much that we can do once we put something at risk. So again, this is damaging because you're investing time and money into learning, trading a strategy. You end up giving up and moving on to something else just because you don't get immediate positive feedback. Can you guys see that this is just a continuous loop looking for the Holy Grail? That's why I wrote that book. So many retail investors never leave this loop. Believe me, I've worked with hundreds of people like this. I was like this at the very beginning of my career until I had to sweep my desk off and say, all right, that's it. Enough of the madness. Let's focus on getting good at one thing with one ticker, one chart, one time frame, one option chain. That's it. And it was when I decided to do that everything clicked into place for me, and I put in my notice 6 months later. So I don't want to waste your time and money. I want you to focus on something. So here's an alternate approach. What if we traded a hedge position that wouldn't lose much no matter what happens? What if we don't really care about the outcome of any one trade? What if we're able to just brush off whether a trade wins or loses? Some are going to work, some are not. We don't know in advance which one's going to work or not work. Nothing that we do will affect the trade working or not working. So we don't have to, it's not us. We didn't fail if the trade doesn't work. So we don't really care about the wins and losses. Our only job is just to show up every day and execute. Doesn't a strategy like this sound easier to trade and manage day to day, especially if it produces positive results? The answer is yes. So this is why we do things called a campaign. We can run a campaign on any strategy as long as the reward to risk is relatively tight. So an example of this might be running a campaign of covered calls. You've done this before, you just didn't call it a campaign, right? So you just keep rolling the short calls until eventually you get called out. This is the wheel strategy, right? So the huge advantage to running a campaign is that you just stay in the campaign until you're profitable. So here's one. This is a very simple example where the shaded is the long option. And then these are the various short options that I sold against that long option for the time spread. So each one of these was a short option that we sold. So I could have stopped this after one day, but I might not have been profitable on that one day. I made $368 in the short option, and I might have lost money on the long option. But what happens is, for that same amount of loss on the long option, all of a sudden I'm adding up 368, 528, 1338. And next thing you know, I look up, a few days later, 3 days later, and I've made 25%. That's a campaign. Let's close it down and let's open up a new one. We've hit our target. We've hit our goal. This is a campaign. You mentally detach from the wins and losses. So that's a campaign trade for the win. So what we do is what's called a daily cash flow campaign. So first of all, we're going to use time spreads, and we're going to use time spreads on the S&P 500 options. We can use the XSP, which is 1/10 the size of the SPX, for smaller accounts if we want. We can use the full SPX if we want. We can even use futures options if you want access to markets overnight. But I like trading the S&P because it's incredibly liquid. It's the most watched chart in the planet, apart from bonds, and it's never at a lack for liquidity. So we're going to do time spreads on the S&P 500 every day. So typically what we're going to do is we're going to buy this long put option, which is going to take a long time to decay. And then every day what we're going to do is we're going to sell tomorrow's put options against it, which are going to decay very, very quickly. And so that long option is going to decay a little bit, but nowhere near as quickly as tomorrow's option will. Makes it very easy to manage. So you're hedged against a black swan in either direction. So it starts off as a delta neutral trade. It's not a perfect hedge, but it's really, really good. So these are zero DTE. The thing I like about, again, the SPX or the XSP is that every day there's another option being printed. There's 5 options a week that we can sell. So we can do this continually. So unlike equity options where you can only do this once a week, or in some cases they're going to 3 times a week, I think eventually every, Mag 7 will be zero DTE as well too. I mean, heck, for that matter, we're going to be trading 7 days a week, and we're going to be trading 24 hours a day, just like the crypto market eventually. So all these things that we talk about here are going to change with time. But zero DTE is great. I mean, they really opened things up a couple of years ago when we started being able to do this. So again, it's a campaign, guys. We're going to run our campaign mechanically. So all we do is we show up every morning and we just simply roll the option. If we have to, we can even move the long option, but generally we're just rolling that short option. Sometimes the target's hit in a couple of days. Sometimes it takes a few weeks to hit the target. We're just taking what the market gives us. We're not sitting here counting wins and losses. We're hedged against a big move. It's very, very simple. So some of the results, and what I've done is I've just grabbed some broker screenshots here, and I've said, show me the results here to date for the SPX and the XSP. So by far, this is my #1 performer across the board. Here's a Tasty Trade account, SPX and XSP. I'm trading 5 different accounts. Actually, yeah, 5 different accounts for this. 5 different accounts. So target is 10 to 20% of long option cost. Average campaign duration is 9 calendar days. Sometimes lately I've been trading just 1 day. I'm trying to close by the end of the day just because there's so much event risk going on right now around the election, around the end of the year, the earnings and everything like that. Market's kind of on pins and needles right now. So we can also choose just to not hold them overnight and just set up a new one tomorrow. So it becomes a 1-day campaign, if you will. So I'm very, very enthusiastic about this campaign. It took me far too long to put this all together. I wish I'd figured this out 20 years ago, but we didn't have all the options available that we do today. So that's a daily cash flow campaign. A couple of examples here. So here is an SPX campaign. This one was fast. This was a couple of days, 2 trading days. Now the cost, when I say the cost here, that is the initial margin. That was basically the cost of this long option right there. So it was 10,620. SPX is a big notional value instrument. So these are big, expensive options. So these are for bigger accounts. But we can also do this with the XSP, as I'll show you. So this one took 2 trading days, and I got 10% return on capital. So I'm saying, okay, you could either do this versus margin, or you could do capital. I mean, if I could, all I would do is just sell the puts. The puts that are sold is the income portion of this. The long option is basically just margin relief. It's just protection. That's it. So I'm counting this as the cost of the trade. So that was a 2-day trade, 10%, pretty simple. And you can see the price was just kind of chunking around and doing not much of anything at that time. Here's a slow one. This one is a little bit different, because the initial look at this is like, oh, well, the price looks to be really flat, but it actually wasn't. What was happening is we started seeing reversal candles every day. So we'd start out at a higher level, and then we'd sell off into the end of the day. And that causes some problems with us. It causes us to tread water during days like this and this. And so basically what I did was I didn't like the way the price was operating. And I said, we're going to suspend this campaign until the price is acting better, which it started to after the election, right? So we took a small profit on this trade, 13 calendar days, not particularly efficient, but I like it when I don't have to lose money, even when the trades are not working out perfectly every day. Okay, so that was a slow campaign. That one took a couple of weeks. And then here's one on the SP or XSP, which was a single day campaign. This is one that we did recently where we're just doing 1 day, like, all right, let's just be flat overnight. Let's let the market freak out overnight and without us being on board. So I like doing that. So we can manage these as 1 day trade if overnight risk is elevated. And we're only going for like 2 to 3% per day. But that adds up, right? If you do that every day, that will definitely add up over time. So in this case, the cost was $55.95 for 5 contracts. Profit was $140, 2.5% return on capital. These are just simple trades. You know, there's no real, there's a little bit of analysis involved with understanding how to do these, and I do go into this a little bit, but generally you just show up and put them on. So let me put everything together for you guys. How can you apply this? How can you start to apply this tomorrow or Monday? Okay, so first of all, I want to impress upon you, you must generate income. Get away from this notion that you can just grow the pile. It's not going to be enough. You can, but that's 1970s thinking. You've got to generate income in addition to growing the pile. So the usual legacy solutions don't work in today's high inflation world. You're going to burn through your principal in no time. Simple interest, dividends, annuities. I mean, they're all useful, but not as useful as other more powerful things to do. High probability. This is not an ideal market for high probability iron condors, unless you're very experienced and have very solid dynamic defensive skills, knowing exactly when to get out of a trade. They're very dangerous right now until the risk premium rises to a lot better distance. So be careful with the high probability stuff, guys. Consider learning more about time spreads. Delta neutral time spreads work great with today's low volatility, high velocity market. It's been my #1 strategy for the last 2 years. Next bubble is campaigning. Learn how to campaign a trade. After having to be right the last 20 years in every trade, of being, freaking out when you lose a trade and then feeling, euphoric when you win a trade, that roller coaster will take its toll on you after a while. So learn to do a campaign where you care, but not that much. It's nice to just not care, but just let it do its thing. Just turn the handle, work the campaign, let the market do its thing, let the numbers work out for you. I can't tell you how much of a difference it makes where I can sleep at night now. And then accelerate. Stop getting ready to get ready to get ready. Everybody's doing that. Everybody's like, well, when this happens, when I do this, when I do that, you've got to take action today. You know what you have to do. This is your time, and there's no time to waste. Find something that works today and execute. Okay, so that's what you can do today to start applying this. So let me give you a summary here. We're just about there. Where do you go from here? So it's my belief that everyone needs to shift to an active income-based focus based on time spreads with today's market. It may be different 6 months from now, but right now, today, it's time spreads. Trade it as a campaign. Take yourself out of the critical path. Ditch the old financial income paradigm that no longer works. If somebody tries to sell you annuities, get out of here. You might be wondering how you can get started on your own path. So I've showed you everything that you could do right now. So it's great to feel motivated by this, but you might not have the map to get there. So how can you get started today? Consider joining me. I've got 2 ways that I can help depending on your time, commitment, and educational budget. So let me walk you through the first option, which is the masterclass. Masterclass is, like, the worst thing about SiriusXM is that nobody wants to join a subscription right now because they're afraid that they'll never be able to get out of it. Trust me, we're not like that. So a lot of people will join the masterclass just because they want to dip their toe in the water and say, hey, is this something I can do? Is this something I could understand? Can I even do this thing? So if you go to 12minutetrading.com/courses, so let's see, I'm going to type this into 12-minute trading courses. There we go. And look for the campaign cash flow masterclass. And you'll see it's $99, but if you want today, if you use coupon code campaign79, you can get it for $79. So this is a 10 module course. It's easy to work through and understand. You'll get through it by this weekend. You may not ever understand everything that's in there the first time through. You might want to go through it a couple of times and ask me questions, right? So if you don't get something, send me an email, send me a note, and I'll work with you till you understand it. So it's a simple course. It's not that expensive. It's not going to take you months and months to figure this out. It's a very simple concept that we're going to teach you how to do it in a very simple manner. That's the campaign masterclass. Again, 12minutetrading.com/courses, and look for the campaign cash flow masterclass. And then use the coupon code campaign79. to get your discount. Okay, if you want to attain skill and profits the fastest way, then join me in the live trading room. So what I do is I run a live trading room every day from 9:20 to 10:05 Eastern time. So we run a YouTube live stream where I'm on board with everybody, doing live video, walking you through exactly what I see happening with the opening half hour of the market, and putting trades on right then and there. So we put trades on, we send out the alerts right in the room. You're seeing exactly what I'm entering, what I'm exiting, all that stuff. So again, that's 179 or 197, but if you use the coupon code save 50, you can get in for $147 a month. So maybe it's something you want to just. So a lot of people, what they do is they'll get the master class and they'll go through the master class and they say, okay, I get it, but I want to look over your shoulder. Then maybe sign up for a month or two into the live trading room so they can follow along. And then once they've got it, they don't have to. Sometimes they stick around though, because they just enjoy the company. So again, that's 12minutetrading.com/services and look for the live daily trading room with Doc Severson. And that's me. So again, live trading room meets 9:20 to 10:05 Eastern time. We cover everything, probably everything but politics. That's about the only thing I try to steer away from these days. But charting, zero DTE, intraday setups, fractal energy trading, everything. Mental psychology of trading. Occasionally we have good jokes in there. And it's a great room with a lot of experienced traders in it as well too. Okay. So guys, that is my presentation. If you have any questions, you're welcome to reach out to me, support@12minutetrading.com. And again, my name is Doc, and I have finished the content for today. Hopefully you learned something from that. If you have any questions, I've got a couple of minutes here before Trader's Corner is going to move over to the next guy.
Hey, Doc, I did see some questions. Did you want me to read them to you?
Yeah, I'm not seeing them.
Yeah. Through your course, can someone completely learn options and the strategies you teach? That was asked by James.
We have a lot of, not in this course per se, in the master class. The master class takes you from like second base to sliding home. So you need to get to first base, first of all. And we do have some good archive materials. We do have some courses that I've created to help you get from, the batter's box up to second base. And that's part of our live trading room. So
Okay,
also, I think it's important for somebody that's just learning to get access to somebody where you can ask questions too.
Yeah, I think that's important as well. And that also vibes well with discipline too, by showing up every day. Joe Javino, or sorry, I didn't mean to mention your last name there, Joe. Are you trading stocks or futures?
We are trading index options for the most part. We also do some with stocks. I have done futures options, but I don't trade just straight directional futures intraday. So
And
that's
Andrew,
more of a day trading thing.
Okay, you might have just covered this, but Andrew asked, do you day trade futures in the trading room?
No, we do not. No, occasionally we will enter some what we call zero DTE options in the room, which have a lifespan of basically 6 hours after we enter them. But that's about as short term as we did. We don't do any live futures day trading in the room.
I have a question. Early on, you mentioned by teaching others, by getting out there, you're held more accountable. What do you mean by that?
Well, because I think it's important for people. I think everybody needs to be accountable for what they do. This profession is the ultimate accountability. The numbers count. And when you put the hardest thing to do in this profession is to actually make the decisions when you're supposed to. it's very, very easy for most retail traders to just, hey, I'm going to let that one slide, or I'm just going to take that huge loss because I didn't follow my rules. But when I have to follow my rules in front of, 50 people, it makes a huge difference. And then it shows them how to do it.
Yeah, that makes a lot of sense. And it makes you a better trader.
Absolutely. Yeah, it really made a huge difference for me. If you want to really learn something, teach it to other people.
That makes a lot of sense. Thank you, Doc. That was all the questions we had today.
Okay, thank you very much for inviting me here to Traders Corner.
Yeah, and if anyone else has any further questions, please email Doc and reach out to him. Reach out to everyone, please do. They get full advantage. All right, thank you, Doc, for that great information. It's incredible how fast time goes by, and having a plan for 2025 makes a lot of sense. Ladies and gentlemen, if you are interested in having a solid income campaign for 2025, then Doc Serverson has a solution for you trading options. We've placed his special offer in the chat box. Doc, thanks again for joining us today on Traders Corner. Please come back and see us soon.
Thanks, everybody. Bye now.
Thank you. Well, ladies and gentlemen, that brings us to our next presentation of the day. He has over 20 years of experience in institutional asset management, including large investment banks in the USA. He has architected and built advanced financial software for both retail and institutional investment management systems, which I think we're probably going to get a demo of today. His focus now is on building breakthrough trading algorithms for retail day trading and swing trading markets. Here to present liquidity and level 2 order flow trading strategies is Mr. Rob Premkumar of BuySide Global. Welcome back to Traders Corner, Rob.
Thank you so much. Thank you for the great introduction. Thank you for everyone joining us today. On a weekend, people focused on training, trying to learn different strategies from different traders. It's awesome to join you here. Now, we have 40 minutes, so I have a lot of information to cover. Like you guys know, any questions in there while I'm presenting, please feel free to drop all the questions. I'll try to answer as much as I can while presentation, but for sure, we'll get to it in the end. Let's get started. I want to start with in terms of, before we talk about any kind of trading, I want you to understand, aware about the risks involved in trading, because trading is not for everyone. Please go through all the SEC regulations, CFTC rule 4.41. If you want to know more about risks, please visit buysideglobal.com/disclaimer. Within this next 45 minutes, my goal is to, as much as possible, educate in terms of what is liquidity. Liquidity applies to both in terms of long-term investing or a swing trading or day trading. But let's talk about liquidity just particularly focused on day trading itself, because liquidity is a wide concept. We don't want to get into depth that is not in our tangent. Let's understand what is liquidity, how it controls the market, because even though the topic is trying to show you in terms of what are the strategies you can trade, but the problem is, if you don't know what is liquidity, if you don't know how it controls the market, how the price moves based on the liquidity, the foundations of little bit of basics, you will never be able to grasp the trading, how the trading works, how you should enter, why you should enter, how it's going to work. So that's why my goal is to give you today quick rundown on the very fundamentals to understand the power of liquidity, and also I'm going to show you some of the best setups how you can trade these liquidities as well. Okay, so again, what is liquidity, how it controls the market, what is liquidity sweep, how to detect one, how to trade one. Of course, we're going to finish with the best way you can start with the liquidity trading. Okay, to start with, if you go to Google and then try to find what is liquidity, there's a lot of definitions you can find. This is in terms of technicality. If you go to Investopedia or Wikipedia, this is what they will say in terms of what is liquidity. Liquidity is a market efficiency in which asset can be sold, bought without affecting the asset price. Very technical, but not very clear. For me, the way I see liquidity is, if you wanted to buy something or sell something, okay, for example, like if you wanted to sell your car, if there are a lot of buyers for the particular model, particular car, That means that asset that you have is very liquid. That means you can convert that asset into best price, best cost, because there's a lot of interest, a lot of buys in the market. That is liquid. So liquidity is a concept applies to any kind of asset. When it comes to stock, why it applies? Because that's what they say, market efficiency. Why? Anytime if you wanted to buy or sell a particular asset, financial asset, in terms of stocks, bonds, or like futures, options, everything, if you wanted to sell or buy, you should be able to do it very fast and the best price. Okay, so if you look at if you're a futures trader, there's a lot of futures, right? I think if you look at the futures right now, ES, NQ, but do you know there are other futures in the market, particularly if you look at the what is it, titanium, all the other futures as well, there are some futures that are so much almost non-existent of the liquidity. If you wanted to buy something, you have to buy it much different than what is the market price right now. So the way I would explain is like all the aggressive and passive orders in terms of that's going into the market, how fast, how many participants in the market, how fast we can enter and exit, that's create the liquidity. So being that context, if you want to know what is in-day trading, every time you place an order, aggressive order, market orders, or passive limit orders, everything creates a liquidity. That means when you sell something, you are creating a liquidity for the people who wanted to buy. If you are buying something, that means you are creating liquidity for the sellers. Okay, liquidity controls the market because there are more participants, there are more buyers and sellers. It creates a lot of liquidity, and that means it brings the smoothness, efficiency in the market. Okay, how is liquidity created? Like I said, every time you trade, you and me, like all the traders come together. Every time you place a trade, you are creating a liquidity for the other party. If you buy, you're creating sell liquidity for the other party, counterparty. Okay, but in general, the largest liquidity is created by, if you look at the market and the volumes, it's not like 1 or 2 contracts, because you and I trade what, 1, 2, or 10 maximum, right? Those contracts. But the market trades at like what, thousands or like millions every single day. But those are from the high institution as well as algorithmic traders or market makers, big players in the market. So that's why it's always good to trade in the instrument that have a higher liquidity, higher frequency, those things as well. Okay, that's why we always small players, you and I cannot control the market. We just play with the market, with direction we go. But the large institutions, the largest investment banks or money markets or traders, algorithms, they create liquidity, meaning they sell and buy the huge volume. Every time they place a huge volume, that creates a liquidity for you to execute your trades. That's why they control the liquidity. It's their game they are playing. For us, it's most important to understand how the game is being played. Otherwise, you will get played. That's the most important part. Because so in this context, I wanted to stress only one point here. When you place an order, like let's say if you're placing like buy order, sell order, your orders can be seen to visible to everybody. Okay, what do I mean by that? When you place when you enter the trade, right? So what do you have? Most likely you have the stop loss orders below. Let's say we're entering a long, stop loss orders below, long targets. Even one market order went through, but the limit orders, the targets and stops is not executed yet because it's a limit order. That means it goes to exchange, sit there until price touches that level. So until the price touches that level, it's passively sitting in the exchange. Once it goes to exchange, everybody can see it. Everybody can see it. Okay, that's what liquidity means. That means there is a order sitting at that price that can execute if it price goes that level. Okay, so but you only way you can see that is you need to look at the level 2 data. So what is level 2 data? Level 2 data is nothing but by default, most of you, I don't know how many of you have level 2 data feed right here. How many of you have level 2 data access? Or how many of you know what is level 2, first of all? Because most of the traders don't even know what is level 2. They don't even have access level 2 because they don't know how to use it. So let's talk about what is level 2, level 1 and level 2 first. If you open the chart, if you can see historical price movement and current best bid and then the current best ask, and then if you open the level 2 screen, it's all blank. That means you have only level 1. That means you can see only historical price, how it moved, and the current best buy and best bid. That's it. That's all you can see. But if you subscribe to level 2, doesn't matter. You are getting the data feed from the DX feed or a Rhythmic or a Ninja Trader, doesn't matter. If you upgrade your data feed to level 2, you will be able to see a lot more in terms of each and every price level. Each and every price level, what are the what is the number of sellers are there? How many contracts are selling at the each price? We can see those. This is real liquidity. You wanted to know how much selling pressure, how much buying pressure in the market. You can see through DOM to see at each price level, or you can see at the raw data level 2 screen. It can tell you what is each spread, what is the depth, what is the size. It can tell you everything. Okay, so first of all, these are the most important information that you need to look at. Every time you place an limit order like a targets or a stop, it goes here. Everybody can see it here, accumulated, consolidated way. Okay. But I wanted to also understand in terms of what the screens is. Like I said, the yellow highlighted is a current price, and then the immediate number, best bid, best ask. These are the best bid and best ask. You can see in level 1 also, because that's the immediate price that you're gonna get. But in level 2, you're gonna get all the bids. In the screen, I have like top 10 bids and top 10 asks, but you can get a lot more. Okay, but the question is most important you need to ask is how it really matters for trading. Why should I worry about level 2? Okay, the reason is that, like I told you, liquidity controls the market. The more liquidity, that means the more pressure in the sell side or buy side. To demonstrate that, let me show you two different example scenarios where you can see right here the prices are here very thin, 11, 13, 9, 12. But if it is less liquidity in the market, there are less sellers right now compared to a lot of sellers, 289, 288, 295. How the price will move? Okay, that's what I want you to understand. In this case, let's see in terms of when. Let's assume there is one large market buy order comes to exchange. What will happen? Exchange will see that, okay, somebody want to buy 500 contracts of buy. That means they will take the first level from this price, first and the second 13 from this price, 9 from here, 12 from here, until they're able to grab 500 contracts. They will keep on taking those contracts. So once they are finished taking 500 contracts, price already moved 10 ticks because they need to grab one by one. But on the contrast, if you have huge liquidity, if you buy same thing, if you have to the finder consume 285, 289, how many more required? Only 211. They'll grab from here 211. That means the price moves only 1 tick compared to 10 ticks. What is the difference? Same market order, same 500, 500. What is the difference here? The difference is the market liquidity, the level 2 level liquidity is very thin. It's not able to supply the like a demand what market is asking for. Price moves very fast. That is why I want you to watch, learn how the liquidity controls the market, at what price point, at what highest volumes is there. This way you will be able to see how fast the market is going to move up or down. Okay, if you can see, for example, like there's very thin lines. There are very thin volume on the bids and a lot of volume on the ask. What does that mean? Type something, because I want to know if you guys are awake and listening. What's going to happen? Because there's a lot of selling pressure. Market is very hard to go up. It's easy to go down. That's what it literally means. Okay, so I want you to understand those things. At the same time, not all the numbers matters. We need to look at only the most higher quantity, higher concentrated liquidity. That's what we call it as liquidity zones. Liquidity zones where the particular price point where there's a lot of buyers or a lot of sellers are concentrated, they are holding that price ground. Okay, that's what power of order flow coming into the market. Moment you see it, you should know how to use it. Okay, so that's why we created liquidity zones indicator. What it does is it tries to analyze all the information and then trying to map the information on the chart. You can see it on the chart, you can trade it. There are a lot of other products in the market as well, like a book map. How many of you heard book map? There are book map like a market depth. The problem is that both are visual tools of what is the liquidity. They just color code it and show every single order flow. So every single order flow. Do you remember something I said before earlier? Not every liquidity matters. Not every number matters. So that's why we don't show the market depth as it is. We take the market depth of all the level 2 data, and then we're going to create something called show only the strongest liquidity zones. That's why you can see these numbers. If you look at those screen right now, some numbers we don't even map. Some numbers we don't even map. We filter those out. Why? We pick up only the most important liquidity, only those will map it. The reason is that you need to know only the tradable zones that you can rely on. Okay, so one of the question I have here, what about spoofers? That's exactly, how are you going to find the spoofers? I'm going to show you. That's called liquidity sweeps. I'm going to show you how you can exactly find those spookers, or like a liquidity grabs or liquidity sweeps, stop hunters, those things. It's only possible if you know how to analyze and look at the liquidity. Okay, so let's move on. So I want to show you how the chart look like without indicator. I want you to focus only on the red printed lines and green printed lines. Why? These are the confirmed liquidity. Red means strongest sell side liquidity. Green means strongest buy side liquidity. Okay, so the way you should read the market when here market open right here 8:30. I'm in Central Time Chicago. That means this is my market open. You can see market. This is the opening range. Market was open like this. Once it breaks out, it breaks out. So that's why these levels are used also as the greatest high accuracy supplies or demands also. Okay, so we're going to talk about this how to trade it, but I want you to see how the levels is control the market throughout the day, and every time it's created, how it's hold the price, and every time it breaks out really, it goes to the next time there is a high liquidity. Okay, the price is controlled in terms of liquidity. Think about like a ladder. Think like a ladder. Every time you step on it, next stop is the next ladder, step down ladder. Think like these liquidity zones are the ladders to go up or come down, getting control where you can stand down. Okay, there you can stand down. Okay, so to start with, let's talk about quickly about one of the most there are 3 strategies, but I'm going to show you the best one first, because when in terms of, I think we had one amazing presenter earlier today talk about breakout from supply and demand. Although the same rule applies in terms of you can apply the breakout with liquidity zones as well. Okay, this is one of the most high probability setup that you can trade in level 2. In this previous screen, we talked about. I'm going fast because I'm just wanted to squeeze everything with the short time. If you guys are okay with the speed I'm going, please let me know. Any questions in there? But let me carry on. So, like in the previous screen, we talked about in terms of the sell side liquidity marked in red and then buy side liquidity marked in green. The price really, most of the time, when we see any same consolidation, how many of you know market structure? Market structure in the sense price don't move in the straight line. Price always move, consolidate, move, consolidate, move, consolidate, move, consolidate. It's such change in the market structures. Anytime you see the consolidations in the market, I want you to focus on, okay, market is consolidating. What is the buy side liquidity boundary, bottom, and sell side liquidity top? I want you to notice those boundaries. Why? that is going to give you the greatest opportunity to enter the trade, the breakouts. Okay, so when the price breaks out and then come back, the liquidity, sell side liquidity becomes a buy side liquidity. The green, same price range, the red was broken through and then price pulled back to create the buy side liquidity. That is an excellent place for you to enter. That means this is where you can enter. Okay, so this is what we call as buyers and sellers control swap, meaning sellers were here, sellers liquidity was here, broken out, came back, sellers same price, sellers became the buyers. This is where price is going to hold next. That means you can enter right here. Okay, so this is our, you can find this particular setup again and again every single day on ES and in instrument, as long as there is a good liquidity in the market. Okay, good liquidity in the market. So this is our prime setup. The way you can see is just to look at those exact swap. Look for red becomes green, green becomes red. When red becomes green, long trade setup. When the green becomes red, it's a short trade setup. Okay. So I'll show you some screens. I will show you some screens in terms of those examples as well. So this is where you should really enter on a pullback and to the same level, same price level. You should be entering the trade. Okay. So let's look at a quick sample of, we attached the indicator BSG liquidity zones. You can see right here BSG liquidity zones. How many of you can spot out? I just told you some setups right there. How many of you can spot the entries right here on the chart? If you can see, just tell me the time. Like if it is here, say 9:30. How many of you can say where are all the opportunities you can see in the chart? What I'm showing right here. Anyone? Okay, so let's look at. So for me, the first one is right here. If you can see, the sellers was I wanted to see also the bad ones. When I say bad ones, I want to look at even here the broken out here, even the price is broken down. But do you see any sell side liquidity created? No. Broken here. Do you see any red zone created? No. But look at here, when the sell side liquidity broken, the green zone started printing. Buyers are stepping up. Okay, and then where else you can see it? Where else you can see it? So what's the next place? Right here, price moved down, trying to go up when the sellers became the buyers. Next, right there, right there, right there. You can see these kind of setups every single day. Now you can see the sellers became buyers for a long trade, sellers became buyers, 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 long trade. Look at the reverse. Price reversing now on the reversal mode. Buy side liquidity was broken, became sellers. So look at exactly where you can enter the trade. Okay. Yes, James, 12:15 exactly. So those are the opportunities you can see on every single day when the market is moving as a breakout trades. Okay. So you might ask, I know the question is, what if the market is not moving, like a choppy days? Should I stop trading? There is a liquidity for sure, no matter what. That's one thing I want to point out. Liquidity is there when the market is moving. Liquidity is there when the market is choppy every single day. The breakout is for the market on a trending day. Market is having large volatile. It's moving up or down, doesn't matter. You wanted to find the perfect entries. That's a breakout setup. Okay, so on the same thing, on the same context, I want to show you one more trade setup. But setup one was high probability, very high probability setup. I want to show you second high probability. This will be like same kind of setup. Only difference is you don't have to wait for the green. Okay, so like I said, what is the number one setup? Price breaks out, and then goes through, and then on a pullback you will see the buyer's liquidity, sell side become buy side. This is setup one, right? So in that case, what is the next setup? Next setup is just the difference of sometimes liquidity won't be created as strong as we thought, but you can still enter the trade as long as the price breakout and pull back to the same price level, exact same price level where the price was broken out. Okay, so look at here. Let me walk you through. Let's say the price is breaking out right now. Don't enter right now, because every breakout will have a pullback most of the time. If you don't pull back, don't enter, because there's a reason. I don't want to get into that particular topic that will cover in the training session, part of the product. So don't enter now. It's pulling back. Don't enter yet, because it's a falling knife. It can go back into the range or something, because I wanted you to see price come back, pull back to exactly plus or minus very close to that level where we broke out. Just like this, price broke out, pull back. Now the reversal is happening exactly at the same level, price level. Then you can enter. Are you guys with me so far? Anyone have any questions? I get them so far. All right, so let me look at some examples. I marked down here the same way. I want you to watch out how the price moves, broken out, came back to the exact same place, and then reverses. This is the setup I'm talking about. Look at this. There's a lot of liquidity. Price broke out, came back. Do you see this? Came back. Price liquidity and came back. The same liquidity area. Okay. This is another setup. You can see even the strong next liquidity, price went through, came back, and the same place is going up. Even here, this liquidity is the strongest since the day. It was active since the morning. Price went there, took the liquidity, came back to same level before it makes the next move. This is the behavior. You can see how it can really, because most of the time you don't know how to, because how many of you are supply and demand traders? How many of you are supply and demand traders? You know what is the biggest struggle? Supply and demand is the most powerful trading strategy. I use it day in, day out. You know what is the biggest struggle in supply and demand? To find the exact zones, which zone you wanted to draw the supply zone, which zone you want to draw demand zone, those things, right? If we get that wrong, breakout doesn't work, isn't it? So in this case, you don't have to, because we are not drawing those lines, we're not drawing the zones. We are just picking the zones, strongest zones from the market order for liquidity. These are nothing but, if you open level 2, you will see the large numbers in the price level, exactly like 53.30. If you open level 2 DOM, you'll see 53.30. There's a lot of high numbers sitting there. The indicator is just showing you, you don't have to draw. All you have to just learn how to find the breakout, how to find the pullback, and then enter. As simple as that you can. Everything else, indicator and level 2 does it for you. All right, so now that brings up the very good topic in terms of liquidity sweeps. Okay, let me erase this. Liquidity sweeps. What is liquidity sweeps? How many of you know what is liquidity sweeps? Tell me in one liner, how many of you know what is a liquidity sweep? Okay, liquidity sweep is nothing but price goes to the highest liquidity zone, takes all the liquidity, and then return back. The purpose of price goes there is just to take the liquidity and then reverse. That's it. That means price, how I can explain is that price pushed only to grab the pending limit orders. They go there to take out, absorb all the liquidity and then reverse back. This is called liquidity sweep. Okay, so what are the best other way to find out? Immediate reversal. You need to see, to make sure, you need to see it's a immediate reversal after the liquidity was gone, like reversal candles. Okay, mostly just a wick. You can see it's a wick because it goes there, grabs, and come back immediately. You'll see the liquidity in the wick in the chart. Okay, one of the, yes, it's Charlie. It's yes, stop hunt. I'm going to give you some examples. It is a stop hunt. Okay, this is, wow, this is the only way you can find the stop hunts. Okay, this is the only way you can find the stop hunts. Okay, so now let me show you some of the best examples of liquidity sweep and which is not. In this case, first example, you can see the price goes there and then takes the liquidity, grabs all the stops and come back, and the price come back here and then takes liquidity. When I say liquidity, don't forget this all your stops or our stops or other trader stops. They just wanted to go grab it and then move to the other way. So this is why I want you to see which price point there are a lot of limit orders. There are a lot of, I won't call it as only stop loss. It's both targets as well as it's limit orders. I would say it's limit orders. It could be stops, it could be targets. Doesn't really matter. market makers, institutions want to grab the limit orders. That's the purpose. Whether it's a stops or targets, they doesn't care. Anytime they see high liquidity, they want to take it because that's what they want. They are continuous stop hunters and then liquidity hunters because they trade with high volume. They want high volumes to execute. Okay. While the difference between the good liquidity sweep and bad liquidity sweep is that price goes there very close, don't even touch it and reverse. People think, oh, the sellers are pushing it, I'm going to enter short. If you enter short, you will be smoked. Tell me why. Who can tell me why? The reason is that after this, price is going to go back again, take the liquidity, and then come back. So wait till the liquidity sweep is happening. Even here, look at this. Price goes there, didn't even touch the liquidity, goes back. A lot of traders enter the long trade here. What will happen? The price will come back again, take the liquidity now, and then go back. This is exactly the stop point. Please don't take it until the sweep is happening. Okay. So now you understand what is liquidity sweep. How can you trade it? That's an important question. Okay. So let me show you. Best way to show you is a choppy day in terms of how the market behave. I showed you the trending day, isn't it? Now look at market goes on a sideways market, right? Market goes on a sideways. Look at the whole time. Look at sell side liquidity, and then buy side liquidity. That means market is just ping ponging between those liquidities. That's what it does, ping ponging between those liquidities. So being that said, how can you trade? Every time there is a market choppiness, typically on Fridays, you can see on Fridays the market is just choppy. It goes in the range. But I want you to watch all the liquidity sweeps. Usually I'll stop the screen and then ask you to pinpoint the liquidity sweeps, but I don't have the time right now. I have only 50 minutes left. So let me go through. Look at this: liquidity sweep, liquidity sweep, liquidity sweep, liquidity sweep, liquidity sweep, liquidity sweep, liquidity sweep. You can see the market is like a ping ponging between those levels. Okay, so this is why exactly price liquidity controls the market. So that means on a choppier day, you can just you can scalp between the points, as long as you know exactly where the liquidity grabs are happening on the choppiest day. Okay, this is a best example even on a choppier day. If you know how the market is like going to the liquidity and then reversing back the market, you know exactly why it's reversing over there. Okay, let's look at okay, this is what we showed you. Even on here, I want you to not only the actual like a choppiness, I want you to also look at the setups happening in between. Opening range, market opened the opening range, broke out. What is this? Our setup one, sellers became buyers, right? And then what happened? Throughout the session, throughout the result, this is a Friday's chart actually. Throughout the session, look at the market, grab liquidity, come back, grab liquidity, come back, grab liquidity, come back. Market was just ping-ponging between those. And then what? While the market is ping-pong, there's huge liquidity was being created in the below. What the market did, went back down, took the liquidity, and then go back to the range again. Do you see that? Who would have predicted this happen? But we can see it because even though market is ping-ponging in this range, there's a lot of buyers limit orders sitting there at one concentrated place. So institution can see it, you can see it, I can see it. What's going to happen next? They went there, grabbed those liquidity, go back into the range. Okay. So this is why you need to know the strongest liquidity in the market, level 2 data in the market, and then you will see the patterns repeat by itself, breakouts, and then like a breakout and retest, or breakout and swap, and then liquidity sweeps, and then like keep on continue. Okay. So this is on a trending day. So on a trending day, we talked about the how the liquidity sweep happening on the choppiest day. Now let's look at how the liquidity sweep on the trending day. Even the market is trending this side, but I want you to the best way to enter the market is on trending day. Every time the market come back to liquidity, this is the liquidity, come back to liquidity. Every time the market come back to liquidity, that is where you can enter the trade. Every time the market, if the market is going up, you need to wait till the price come closer to the buy side liquidity and keep your stops. Okay, here's important point, maybe I didn't mention to you. Every time I want you to keep the stops here. Price moves, keep the stop, keep the stop. Hide your stop behind the liquidity. Why? We have seen time and time again, price goes there, liquidity sweep and goes back. That means hide your stop behind the liquidity. You'll have a much better probability of success there, there right now. Okay, so and also if you look at how when the market started here, you can see there's already in the morning itself the liquid was created in this price level. Market went to the liquidity, slows down on the liquidity. Can you notice when did the price really reversed? After taking out all the liquidity on the it's created since the morning. Since the morning, liquid was there. As the price goes there, liquidity strength is gaining the strength, but price didn't stop there. It took all the liquidity and then reverse. This is why you need to be focused on what is liquid in the market. Okay, and then again thing happens. Sell side liquidity become buy side liquidity, market moves. Those patterns happens again and again. Okay, so that brings up the last question in terms of, is the market manipulated by large players? Of course, yes, we saw that right now. Does the institution hunt my stops? They hunt. Their goal is not to hunt your stops. I'll tell you this way. I have talked to a lot of traders. Their goal is not to hunt your stop or steal your stop. No, their goal as a trader to find the best possible to execute their large quantity. So when they see one particular price point, lot of stops or like a lot of stops accumulated, they want to go there, grab that liquidity, and then enter the trade. That's why their goal is not to hunt your stops. Their goal is to hunt the liquidity. So when you provide liquidity, they're going to take it. So that's why I say keep your stop below the liquidity level. They will go to liquidity and then reverse. So you'll be safe. Okay, how can I avoid? That's what I'm telling you. So make sure your stop is always hiding behind the liquidity zones. Then prices will come back to that liquidity level and then reverse. You'll be fine. Okay, that you can test it again and again every single day. Okay, and what's next? What is induced liquidity? So to explain that part, I have one last chart. Actually, I have one last chart. So what is induced liquidity? So most of the time you can see what do you say? Okay, let me draw that for you actually. So let's say the price is consolidating. This is always induced. That means a lot of traders see this consolidation and then price goes there and then goes up. They think, oh, this is the time to enter. A lot of people try to enter, place the stop right there. What will they do? This is induced. They will try to create this kind of move so that give the impression that it's going to break out. A lot of players enter here and then they'll come back, grab the liquidity and then move up. That's what they call it as institutions manipulate, make you to enter the trade and then make you to enter the trade, all the traders, and then try to create the liquidity and then grab it and then move. Okay, so to show you example here, price moves down. Okay, price moves down. Look at this. Since price is moving down, it breakout here, price moves down. Once they saw liquidity, they goes grab liquidity and come back. Okay, and then price moves down. A lot of players are entering the trade here. What happened? They go and grab the liquidity and come back. Okay, they go and grab the liquidity and still the market is moving down. Okay, so that's why it's called induced market always. Being that said, the best way to enter the trade is if the market, you are going to take the short trade, right? Market is going sideways. If you are going to enter the short trade, don't take any place. Wait till at least liquidity sweep is happening. That means market is manipulation already complete. Once the manipulation is complete, you can enter. Even here, look at the manipulation is complete, you can enter. You can see that again and again, even in the market downside also, liquidity happens on the sell side. That means you can enter. Don't take the liquidity sweeps on the buy side because market is trending down. Trending down means you need to enter short. That means you need to take the sell side liquidity zone. When the market is trending up, you need to take the liquidity sweeps on the buy side. That's different story. So that's why best place to enter is wait for liquidity sweeps on the opposite side of the direction. Okay, opposite side of the direction. So I have marked down the liquidity sweeps here every time on these markets. Look at this. Look at this. All these liquidity sweeps, perfect liquidity sweeps of, and also even in the direction of market, even the direction of market is going down. Even after the liquidity sweep, look at the move. After liquidity sweep, look at the move. Okay, I want you to see both sides is effective most of the time. Okay, liquidity sweeps moves up. Okay, liquidity sweep moving up, liquidity sweep moving up, and then grab the liquidity there, moving down. This is like a market is ping pong between the liquidity zone to liquidity zone, liquidity zone. That's the how market is not manipulated. Market is efficiently managed by the market makers. So I won't call it as market manipulation, everything. That's how the market is. This time frame is 1 minute time frame, charger, yes. What I have, because I want to see the lowest time frame where I can see the liquidity sooner. So the chart is at 1 minute time frame right now. I marked down all the liquidity sweeps here. Also, I want to show you some of the failed liquidity zones. Liquidity, but still went up, because I should not only show the good ones, I should also show you them bad ones also. Okay. So all the green ones walked here, sometimes in the direction. You can see this as well. Okay, so that's why in terms of, if you want to trade like institutional trader, you need to know those strategies used by institutional traders, how big players play, how they use liquidity. There are no institutional traders trade without looking at order flow, but there are 99% of the retail traders trade without looking at order flow. That is a big difference between the regular retail trader and the institution. Institutions, high frequency algorithms, everything. The Goldman Sachs, right? I mean, they have high frequency algorithm for so long. All those advanced algorithms trade just by looking at it, analyzing the order flow, level 2 order flow. There is something called level 3, which you and I can't afford it. So they look at the most highest quality order flow data to analyze the trades. That's why I want you to, if you want to beat their game, you need to learn how institutional operation works, how the market structure works, how the liquidity zones work, how the stops are hunted, how the targets are hunted. And also, if we can't beat the institutional traders, but if we can if we can learn how the moves, how the structure works, we can join their game, be the player, and then make sure we don't get played by them. That's the most important part. Okay, so that brings up close to the presentation. If you have any question, please type right now. I think I have a couple more minutes there, but the product, what I'm talking about here is BSG liquidity zones indicator. If you wanted to use this indicator, you need to have level 2 data subscription, because this indicator is nothing but taking all the level 2 data, passing through our algorithm, filter out all the noise. It's not going to show you the market depth. It's going to filter out everything, go show you only the level 2 based liquidity zones on the chart, only for Ninja Trader platform. Our product work only on Ninja Trader platform. Okay, so part of the offer what we have is, we usually have the annual subscription at $595, but for now we are going to have the monthly subscription. Usually it's $199 down for the first month, because it includes all the course material, support, and everything. But after that, it's $17 per month. Okay, so $17 per month monthly subscription. But for today and tomorrow, part of the webinar presentation, you're going to get 70% off on the first month. Use the discount code ORDERFLOW. If you have the phone, pull out your phone, take a screenshot, because this link and discount code will not be in the website or email anywhere. Please take the information, take a picture so that you won't lose it. Let me also paste the information, same thing on the chat as well, so that everybody can have it, copy it. And also, who else? Okay, did I send it to everybody? I think I sent it to the panels. Okay, I just sent it to everybody. Okay, now I sent it to everybody. Look in the chat. Okay, and also the question section. Okay, so okay, and also I want to show you in terms of same thing. What is it? Right here. So doesn't matter what we say. I think what our customers say in terms after using a product, that's very, very important. You can talk about like a lot of customers who took the time. And also I want to tell you that it's not like we give the indicator alone. We'll give the full training videos to see the setups, trainings, and also sample trades that I took and then our team took. You can see those examples, all the reviews as well in detailed information. So you can talk about, you can see all the reviews and then customer feedback that we have from our customers as well. Liquidity zones is a must-have for a lot of our customers, since some of the traders are really supply and demand traders, because it's easy to, once you supply and demand, same rules applies, but you don't have to do a lot of work just to have the entries based on the same setup. Okay, so let's see what are the questions I have. We don't have any lifetime subscription offer, James. No, we have only monthly or annual subscription. That's what we have right now. And also, what platform does the indicator use? Our products work only on level 2 on a Ninja Trader platform. Ninja Trader platform and 8. And how much is level 2? How much is level 2? It depends upon where do you get your level 2 data. If you have a level 1 data feed at Ninja Trader Continuum, I think it's $42 per month from Ninja Trader. If you are using Rhythmic Apex, they have $30. I think I like Apex because Ninja Trader, even if you pay $42 per month, they'll give you only 10 levels of liquidity data, where Apex gives me hundreds of liquidity data. Rhythmic DX feed is my recommended one because they have the best. You can see the liquidity, like 100 prices, 100 ticks above, 100 ticks down on Rhythmic and then DX feed. But whereas Ninja Trader, I see only 10. So that's why I use Rhythmic, and also I use what is it, Interactive Brokers. Check your wherever you have the connection right now. Check the prices. If not, email me at info@buysideglobal.com. I can send you some information of where you can get the better level data as well. Now, Daryl, I think I mentioned we don't have any single payment method because we always continuously doing R&D, improving the product, adding the features, everything. For us, subscription is the best way because we can continuously upgrade your software, add your trading ways, everything. We do not have lifetime. We have only annual subscription or monthly subscription. Okay, so best way is you need to have not only. Okay, I don't want to say bad things about lifetime subscription. The reason a lot of people, a lot of traders, indicators sell lifetime because after a few months people don't pay, they'll quit, they'll cancel it. But for our product, we have customers paying for months and years. Because how many times you bought a product and then you feel like you don't need it anymore? That's the reason a lot of customers, a lot of companies sell lifetime, because even though they sell it annual or monthly, people don't continue, they just cancel and then quit, move on. But our case, we have customers using a product. Once they get used to it, once they learn, I think for them it's very valuable. I think lifetime doesn't matter for us. Okay, what other information that I have? I think I did answer every question. Thank you. I think that's all I have. Thank you so much, Rob.
Hey, thank you, Rob. Increasingly great presentation. I think our audience learned a few things today. Really enjoyed it myself. That was Mr. Rob Premkumar. Thank you, Rob. Appreciate it. Of BuySide Global. If you are interested in learning more about those very powerful supply and demand order flow trading signals, we have put Rob's special offer link in the chat box. And you can always find Rob at buysideglobal.com, and on the screen there, make sure you take a photo, like you said, with your phone. Thanks again, Rob. Really enjoy your analysis of volume data, sweeps, and liquidity zones. Please come back and see us on Traders Corner.
For sure. Thank you so much.
Thank you, Rob. All right, guys and gals. Well, ladies and gentlemen, next up, we actually have a 2-for-1 for you with the founder and co-founder of Shark Indicators and chief architect of Bloodhound and Blackbird. These two incredibly talented sharks software developers have created innovative trading software that simplifies trade management without coding. Thanks for making it easier. With over 40 years of combined expertise in software development and trading, they have uniquely positioned Shark Indicators to empower retail traders Their primary mission is to provide tools to the retail trader that were once only accessible to only large hedge funds. So here today to test thousands of trade systems to discover your best strategy in minutes. It is my pleasure to introduce to you a couple of the sharks here, Mr. Jeremy Tang and Zach White of Shark Indicators. Welcome back to Traders Corner, gentlemen.
Hello, hello.
Great, thank you, Anthony.
Okay.
Welcome.
Yeah, so this is I'm Jeremy Tang. I'm one of the co-founders of Shark Indicators. With me here today is Zach White. Thanks for the wonderful introduction. It's always a pleasure to be on Traders Corner. I just want to make sure before we start, you can see my screen okay, and you can see me. If you guys don't mind, maybe just confirm with a yes in the chat or the chat. I'll just let me know that I'm okay. Thank you, James. Okay.
There you go.
All right.
Things are looking good.
All right, thanks. Just got a haircut too, so ready to go. Well, today we're going to really talk about the age-old question of how do you find a winning trade system. We've been in business for about 12 years doing the same sort of thing, selling software tools to help you achieve this end. Naturally, if you are a trader that's been around for a little while, you've probably stumbled across systematic trading as a way to be consistent, as a way to find success in this business. And of course, if you are a systematic trader or you want to be one of the key aspects of doing that is finding a trade system that works for you and is profitable. And when I say it works for you, I mean we've like I said, we've been in this business for a little while, and we've seen traders have all sorts of different personalities, right? Some like to get little wins, and then they don't mind risking a lot per trade, but they like the idea of winning a lot. Others are the exact opposite. Some people like trend reversal systems, some are mean reversion systems, some like trend riding systems. I mean, there's an infinite number of systems out there, and really, how do you find one that's not only fits your personality and your risk profile, but also is a winning system? And I'll just sort of sneak in here, just a little key word here, optimization. I'm going to come back to this in a little bit, but some of you may have heard of it, some of you may not. Optimization is really a fantastic and underutilized tool to help you find this winning trade system. And I'll explain why it's underutilized. It'll come sort of hopefully pretty obvious to you as I'm going along. And one of the reasons why we don't see it being used too much, in our industry, is because getting there is a little harder, a lot harder actually than what meets the eye. Okay, so let's consider for a second, right? You're on your path right now. You want to find a winning trade system, and let's consider kind of doing it the old-fashioned way. Okay, so imagine you've got a couple ideas, and you're like, hey, I've got this trade system. It's got 5 different criteria for an entry signal. I've got some ideas in terms of how I want to exit and how I want to manage it, but I'm not sure yet. Well, the first thing to do is put it down on a piece of paper. Then you got to go through your charts, go back through your data, mark up those charts, find all your entry points where where those indicators are meeting your criteria, et cetera, et cetera. Tabulate all those results in a giant spreadsheet, and that's just one kick at the can and one instrument just to find the answer. Is this a profitable trade system, right? Of course, there'll be other things you can glean from this, like how much of a drawdown did it have? You sort of assess that against your risk, but that takes a lot of work. All right, that's extremely time consuming and tedious, right? And we live in an age of computers, so why are we not using the computer to do this sort of thing? Okay, so, and I think this is where a lot of people don't make that leap yet, right? It's that if you want a computer to do back testing, what do you really need, right? Think about it for a second. You need to tell the computer when you're going in, under what criteria, what conditions, with say your own, right? Or maybe you found some criteria off the internet, or maybe you've been following one of these wonderful professional trading coaches that we presented a little earlier, and they've got some ideas, and you want to see if they're what they're saying is valid, right? So anyways, you say you've got those you actually got to explain to the computer those rules. And then you've got to explain to the computer when you're getting out, how you're managing the trade throughout the life of the trade. And turns out, even for seasoned computer programmers, that's pretty hard because essentially what you're doing when you do that kind of stuff is you're building a full-blown auto trader, right? You need a full-blown auto trader to backtest. That is what you need, and that's actually a fairly big leap, especially if if you say you're not a coder or you never programmed before. That's essentially what you would need is either you would need to hire a developer to do this for you, or you would have to learn how to code. And believe me, like, coding in itself is a pretty big mastery. It's a pretty large field. It's wrought with its own challenges. I'll just put it that way. Software developers are paid very much. They're very expensive for a good reason, right? There's a lot of them, but they are the good ones. They're quite expensive because it's difficult. And I think I did a webinar a couple months ago about using ChatGPT to try to build one of these. Even with ChatGPT's help and my experience in doing this, like, I've been doing this for about 20 years, and specifically for building trade systems or building around this kind of technology for traders, it was still quite difficult and wrought with all sorts of twists and turns, and so it's not easy, guys. So anyways, as a company, we've been trying to solve this problem for the retail trader, for those of you that rather put your time and effort into learning how to trade and finding that trade system rather than learning how to code, right? So we think quite strongly that if you put your time and effort where it really counts, that's where you're going to get the best results. And when I say really counts, I mean not learning how to code, I mean learning how to trade or finding the effective trade systems. So to that end, we actually sell two flagship products. Again, both these products, Bloodhound itself, we've been developing that for over a decade. Blackbird, I think, is a little under a decade. And they actually represent, when you put them together, a fully automated, this tool set allows you to create fully automated trading, and therefore allows you to backtest, right? So on the left-hand side, we have a logic engine that allows you to create trade signals without having to code. And then this side, we have the order execution and the money management, all the other stuff that's actually quite challenging, very challenging to implement in code. And all that stuff is fleshed out so you can configure it any way you like. It's incredibly flexible. We really designed it to be as flexible as indistinguishable from a discretionary trader. And believe me, some discretionary traders can do some pretty wild stuff in the market. So, and yeah, this is all part and parcel to, again, creating your own automated trade system, and then you, with your rules and your trading style, and et cetera, using just a node interface like this, and building this bot so that you can create a backtestable system. And then now, if you take that backtestable system, right, and you find some results, you've got the first piece of the puzzle. Okay, you're not quite done yet, right? If you want to still find a successful trade system, right, you've got to take that, backtest and optimize it, and then, it's not going to be right the first time. It's not going to be great the first time, most likely. Then you're going to tweak it a little bit, go back to the drawing board, and test it again. And it's really the cycle, right? This iterative cycle. And imagine, first of all, like, that's almost unimaginable to do by hand. It's incredibly tedious to do by hand. But even with a computer programmer, say if you didn't have our tools and you were trying to program in and tweak the system manually with code, that cycle itself is also extremely tedious in itself. But with our tools, you can just manipulate some nodes, click a button, get the backtest results, and then now we're gonna demo basically a new feature that we've been working on for the past couple months, supporting optimization. Now this is a game-changing feature, because what it lets you do is not just backtest, a dozen, 10, 20 systems at once. You can backtest thousands of systems in a click of a button. Wait a couple minutes, some, you know, depending, 10, 20, 30,000 systems if you want to go crazy like that. You can certainly do that, and maybe take a couple hours, something that would take longer than you have probably a lifetime to be able to do manually. And then have the computer spit out results in terms of telling you which one of those systems traded the best in historical results. And that's really a way to find winning trade systems very quickly. And so you can go from scratch idea all the way to finding a winning trade system with our software with very little effort. So I'm going to show you exactly how we do that. And to do that, Zach's going to take over for a bit here, and he's going to show you exactly how we do that.
All right, let me get things switched over here. Just a moment, guys. Let's see, where's, all right. Always gotta kind of jump back in the saddle here with GoToWebinar. Let's see here, just a window. All right, trying to find the right window there, folks. There it is, all the way at the bottom. Okay, great. So everybody should be able to see my screen now.
Yep, good to go, Zach.
Good. All right, so you know, I'm going to basically take you through a very fast you know, demonstration of what our products can do, you know, and you know what the typical trader also kind of goes through, right? So these days, you know, the internet, you know, everybody has it. Everybody's got YouTube, you know, and the internet is just full of trading ideas out there, you know, these days. You know, it was a lot different 20 years ago. You know, the number of ideas was pretty slim, and you probably did, you know, could take the time with an Excel spreadsheet, you know, whatnot, and kind of do the manual back testing, you know. But these days, there's so many ideas, you know, and you know, everybody's busy these days. So, you know, so you want to be able to take an idea and vet it as quickly as possible, right? So that's the typical trader's journey is, okay, you hear about some new idea, you know, on a website, maybe a discussion forum, you know, or you see an idea on YouTube there, and you just, obviously you want to vet it, you know, and get some backtest results as quickly as possible, right? So I grabbed a random, you know, idea here. This is kind of what I like to do for these webinars here, is just cruise through YouTube, you know, see what's out there, see what's kind of current, you know, grab an idea and then use that for this demonstration here. So the one I found is a Bollinger Band system with an RSI filter there, right? So pretty classic Bollinger Band system here, where the bottom band is used as support, right? And so you take a bounce trade, or actually technically a reversion to the mean. So this is a reversion to the mean system here, right? So when price hits that lower band, then you're expecting, you know, a reversion back to the mean. In other words, you know, go long when it hits the lower band, and then when it hits the upper band here, you know, go short back into the midline there, right? And then it also has an RSI filter, so that way you're not taking every single time, you know, price touches the upper lower band there, right? So we're going to build this out here real quick, and then back test it, all right? Stick it into the optimizer there and see what kind of results we get. So
yeah, I want to emphasize again, this is just a system that he chose, right? You can build any sort of system you'd like in our software. We just needed an example, but you know, this is a general tool.
yep. So yeah, there's lots and lots of different ideas out there. You know, one of the things that's kind of fun for me when I do these webinars is always picking a different system there. I think that's kind of the reason why we have existing customers always coming to our sales webinar. You know, even though they're an existing customers, they always kind of like to see what new ideas, you know, I might have plucked out of the internet there. So this is Bloodhound. This Bloodhound is an indicator. You know, it's a little fancier, you know, than your standard indicator like the Bollinger or the RSI, you know, because, you know, Bloodhound's designed to provide you trade signals there, or at least a trade bias. You know, how you decide to use Bloodhound is really up to you. It's not a single fit kind of indicator. And as we kind of go along here, that'll become clearer and clearer as to exactly what I mean. So the first thing we're going to do is we're going to find those conditions when price, you know, breaks out of the lower band or breaks out of the upper band here, right? And this is Bloodhound's interface here. So something definitely kind of unique that you may not have come across yet. And so this is a node-based or object-oriented kind of system building program. So what I did here is I grabbed a comparison node, and what we're going to do is compare price, right, to see when the closing price breaks out of the Bollinger Band. And there's the Bollinger Band indicator, right? And so you can see, you know, you can quickly and easily just kind of plug in, you know, whatever indicators you're using for your system there.
Yeah, and that includes indicators that maybe you've downloaded on the internet as well. As a Ninja Trader, you can actually download indicators through websites, or even, heck, if you're a coder as well and you custom made your own indicator, you can actually put that in as well.
And so what I'm doing is I'm just kind of setting up, you know, the conditions here, right, which is pretty basic, right? So if the closing price, right, is greater than the upper band, then we're looking for a short signal or a short, you know, condition here. So that's what I'm just kind of setting up here. So if the close is greater than or equal to the Bollinger upper band, right, then we're going to generate a short. So it's all, you know, written in English, you know, so all you got to do is just read through it, and it's very simple and easy to understand. But the cool thing here, you know, so for those who've ever kind of dabbled in writing some code, writing their own custom strategy, right, they probably can see the huge benefit here, where all I had to do was set up, you know, my input variables here, set up the rules I'm looking for, and instantly on the chart, I have the results. So here we go. We can see, right, when price is above the upper band, we're getting a red, you know, signifying a short condition, short situation. And then if price breaks out of the lower band, we're getting a green colored, you know, indicating a long kind of condition there, right? So that's the Bollinger Band part. So now let's get into the RSI part, which I haven't explained yet. You know, so the RSI is acting like a filter here, where you know, when price breaks out of the Bollinger, to go long, you also want the RSI to be extremely oversold. So you want it below 25, or if you're going to go short, you want the RSI to be above 75, right? So we can see that this short here, you know, obviously didn't work out, but the RSI didn't get above 75, right? So again, you know, these are just the basic rules as explained in that YouTube video there. So let's build that RSI condition next. And also what's kind of cool here is you can name stuff here. So we can give all this stuff a name here, so you know what it's doing later. Because with Bloodhound, you actually save your system to a file there, so that way you can use it later. Kind of like a spreadsheet there, right? You'd save you know, your sophisticated spreadsheet, you know, so you can use it later, you know, and plug different numbers into it. All right, so the next one here is we're going to grab a threshold, right? And the reason why this is called a threshold is because technically, you know, this is getting a little geeky here, but we're looking, you know, that 25 value and that 75 level on the RSI, those are threshold levels, right? So we want the RSI below 25, that 25 threshold level, you know, in order to go long, right? Or above 75 threshold level to go short. So we're grabbing this threshold, and then we're going to plug in the RSI. I'm just going to use a little search box there. There's our RSI indicator. All right. And this uses a 13 period there. All right. And you know what? I'm going a little quick here and just double checking out. So the Bollinger, I think I kind of sped through this. The Bollinger is using a 30 period with a 2 period standard deviation there. You know, so for any of those people who are kind of technically paying attention there. So the RSI is using that 13 period. And now I just need to go in here and plug in that 25 value and 75 value, you know, but also plug in the conditions there as well, right? So we want the RSI below or less than 25 for a long situation, right? Or greater than 75 for a short. Plug that in, and there we go, right? So when you're setting this stuff up, right, you can instantly see the results, and that way you can know, did I set it up correctly, right? So it's really easy for beginners to get into this because you can see your results instantly there, you know, and if something doesn't look right, you can just go back into the settings and double check them, you know, and make any changes, and there you go. So there's our second condition, the RSI. And let's back up here. Let's see. Yeah, there we go. So there's the RSI above 75, right? And it's, you know, denoting, you know, overbought, you know, for a short reversion back to the mean there. So, all right. So that, let's see, I'm gonna go back here. Now we need both of these conditions to be true at the same time, right? So now we need the Bollinger, right? Price breaking out of the Bollinger and the RSI, you know, greater or less than those threshold levels. So we combine them both together with an AND node, and there you have it, already done. So those are the entry signals right there, you know, per this, you know, YouTube system here. And you can see them instantly on the chart, you know. And so what I like to say is you can always kind of, you know, give this the eyeball test, right? Definitely, you know, the first thing traders like to do when they get a new indicator, right, is kind of scan through the chart and give it that eyeball test, you know, and see how things look, right? Like that long right there doesn't look too bad. We can see price just shot right back to the mean, even all the way back to the opposite Bollinger Band. You know, right there we can see price also shot back to the midline there and all the way back up to the upper band, you know. This one, yeah, price kind of shot back, but then it kind of danced around and it eventually hit the mean. So, you know, same thing for this short. So, you know, that's the first thing I'm sure traders do all the time is give it that eyeball test. So, so that's basically kind of the shortened introduction to Bloodhound. And next step is I'm going to save this. I'm just going to save over that file there, save me some time, right? So we saved our system to a file here. And also, let's call this the entry signals, right? So again, you know, Bloodhound you can use Bloodhound, like if you're a pure discretionary trader, you could just use Bloodhound to kind of give you this green, you know, long condition state or the red short condition state as just a market bias. You know, you don't have to use Bloodhound as a discrete trade signal. You can, yeah, a lot of customers, you know, are discretionary trading customers, just use Bloodhound to analyze, you know, a couple of indicators and just put on the screen, you know, whether they should be looking at a long only, you know, have a long only bias, you know, in the market at that moment, or should they only be looking for short trades, or you could both get yourself a long and a short output at the same time, saying, okay, you know what, it's okay to trade in both directions under this condition. Right, so how you decide, to use the red and the green, is up to you as to what type of trader you are. And also, along with entry signals, if you have rules that tell you when to exit a trade, you could build another system here, all within the same file, and you could build for your exit signals, right? So you can build both entry signals and exit signals. So Bloodhound was designed to be very flexible, and where you choose how it fits into your trading style best for you. So, all right, so let's kind of continue on here with testing and optimizing, right, this Bollinger and RSI system here. And let's also kind of give this a name here, right? So this is the RSI 25, 75 looking condition there. All right, so we're gonna close that out. And now we're gonna switch over to Blackbird, right? So why are there two separate products here? So, just for those who are kind of new to doing, system back testing and whatnot, all platforms have a indicator class, which you're probably all familiar with, but they also have a strategy class, right? So the indicators do all the mathematical calculations and whatnot. The strategies, that class exists to manage your orders, right? So this is how you build an auto trader, is the strategies are actually the auto trader that are entering the trade and exiting the trade, based on how you set them up. So that's why we have Blackbird here. So Blackbird is the order management part, right? And so once you can submit orders, then that's when you can build a full auto trader and also do some back testing. So with Blackbird here, we're going to open up Blackbird and we're going to basically put the system all together here with Blackbird. So first thing I'm going to do is add in my Bloodhound signals. So we're going to open that up. We're going to load in the Bloodhound file, right? So remember, there's the YouTube Bollinger Band and RSI, file name that I use for Bloodhound. We're going to load that in, and then if you remember, right, I created what's called a logic template for the entry signals, and then a blank one. There are no exit signals for this system, but now, so let's select the entry signals. And again, if if a part of your strategy does have conditions, that tells you to just bail on the trade no matter what, you can enable the exit signals as well, and select your exit signals there. But we're going to disable that. And then next, we'll set up the entry and the exit orders, right? So this part I'm taking some liberty with because that YouTube video didn't really say what type of entry order to use, and that typically means you're just going in, with a market order, just get into the trade, right? Now it did explain where to take your profits because as mentioned before, this is a reversion to the mean, right? So we take our profits at the midline of the Bollinger Band there, right? So for the profit target, we're just going to create a blank one here, and then we're going to load in the Bollinger indicator here. So we're going to switch this over to indicator, and there is our Bollinger all ready to go. And the profit target is the midline of that Bollinger, right? And if you wanted to, right, we could also test the the opposite bands there, so for a long trade, you could test the upper band, as your profit for a long trade, and the lower band, right, as well. But we're going to stick with the how the YouTube video there explained, to trade this system here. So mid band, there we go. Also, right, you might be wondering, well, the Bollinger midline, it's a moving average, right? So it'll move up throughout the trade, and it even can move down throughout the trade. So what if you wanted your profit target to actually follow that mid band and move up as it goes up and move down? So if you wanted to, you can add trailing rules to that. So this is what really makes Blackbird far superior than any other strategy, that you might have seen out there, where you can design custom trailing rules there, right? So there's no locked in, like you can only do this with a trailing rule. No, you actually go in there and design exactly how you want your profit target, to trail and move, right? Most people only think of trailing with a stop loss, but in this case, you might want to trail your profit target as well, to follow that mid band. So, but yeah, I don't think this system uses, any kind of a moving profit target. So we'll turn that back off there. We have our Bollinger loaded in, so we're good to go there. And here's another thing where I'm taking a liberty. That YouTube video didn't explain what kind of stop loss to utilize. So usually when that happens, I'll usually go with some kind of an ATR based stop loss. So I'll just kind of go with this, generic, typical kind of 1.5 ATR stop loss, and we'll run that through the optimizer and see how well that works. So, and just to show you some other bells and whistles here that Blackbird has. Obviously, it has some money management capabilities, right? So definitely the most common here is, stop trading, after you've hit some kind of outrageous maximum, profit for the day, or, the other situation, stop trading if it's losing money that day, stop trading at some moment there. There's some other metrics as well. And, I wish I had more time, but it even has a daily watermark here, which the short version is the daily watermark helps you lock in that day's profits before the system might, inadvertently kind of trade away those profits. So this helps you maintain a certain percentage of the current day's profits there. So yes, we got that. But one thing I do want to utilize is the scheduler here, right? So most people are only interested in trading during the regular trading hours, or RTH. So Blackbird has, a scheduler built in. So that way Blackbird only trades during the time of day that you want it to trade. And then it has an exit option here. So that way, Blackbird will make sure that you don't have any open positions after the market closes there as well. So yeah, so we got the scheduler enabled there, which we do need the scheduler, because if we look, I'm sure, oh, we don't actually have the signals on the chart, on this chart here. Let me go back to the other chart. Yeah, right. So these signals are 24 hours a day, right? So we have one, yeah, we have some long signals here at midnight, basically, right? And we have some short signals here early in the morning before the market opens, right? So, so if you're not going to be trading the overnight session, right, then we want to exclude, those signals in the overnight session there, right? And so Blackbird's scheduler there will do that for you, right? So now that I have, everything kind of dialed in here, let me save these settings to a file. And again, I have a file name all ready to go there to kind of save me some time there. And so now I can reload the chart, and that allows Blackbird to also load in the bloodhound signals there. All right. And so there we go. So we can see Bloodhound. It's on the chart there, and there's our system. So, all right. So that is the quick introduction to Blackbird. Now let's get into the optimization part of it there. So let me load up, and oh, I thought I had an optimizer window already to go. Okay, we're going to do this from scratch. So the strategy analyzer, this is a component of the NinjaTrader trading platform there. And this is a great tool here, for people who are trying to vet their trading ideas. So as the name implies, strategy analyzer is here to help you analyze your strategies, right? Your trading strategies. But, well, not a but it has two modes here. So it has just a normal straight backtest mode, and it also has the optimization mode here. And so that's what we're going to show you today here. So, all right, so we have Blackbird loaded in, and you'll notice it says beta there. So the optimization extension of Blackbird is in beta development currently. So it's not released to the public yet, because we're still testing it out, working out, some kinks here, making sure it's good to go. So with Blackbird, next thing we need to do, for the optimization here is load in that Blackbird file that I created, right? So there it is. And then the next thing is we need to determine what indicators, and what variables do we want to optimize with our system here. So you notice at the top here, we have our Bloodhound system built in, and it shows us the indicators, right? So there's our Bollinger and the RSI indicator, right, used for those entry signals. So we're going to open those up, and let's optimize the Bollinger period. So we can see, right, the standard there is 30 period. So let's add the Bollinger period, and we'll optimize that. And then for the RSI, the standard is a 13 period. So let's optimize that RSI period. And then also, let's go into Blackbird here, the order sets. So here we can see the profit target, right, which is using the Bollinger, and the stop loss as well, right, that 1.5 ATR, right? So if we wanted to, we could go in and optimize the Bollinger period for our profit target, again, that's pretty well defined in that YouTube video, right? You just use your standard Bollinger midline as your profit target. So, but one thing that, that again is the little unknown that I took some liberty with is, where do we put our stop loss there? So let's optimize that 1.5 multiplier of the ATR, right? And we call that a factor, right? It's an ATR multiplier factor there. And we can actually customize the name of this stuff here, so that way you can give these elements here that you're optimizing for, you can give them a custom name here that makes sense to you. So, all right, so we have our stop loss, ATR, multiplier factor. We have the Bollinger Band period, and the RSI period. All right, so let's go in and do some optimization on those. So when we're done, click OK. And now this optimizer parameter section shows up here. And right, so here's where we can go in and set a minimum value, that the strategy analyzer will use. So let's go ahead and put a half an ATR as our minimum value. And for the max value, let's say maybe 2.5 ATRs. And then the increment value, let's do steps of half an ATR at a time, right? So when the optimizer is running, it's going to start at half an ATR, and then it's going to increment by another half. So it'd be 1 ATR, then it'll go 1.5 ATR, then 2, all right, so on and so forth. So now let's put in our parameters here for the Bollinger. So again, the standard is 30 period. So maybe let's start with a minimum of 20 period and then go all the way up to 40 period. And you know, when you're optimizing indicator settings here, just a little tip, you know, you really don't need to step through every single period. You know, it's what you want to do is when you're trying to optimize, you want to get in the ballpark. You know, so as you learn more about optimizing a system, the one thing you'll hear over and over again is do not over optimize this system, right? You'll destroy a system quickly by over optimizing it. You know, so doing, you know, a period stepping of 2 is plenty. That'll get you in the ballpark there, right? So we'll do the same thing with the RSI. Let's say a minimum of 7 period. I don't know, maybe 5 period. Let's go one step lower, and then maybe a maximum of 17 period. And again, we'll increment those periods in steps of 2, right? So that gets us in the ballpark there. Okay. So now that we have
your instrument there, Zach, before you begin.
Yeah. So the next steps here, right, is we need to kind of finish filling out some of these settings here. So yeah, you do have to tell it, you know, what instrument, you know, do you want to optimize against there. So we'll do it against the ES. This is another thing about that YouTube video is it never mentioned what exact chart type. It did mention that it actually works on a bunch of different chart types. So I'm just going to do this on a 5-minute, you know, but the system's also supposed to work on a 10-minute, 15-minute, 30-minute, you know, all those different, increments of a minute chart there. But let's just go with a 5-minute for this test here, right? Then the next thing is your time frame, right? Obviously, you know, if you have a couple of years of data saved up on your platform, you know, you'll probably want to backtest against that. But again, for the sake of time, right, we are very limited here. I'm just going to go 6 months back. So we'll go May 1st, you know, to yesterday there. Also, this is a little time saving tip here is, you know, obviously we're not backtesting this on Sunday. So I'm just going to use the default 24/5, and that cuts out the Sunday data there, and that'll kind of save a little bit of time there. And let's see, let's take off the commissions, and let's see, we don't need to change any of that. Here we go. So here's an important settings here for the optimization is, you know, you can take a look at what, you know, what's the best number of results there. You know, 10 is standard. You know, I think we only need 5. Knock that down. But what's more important is what do you want to optimize for? You know, again, this is another shining element of NinjaTrader's strategy analyzer is you can optimize for all of these different metrics here, right? And the profit target, that's definitely a good safe bet to optimize for. You know, it does kind of give you a little protection there, but you know, at the end of the day, I think what people are really looking for here is where to go. Net profit. There we go, right? So let's just go, you know, for the glory there and just optimize for net profit there and see what we get there. And that should do it. After that, once you got everything set up, you just hit the run button and the computer does all the number crunching for you, right? And so instead of the old, you know, Excel spreadsheet, taking you weeks, to mark up your chart and find all those entries, and putting it into Excel, you'd have to put the entry price in, the exit price and all that stuff, taking weeks, as Jeremy alluded to. Bingo, the computer's doing this and right in front of us in a matter of seconds here. Again, this is a pretty short test here. There's only, there's less than 400 different variations there. So this is going pretty quickly. I think what's probably more typical, for the more advanced systems out there is you might be looking at close to 10,000 iterations there, so don't expect this to always just take a few seconds, right? This could take, maybe an hour or a couple hours, depending on, how complicated, all these optimization parameters are that, that you're testing, and of course, that all depends on how complex your system is as well, that you're wanting to back test, right? And so there you go, right? You get some results. And the cool thing here is in the optimized parameter section, you can see it now added a parentheses. So it's telling you the value that it used to return these results here, right? So instead of the 1.5 ATR that I assumed, it actually went with a 0.5 ATR. So it really shrank that stop loss down, I guess basically to get out of a bad trade as quickly as possible, right? And then we can also see the Bollinger, it decided to use a 20 period Bollinger, a much faster one, but the RSI, right, it actually stuck with the 13 period RSI. So it went with the, the standard period there that the YouTube video there went with, right? And so you can kind of, go through all the different variations here and, as it says, analyze the metrics here of all of these different variations here that we're optimized for. Yep. So there we go, in a nutshell of Bloodhound, Blackbird, and the new optimization feature, that will be coming out here soon.
Yeah, thanks, Zach. I realize we're getting pretty short on time here, so I'm going to quickly take over and wrap up. Let me just share my screen real quick here. Can I do that? Oh, I think Zach, you might have to. Okay. If you don't mind, Zach, maybe you could drive real quick. Just maybe go to our website. I just want to put take your attention to our website. It's www.sharkindicators.com. And basically, we do have a Black Friday sale on right now. I just want to, it's just the timing is just right for it. So next week, as you know, is, well, most companies have started Black Friday already. If you go ahead and click on that, Zach, we can go into the pricing real quick. I do want to emphasize, like, even just to create one of those strategies in hand coded, or if you were to hire a programmer to do it, you're looking at, weeks of development time, and developers are not cheap. Thousands of dollars in manual labor to create a similar system. Now imagine just purchasing it once, like buying our software once and be able to build kind of any system that you would like to desire. Quickly, I'm going to answer a question from Max here. Yes, we do support just about any indicator out there, even third-party ones that are developed by other partners or other professionals. As long as it spits out the correct data. In other words, it tells us, in NinjaTrader, indicators either spit out data in a form that can be read by others, or they don't. As long as it does that, you're fine. But my point is, yes, you can build kind of any sort of system. So hopefully, with our kind of software, this is the last sort of purchase you need to make in order to arrive at your to build a system that's actually tradable and is a winning system. And believe me, it's really cool to see. Like we just showed like the back testing and optimization screen, which is it's just more like a spreadsheet there. You can see some results. What's really awesome to see is actually seeing it live as it's trading and it's managing the orders in real time. Just truly a really cool thing to see. But I got to wrap up real quick. I'm getting a little bit of a notification here that I got to wrap up so the next speaker can go.
real quick, guys, if you want the free trial, you can see there's a link there to the free trial on our website as well. So
Yeah.
that'll just take you to a short form there, and you can sign up and put your email in there, and we'll email you a download link to get that free trial as well.
Yeah, I will just say 2 more things. The Black Friday sale is 20% off. Our individual tools, if you buy them as a bundle, it's actually $800 off. It's probably the best savings you'll see kind of from us. We do have a money back guarantee. This is something we've done from the beginning of our company. Works very well for us. So that hopefully takes the risk out of purchasing now, with taking advantage of the good pricing. Then you have 30 days to evaluate it still, and if you still don't like it after that, it's still not for you, and that's fine. Just let us know, and we'll be happy to refund it. But basically, yeah, just head over to sharkindicators.com, and the Black Friday deal is on starting now, and it's good till the end of the month. So thank you very much for attending. Oh, there's no extra cost with Optimizer feature, guys. It is in beta right now, and it's for anybody that's, if you want to try it out, you got to be an existing customer. Just go to our Discord channel and request to be in the beta channel, and you'll see it, because we're actually going to be uploading a new version actually next week. So
Thank you, guys.
Great. We got through it.
yeah.
Right.
Thank
Thank you, guys.
I'm sorry for dragging it out there a little bit there.
Okay. Make sure you guys stay on and answer those questions in the chat, though. There were a lot of questions. And if you want to put some more information in the chat for everyone as well in terms of contacting you. So please do.
Will do.
Yeah, we'd
Thank
love to.
Yeah, you're welcome.
Yeah, here's a
Thank you,
question.
thank you.
Again, another question on indicators. Do Ninjacator indicators work? Some of them do, some of them don't.
All right, guys, I apologize. I think we lost Zach. Jeremy, if you're still on, just if you could reply to those chat messages in the chat. You could just reply to them individually, and then make sure you put your contact information in the chat as well.
Will do. Thank you, Anthony.
You're welcome. Thanks so much. Jeremy and Zach, I think the audience was wowed today. What an incredible presentation. Ladies and gentlemen, good news, no more expensive programmers. Now you can create your own strategies, experiment with new ideas, and validate them with back testing. You can literally create your own strategy in minutes, all with no coding, as we just saw. Amazing. I have a few ideas I'd love to try out. I'm sure the audience did as well. And your Blackbird Automate Trade Management for Ninja Traders sounds amazing. Ladies and gentlemen, if you are looking to create and optimize your own trading system and trade management strategies without any coding necessary, Mr. Jeremy Tang and Zach White of Shark Indicators have a solution for you. And hopefully they're putting the offers in the chat as well. Thank you so much for being here today. And remember, they are at sharkindicators.com. Thank you, Jeremy and Zach, for making our audience such a generous offer. Please come back and see us on Traders Corner again. All right.
Thank you.
You guys are welcome. Thank you. We always enjoy it. At the top of the show, I mentioned we had a great lineup, and our next presenter is no exception. He is the owner of Viper Trading Systems, which has been in business since 2009. He features a live daily trading room, weekly webinars, and training sessions to help you be successful using their object trader indicators and strategy. Here to introduce Unlocking the Potential to Transform $935 into over $250,000, that's a good deal, is the ever so impressive, energetic Mr. Gary Donahoo of Viper Trading Systems. Welcome back to Traders Corner, Gary.
Thank you very much. I'm glad to be here. By the way, I won't more than likely take 45 minutes because I don't really want to go into the next person's deal. So basically, let's go over the standard disclaimer first, because everything I'm going to tell you here, obviously, futures trading does involve risk. There's always risk of loss. You should only trade discretionary capital, and that is money that you can afford to lose. Nothing said in this particular presentation or any other presentation that Viper Trading Systems does should be construed as trading or investment advice. Okay, so basically, we are Viper Trading Systems, and we've been in business since 2009. So we're not just a fly-by-night at all. Now, basically, the title of this particular part of the webinar is taking $935 and turning it into over $250,000. And that's a pretty bold statement, okay? But the way you can do something like that is through the power of our system and the fact that we also have a trading room that's open 5 days a week for about 2.5 hours a day. And in that trading room, there are live calls made every single morning. And without fail, you will absolutely be able to be told on a chart where we're going to take some trades. And that's huge because you can make some good money doing that. Okay, so basically at Viper Trading System, first off, I want to let you know that everything that I tell you here today, obviously, I'd need probably 3 or 4 hours easily to teach you about Viper Trading Systems. So instead, once you go on our site, vipertradingsystems.com, and we have a 10-day trial with everything that we offer our members for just 39 bucks. $39.99 will get you every indicator that I'm going to show you here today, the object trader strategy, ninja trader strategy, and training. You'll be able to actually come into the room, be trained. You'll be in our webinars and get trained, and you'll have the training materials also. So, you know, basically the key to making money in this world of trading today, you know, I've been doing this for a long, long time. I'm 71 years old. And I've been trading literally for about 35 years, but I started trading futures in about 2008. And in the old days, when you traded futures, you just had to pretty much throw 10, 15,000 your own money. And then you were basically trading with scared money, so to speak, and you'd blow through possibly a $15,000 account. I've done it. I know everybody in here that if you were in the old days, you probably done it too. Well, nowadays they have these vendors, like just to give an example, Apex Trader Funding, been around several years now. Top Step Trader, you know, they've been around a long, long time. They were the first one in. Take Profit Trader's another one that's out there. The beauty of trading is the idea that you can also clone. Okay, we have a feature in Object Trader called the clone. And so when I trade, I actually clone like up to 7 accounts. Well, you can do as many as you want because we allow you to do as many as 200. Now, nobody that I know of is doing that much, but it is possible. Okay, so basically, also to let you know a little bit about us, we have a website, vipertradingsystems.com, but also we have some of the best support out there. I can tell you that because I've been told that by my members all over the world. You can contact me directly by phone. There are very few vendors out there that you can contact by phone. I carry that phone on me even when I'm usually out at Costco getting groceries or something like that. May not talk to you direct at that particular moment, but you'll come in on my text and I will get back with you as soon as possible. We've got email support at vipertradingsystems.com. If you have any issues with licensing with Ninja, Linda takes care of this. That's my wife of 52 years. She takes care of this part of it. And we have support basically normal business hours, okay? And I go past this, you know, I might be sitting watching TV and somebody calls me and I will go ahead and answer their questions right there on the phone. We have a CRM management system with Viper Trading Systems that's very automatic. So it gets in touch with 4 different people the split second that you contact us. So we're gonna be Johnny on the spot and take care of you. Now, what this webinar is about today is if you get, how many of you, by the way, are pretty familiar with the fact that you can get funded with these prop firms? Because the whole idea of not trading your own money nowadays is to do something like, say, Apex Trader Funding, to give an example. They've got great deals going on all the time. You can get an evaluation for like 80% off. And the beauty of trading other people's money like that is you can trade multiple accounts. And when you can trade multiple accounts, you can get things like this going. Let me just show you something here. Okay, first off, I'm going to show you, this is actually unlocking the potential to transform $935 into over $250,000. Now that's a pretty bold statement, but that is 7 accounts of Apex. They cost $50 a piece. So you do the math. 7 times 50 is $350, right? Then when you get funded with them, they charge you a one-time fee of $85 times those 7 accounts, which is $935, okay? Now, the power of having multiple accounts like this is huge. Let me just show you. This email is true, and I'll show you. This is actually Apex accounts right here. These are 5 accounts, and these are 2 others. Now, one of the reasons that this one is actually traded a little bit more aggressively is because it's so much larger now. You know, these are $150,000 accounts, but as you can clearly see, these are well above $30,000. Okay, this one's above 33, this one's above 57, that one's above 47. These are actual Apex dashboards, okay, showing how old these accounts are. 23 days old times 5, up over $30,000 each. That's $150,000 right there. That's huge. 77 days old, $54,000. 56 days old, $44,000. So if you do the math, you'll see that that is over $250,000. Now, the beauty of being able to have this little amount turning to this kind of money is huge, but the fact that you also have to obey their rules, okay? When you go through an evaluation with one of these companies, you can trade any way you want to trade. They're fine with it. But when you get a PA, which is called a performance account, there are certain rules they go by, okay? Now, what we've done at Viper Trading Systems, we built these rules into our trading system. Okay, I'm gonna go to Apex since they're the ones we're talking about most today, because that's what I'm showing you. And by the way, let me just show you before we go there, the power of the clone, okay? Here's a dashboard, NinjaTrader dashboard, cloned, 5 accounts. That's over a $10,000 day. That's like actually 13,000 something, right? Here's another one here, 11/7, 3220, 3220, actual PAs, right? Here's the dashboard proving it, 23 days old, 77 days old, okay? Here's an actual NinjaTrader after payouts. Now keep in mind, the whole idea of trading somebody else's account is that you want to get paid from them. They're called withdrawals, okay? So if you abide by their rules, you will get the withdrawals, and that's huge, okay? So let me show you something here, what we've actually done. At Viper Trading Systems, we have tools, indicators, and also a NinjaTrader strategy. Our NinjaTrader strategy is called Object Trader. Now, when I'm in that room, I'm going to be telling people, for instance, on Friday, this is Friday, I called a phantom trade right here on gold, okay? We had just opened the room, because I opened the room at 7:35, okay? We looked for this trade. Our alerts even called it out in real time. This will actually flash green on this phantom deep long if I've got the right timing on it and everything, which this is more than a day old, so I'd have to change my alert indicator. But anyway, this will flash on that bar letting you know that that's a phantom trade. This will also simply take that phantom trade deep by simply turning on Object Trader and telling it to take the trade. Then you can just simply click the clones and clone however many accounts you want to trade. It's that simple. When you get to say $500, to give an example, that trade was easily worth $500 with 2 contracts for sure. And so you're up 500, but you're up 500 times 7 accounts. That's $3,500 for the day, okay? You didn't break any rules. The rules are very clear with Apex. You can go to apextraderfunding.com. and they have a little area here that talks about their new rules for Apex 3.0, and they're very simple, but we built these into our strategy. Every rule that's in here, if you scroll down, we've got a spreadsheet that'll keep you consistent with them so you qualify. What all this means is, let's say that you have a $3,000 day. Well, then you need to have $10,000 in your account before they're going to pay you, because they go by a 30% consistency rule. We have that covered. We have this bit down here, for instance. They did away with dollar cost averaging, but I have that built into Object Trader also, okay? We have this built into Object Trader right down here. They've got a new rule called 30% negative P&L rule. Well, obviously, if you've got 10,000 in your account, you're not going to draw down 3,000 to begin with, or you need to start learning to trade again, because the whole idea is that you need to make profit, not lose profit. But they do have a negative rule right here, and we built that into Object Trader. okay? So basically, with having rules like this built into our strategy already, see if I go into my strategy right here, I actually have rules built into this, and I'll just go ahead and disapply this right here, unenable it. And you'll notice right down here where we actually have Apex DCA rules no longer in effect, but it's good risk management. I highly recommend using it. I use it when I'm trading. That way you don't go getting into multiple positions when you're negative on your unrealized P&L. That's built into this. We don't allow hedging. If you look at their rules, if you go short on YM and long on ES, you just broke a hedging rule and they won't pay you. Okay, so we built that into our strategy. We built their Apex PA 30% negative profit warning. We warn you if you ever get close on any of these type of rules that they have. Okay, so basically, if you can keep their rules, then you're going to get paid. And the beauty of it is, especially when you use our strategy and you clone, it's just mind-boggling what you can make. Because I didn't even used to do as many clones as I do nowadays, because we just literally developed this about a year ago. Now, you've probably heard of some trade copiers out there, right? Apex even has their own trade copier, okay? We have a trade copier, though, called Viper Clone. And Viper Clone will actually, you trade in SIM on your main account, it puts a stop and targets, and then it clones on your Apex accounts or Top Step Trader or whoever you're doing, and then you're totally copying those trades. The example of that is so huge. Here's an example right here of Top Step Trader, Take Profit, and My Funded Futures, okay? This was cloned, okay? Notice that each one of these accounts, 1097, 1097, 1097, 1085, 1097, those are pro accounts, by the way. That means those are funded accounts, okay? This is called My Funded Futures. Those are also funded accounts. I just started these, by the way, okay, because I wanted to have some extra accounts. Clone is beautiful. Top Step Trader, cloned, same time. You realize you took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 accounts minus the SIM, so 10 accounts. That's over $11,000 for one day. That's how you can take $935 and turn it into $250,000. And we have built the tools. You know, I'm a trader myself. I've got a programmer that's probably one of the best out there. Every idea that I come up with, or even my members that are with us all over the world, you know, they come up with an idea and we just hit our program up and say, hey, can you do that? And he does it. And I pay for it. And you don't pay for it, because at Viper Trading Systems, I've kept the same price for over 15 years now. We haven't gone up a single dime, even with inflation through the roof. The beauty of trading, though, is that you can do away with inflation entirely. You know, no matter who won the election, it didn't matter. You know, inflation's been through the roof. If you've been to the grocery store, if you've been to the gas pump, if you've been anywhere, you got to realize that if you look back, for instance, in like 1940, for instance, $20 would have literally bought like 487 gallons of milk. That same $20 nowadays will buy 4 gallons of milk. Okay, so basically, inflation is something that's out there that rears its ugly head, and frankly, people that are just on a straight salary or something like that, they're having trouble making ends meet. But when you trade for a living and you do it right, you can make so much money you don't even know what to do with it. I mean, I don't even need this kind of money. I'm retired. I've got no mortgage, no bills of any kind. But right now, this very moment, even after payouts, I've got over $200,000 sitting in Apex. And it's just a matter of just pulling it out whenever I want it. Okay. This idea of, you know, throwing like $100,000 into an account and taking a chance with it, you know, and trading it down and trading it down. Well, when you go through somebody like Apex or Top Step or somebody like that, you're putting up a little bit of money for an evaluation. You pass that evaluation, it becomes a funded account. Once you get past a certain threshold, that money is yours. Now, I recommend staying above that threshold. And the reason for that is because that way you don't have to worry about, drawing down and possibly losing an account or something like that. In other words, once you get up to say 10,000 in your account, don't withdraw 8 of it or 9 of it because you wouldn't have enough threshold left to stay in business, so to speak. Okay. So again, this can be the best deal that you've ever thought of in your entire life. $935 is less than $1,000 bill. Okay. And turn it into $250,000. It's just huge. This trading room that I run, our people have these exact tools that I'm showing here. So when on Friday morning, when I simply said, we're getting a phantom trade, it was right after we opened the room, 7:35 is when we opened the room. They simply do what's called boxing it in. We've got what we call a region tool. I'll just draw it with the regular region though. Box that in, couple 3 contracts, huge trade. Even called it out at a close below line 6. Line 6 is this green line right here. Okay. Notice that it almost got us out right there, but it didn't close below it, closed above it. So we stayed in the trade, went up a little bit more, came close to my predictor, and we took it off the trade right there at line 6. That trade alone, you could be done for the day, especially if you do it times 7 accounts, 5 accounts, something like that. I actually get up at 2:30 to 3 o'clock in the morning Central Time, and I trade with my son, my son-in-law and daughter, and basically we just simply together on the phone, and I call trades at 2:30 in the morning so that they can go on to work, and they're trading PAs now too. And again, the beauty of something like that is just huge. You go back to 2 o'clock in the morning, for instance, on this, and see there's a lot of action on gold in a day. See, this is about where we got up right through here. I got up at 1:45 on Friday morning. This is called a mid-band trade. You could be one and done. All my son and son-in-law go for is like $300 or $400, but they do it times 4 and 8 accounts. And then they go off to work. Son-in-law's a police officer, son's a banker. He doesn't make as much at a banking job as he does on trading with me. So again, the beauty and the power of leverage is so huge, it's unreal. You've heard of the power of compounding. Warren Buffett became a multi-billionaire over compounding. Well, you're kind of doing something very similar by just simply cloning and doubling, tripling, quadrupling your accounts. And the way they've got it nowadays, you have what's called rhythmic data. You've got what's called Trade-Evate. You can actually trade with, like NinjaTrader, to give an example. You can go ahead and trade your Top Step account or your Apex account. You can trade your Take Profit account. You can take your My Funded Futures account. You can do all of these, and the power again of that clone is getting to those figures where you just request check after check after check. It's amazing. Okay, James L is asking, does this system work with platforms other than NinjaTrader even after you have done the back end work? It's easy to implement. Well, the thing is, James, on this right here, we are only NinjaTrader. Our strategy is actually built in NinjaTrader language and everything. Max, on your question, could Blackbird in testing for results also consider indicator signals from, well, you can actually do that even with our product as far as it goes. But one thing that I want to let you know real quick is basically you can either, there's like two kinds of people in trading. I used to do all the back testing and all the different stuff and basically paid for this program and that program. And then I actually took the time and learned how to actually trade. And the beauty of trading is you're always going forward. You're not going backward. Our stuff is so proven. I'll just give you some examples of it. When we go from a long trend, and by the way, our trend is designated by our midband, okay? Our midband changes directions right here, okay? So we're looking for first time into these predictors and midbands. So that's actually a trade right there. Changes directions. We're looking for first time into a midband or a predictor. It's that trade right there. Now we also teach that this is a what we call a breakdown of line center long short, high, low, higher, high, breakdown, box in, short, okay? But first time in the midband is right there. See, a beautiful trade. First time into predictor right here is a beautiful trade. Changes trends again, possibly, there's a midband trade right there. Changes from short to long, first midband. From long to short, first midband. Works like a champ. And that's how I've actually taken $935 and turned it into $250,000. I run a trading room 5 days a week from 7:30-ish, 7:35 is about when I try to get in the room. And I call those trades on 3 different charts, 4 sometimes, but I mainly concentrate on gold and oil and ES. And when I call those trades in the room, it's up to my traders to take them or not, but they've seen the power of this system. And we don't try to go for, you know, like, well, to give an example, like right here, you would have thought this was just heading up, wouldn't you? You know, just heading up like a big dog. But the way our scripts are, we can tell when they start breaking the trend and going back the other way because we use very tight charts at only 4 range bars. These are 4 range bars right here. And they build what we call lightning. And this is what this indicator is up here. And by doing this, when we get in a trade like this, we just simply stay, I'll show you here, with the lightning. See how this had a low, high, higher, low, higher, low, same high, broke support right through there, actually, didn't it? So can you get out of that trade right through there anyway? That's still a monster nice trade because you've already taken one of your contracts off because you hit this swing right here. And then you take the other off when it takes out the swing. Then you either look for another, like what we call a phantom, or very possibly a breakdown. And see, this broke down right here, okay? And you're gonna see this over and over. I'll show you another chart just real quick. We'll just go to oil. Notice how oil was, for instance, right through here. This is where I kind of got up on Friday morning, way back over here. But how about this right here? Opened my room at 7:30ish. Remember I told you, there's your first midband after a trend change. That trade was called. Went from long to short, first time in the midband and predictor. And these predictors draw in real time too. This is not after the fact drawing. This predictor showed up before it ever got there. So our people simply, this trade would have been called like this. Would have said, okay, we're looking for a midband trade. So we're looking for midband power dot. We're looking for a midband type trade. We're looking for a predictor above. And we're looking for a stealth trade. That's your stealth line right there. And we put it on single object type, and whichever one of those fires will get you in the trade. In this particular instance, predictor fired, stealth fired, so you'd be in 2 contracts. If you had this set for a max of 4 and another one would have fired, you would have gotten more contracts if you set it for auto max. And I'll teach all this to you, obviously. This tool is a great tool. And keep in mind one thing, you know, a lot of traders, they think of like just really large runs, to give an example. That's not the way markets work. You know, markets work in these big thrusts, pullbacks, you know, Fibonacci's. We've also got an auto Fibonacci trader. We've got a breakout and kiss trader. The breakout and kiss is a super trader because you can just simply set it for a break and a kiss type trade, and it'll put a limit order in. And it'll take you a while to learn all this. This is called a phantom trade right here. This actually will alert you to what we call a phantom. That's a phantom shallow type trade. And that bar should flash. See them flashing right there? It's letting you know that's a phantom trade. That's a short trade. And we take that trade. Okay? So I'm going to only run about 7 more minutes because I don't want anybody else to lose their particular spot. And, I'm going to respect that. But I want to let you know that these type of rules that we built into this system, they're huge. Let me show you something here just real quick, and I'll pretty much get ready to wrap. This is our new Apex Manager. Now, the reason I blotted these out is because this is actually one of our members' accounts, okay? So I was putting it on his computer the other day, and I said, you mind if I take a picture of that? Because we were working on this particular tool. This is brand new because Apex 3.0 just came out. So you just simply put in the size of the account, pardon me, and our trading system will alert you if you get even close to those parameters. Dollar cost averaging, if you want to turn that on, our system will let you know, hey, if I got in one contract here and I was negative P&L when I went in here, it won't let you. If you turn that off, it'll let you do whatever you want, okay? But we built this type of thing in so that traders can be consistent, and risk management is the way Apex and all these vendors want it. Now, I can tell you this, that you could probably start your own $100,000 account, and I would just about bet you couldn't come close to what our members are doing with cloning, because I just showed you transforming $935 into over $250,000. I mean, just think of this. Is that enough to, for instance, and you saw it was only 70 some odd days for the biggest account. The others were only 23 days old. So that's technically turning $1 million a year very, very easily, okay? That's huge. You want to go buy a car next month? Trade 7 accounts with Viper Trading Systems, with my room and with my calls, and turn $935 into over $250,000. Because I did it. I can guarantee you other people can do it, because if I can do it, I can tell you this, I don't have master's degree. I'm not a PhD or anything like that. I got married when I was just going on 19 years old. I did a little bit of college, and since then I've just making my own living. But I'm very astute and street smart, and I built one of the best systems out there. And I firmly believe that anybody can trade my system, and I'll show you a couple of things about it, and just real quick, and we still got 5 minutes. All right, let's go to, first off, be sure and get my website, okay? I'll just put it in the chat log here, because you'll want to come in, at least do a trial with us. Come into my trading room, see if we're not the real deal, okay? We've got a members area. Our members area is just open, obviously, to members only, okay? And you just simply go into a particular module and study, okay? I've got modules on Object Trader tutorials. You want to know how to trade Object Trader? Click the little deal here. It'll log into Object Trader tutorials. You want to know how I do my auto fibs, my background colors, my bar colors, anything. You just simply hit little quick videos. These are like 5-minute videos, maybe 10, some of them, but most of them are under 5 minutes. Okay. We've got a trading manual, this trading manual right here. And by the way, even on your trial, you can download this and keep it. That's fine with me. But you want to learn how to do a phantom? Click it, watch the video, read a little bit about it, see the phantom trades, beautiful trade setups. We've got a lot of our people that are making money just on this trade alone. And first time in the mid-band after a trend change, which was right over here. Okay, those are some of the best trades. And again, you don't just try to stay in a trade for all day long. Sure, some days you'll zigzag and you'll stay with it. My scripts will keep you in that trade. But when they go up and then they start hesitating and start rolling over, get out. There's other entries again, here, 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 here. And our scripts will catch those, okay? You want to learn how to do a mid-band trade. There's a video on it right here. All of our trades are, every single trade that I teach, mid-band trades, phantom trades, and we have another one called the line in the sand trade. And that's one of my favorite personal ones. And it's huge. You can make a lot of money with it. And I'll teach you exactly how to see it. And you'll see it before it ever gets there, so that you'll know when they're starting to change trends and go the opposite direction. Now, I'm looking at the question log and it's kind of a little bit, let me see if I missed some here, just a second. So Viper, does your system allow you to use simulated stops? That's the beauty of it, Tim, is our system is simulated stops. When I trade, for instance, when I clone, okay, we are actually cloning with like Apex, to give an example, or Top Step Trader or whoever, but the chart itself, see, is on Sim 101. But when I fire, I can fire on as many clones as I want simultaneously. Those trades are in the system, what's considered like exposed, okay? Because if you lose connection, Object Trader no longer has that simulated target and simulated stop. But you can always go to positions and flatten them out, right? Or you can go to your phone and go to Apex and flatten everything if you lost, connection. I don't lose connection, so I'm very comfortable with cloning because, and the beauty of it is that by having it cloned, it's putting your real accounts with orders, so they have positions on, but you have no stops and targets for them. It's only on your sim chart, okay? And if you get out of a trade, you can go back in. I've even got it set up where, what if you want to trade all of your accounts? You just click the button. What if you want to trade all micros instead? You click the button and that'll trade micros only. What if you wanted to trade some in micro and some in regular account? You can do that also. And we have a micros multiplier too. Okay. But we're the real deal. We've been around a long time. And I can tell you this, I've built some of the best tools out there. And I prove continually that it's the real thing. You saw those Apex accounts. That's not true type stuff. I'll just show you real quick. Even after payouts, that those same 5 accounts, by the way, you want to get paid, so if you get a pay, you're going to go down in your value until you get it back up. But I just got a paycheck, and you can see this is a NinjaTrader control panel, and those accounts are still above 24,000, 23, and 22, even after taking paychecks. Okay, because I keep good thresholds in here. That was still over 50 some odd $1,000 in pay. So, I don't need to, empty the account out. This is still real. This is actually a NinjaTrader dashboard, and it's connected to Apex accounts. And those are real figures off of NinjaTrader as of Friday. Okay. So I want you to come in and at least take my trial. If I'm not worth $39.99 for all my scripts that I buy, I paid over $100,000 for them, then you probably don't want anything to do with Viper. But I can tell you this, for 39 bucks, you can take a 10-day trial. You will be called the exact trade setups in the room. You won't understand them at first because you got to learn the system. We trade mid-band trades, we trade phantom trades, and we trade line in the sand breakout trades. Okay, so everything that we do is legitimate and upfront. I could prove to you I actually passed Apex accounts in one day. So you think, well, that was a fluke. Well, I did it again with $250,000 accounts one day. Okay, it's possible to do. That was cloned. That was 1, 2, 3, 4, 5, 6 accounts in one day, funded, and they're cloned. The leverage that you have with this type of thing is so huge nowadays. I've been trading so long. I traded when you had satellites in your backyard. I traded when you had to call your broker and pay phenomenal fees. But nowadays, everything's instantaneous. All you got to do is just go to these vendors. I've got a, by the way, actually an Apex on my right here. If you'll just go to my, I've got Apex 80% off and 80% recurring and even $35 resets and 1 day to pass with my code. Use my code right there and I'll even help you set it up. If you decide to join me, by the way, I'll give you a link. I'll let you join me for $50 off, and I'll give you a $150, a $250, or a $300,000 account with Apex for free. That's how. If you go to my pricing link, you'll see that's pricing right there. If I add a -3617 to that, and take that off, I'll give you $249 a month, and I'll give you Apex $250, $150, or $300,000 account. And then you can be on your way to doing something like I showed you here. Time and time again, clone. Beautiful way to make a living. Okay? So that's actually all I have. I'll put this in the link right there. And I've got to go to a birthday party here in just a few minutes anyway, but I'll have that phone on me. So if anybody wants to call, I'll be available for you. And I appreciate each and every one of you coming to this webinar today. I've done 3 or 4 of these webinars for Traders Corner. I like them. I like the way these other people come in professionally, talk to people, and showing you that we're the real deal. Those are real figures, okay? That's not something that's like, well, you know, those are evaluations. No, those are performance accounts. Those are true PAs. Okay, is there a 30-day trial of the trading system for those that want to see how it performs before making a long-term? We don't have a long-term commitment at all, Joe. You can actually come into us at even as a full member at $249 a month. I'll give you a $50 Apex account of your choice, $150, $250, or $300,000 account, and you just have to show me you bought it, and I'll pay you for it. This is not a long-term commitment. That is monthly. If I'm not worth that to you to make you 3,000 or 4,000 sometimes a day, then we're probably not for you. But we don't have any packages that cost you 5,000 up front or anything like that. That's my promotion most times right there. And it's a good deal. And the reason I can do that is simply because of the fact that we're real. Okay. If I was trying to get 5,000 out of you today or 6,000 or something like that, run. But if I'm just going to do this and you can say, you know what, I'll try that guy for 1 month for $249. Why not? Or how about this instead? You don't have to do that. Just go down right here and do my $39. You'll still get everything that a member gets. Okay. The only difference will be that Object Trader will only trade in sim instead of live money. Okay. All right. Again, my name is Gary Donahoo. I'm with Viper Trading Systems. Been around for a long time, and I'm going to show you how to turn $935 into $250,000. And I'll be back on Traders Corner next time and show you probably 350,000 by then. Okay, or 400,000. All right. Thanks for watching. Everybody have a great weekend.
Thank you, Gary. I love the enthusiasm.
Thank you.
Thank you. As usual, another great presentation by Gary. Ladies and gentlemen, if you are interested in having a powerful tool set to find better trade entries and accurate profit targets, all while automatically adhering to the guidelines set forth by prop trading firms, then legendary Mr. Gary Donahoo of Viper Trading Systems has a solution for you. And Gary, yes, you did put the offer link in the chat. We appreciate that. And congratulations on the prop trading success, Gary. Thank you for sharing your success with us. We hope you come back and see us again on Traders Corner.
Thank you very much.
Thank you. Well, ladies and gentlemen, we are down to our last presentation of the day. I hope everyone's listening closely because he's a seasoned trader and a real workhorse over at Right Line Trading, a graduate of Syracuse University, and he's been trading the financial markets for the last 12 years. He wears several hats at Right Line. He's a trading coach, assists with the optimization of trading strategies and indicators, provides logistical and technical support, and is always ready and willing to assist the Right Line Trading community. I don't know how he does it, but here to present how to create wealth hands-free is the incredible Mr. Rory Powers of Right Line Trading. Welcome back to Traders Corner, Rory.
Hey, thank you, Anthony. Thank you very much for that introduction. That was wonderful. Thank you.
You're most welcome.
I'll tell you, it's always an honor to be on Traders Corner. Just a great venue. And man, what a huge audience today. A couple hundred, almost 300 people live. So I'm very grateful for everybody's time. And man, what an exciting time we're in right now. Holy smokes. The election. Wow, what an election cycle. I mean, that was an election cycle like I've never seen before. And all I can say is I'm glad it's over. And the trading since the election has just been outstanding. And I've got a really exciting presentation today on the AI auto trader. I've got some Black Friday special pricing. So stick around. I know it's been a long event, but I've got a system here that's leveraging some cutting edge artificial intelligence technology that you've got to stick around and take a listen to. So let's go ahead and let's get moving. I know it's been a long day. First, let's get the CFTC out of the way. This presentation is for demonstration and educational purposes only. It's important to know that I am not a licensed financial advisor. If you're not familiar with the risks that are associated with trading, please do yourselves a favor and consult with a licensed financial advisor. And I just want to start my presentation off with just a very quick testimonial. One of our members, Marcy, happens to be one of my favorites, a really God-loving woman who came to us. You know, we have a beautiful community of traders that really are in all different skill levels and experience levels. Starting off from somebody who's completely green on the far left of the spectrum, to the seasoned professional that's, you know, just a professional trader on the far right of the spectrum, and everything that falls in between of that. So Marcy happens to be on the far left. Okay, she was a complete newbie when she came to us, completely green, had never traded a futures contract in her life. So Marcy came to us very hungry and eager and willing to learn. And in her testimonial, which I'm not going to play, if you want to hear it out of her mouth, I encourage you to go to our YouTube channel. On YouTube, it's Right Line Trading. And she gives just an absolutely beautiful testimonial, which is 100% genuine. And because of my lack of time, I'm going to paraphrase what she shared with the community of traders. What she shared was that the AI auto trader had significantly reduced her learning curve. She was able to achieve incredible success as a complete newbie trading the AI auto trader. She credits it to the system, the community of traders that support one another in our Discord chat group, the tool set that we provided her, and our team here at Right Line Trading. She was able to achieve 16 funded accounts within the first 60 days of her trading. This is somebody who's completely green at trading futures or trading in general. And listen, I've had the privilege here at Right Line Trading. I've been here for a long time to speak to thousands of traders over the years. And, you know, the success that she was able to accomplish would take you or I, when we first started out, probably 3 to 5 years. So it's a great testimonial, completely genuine. And I think it really provides a great message of what we're able to provide you with the AI Auto Trader. I want to first very briefly recognize my team. It's important to know that I'm part of a very experienced, educated team. We consist of professional traders, and also we have behind the desks professional software coders and developers and engineers. And it is our goal, our vision here at Right Line Trading, our mandate is to provide our members with an edge when they trade the financial markets. Listen, when we go to trade, when that morning bell rings and 9:30 Eastern comes and the bell rings, we're going to battle. Who we're going to battle against are the other retail traders. So we want to go to war with a bigger, badder weapon than they have. So we want to provide you with an edge over the other retail traders. Well, how do we do that? We have cutting edge software that helps predict the future direction of price. And we've been around for close to 14 years now. And along the way, we've really built a beautiful community of traders that all collaborate and share with one another what's working, and I think even more important, what's not working. so we could sidestep those speed bumps on our trading journey. And most importantly, we do it with transparency, honesty, and integrity. Very briefly, our professional traders, futures traders, Mr. Craig Emery runs our futures trading room. Mr. David the Kushner, he's our professional prop trader. He leverages our software. He successfully sustains 6 funded trading accounts and makes very consistent payouts on his prop accounts. And then last but certainly not least is my good friend, Mr. David Wise. And Mr. David Wise, man, what an options trader this guy is. You know, I always think of Pete Rose, you know, Charlie Hustle. This guy is always hitting single after single with a double and a triple mixed in. He trades options with an 89% win rate. So those are our professional traders. Behind the desks, we have Mr. Brock Miller, is my right-hand man. He's a college student. He's getting his degree in computer science. Our software developers, Mr. Charles Sider, has his master's degree in computer science, and he is an engineer through and through. Make sure all the I's are dotted, the T's are crossed. Mr. Sergio Luque Rodriguez. I reside in South Florida, so I have to have a little bit of a Spanish accent down here. And every Tuesday we have Taco Tuesday down here. But Sergio is, what can I say? Sergio is just a brilliant guy. You know, over the years working together with Sergio, I've seen him grow as a software developer. First, he was able to put complex mathematical equations and algorithms and code that was based on mathematical modeling. And now it's progressed to where he's able, thanks to a collaboration that we had with a world-renowned AI lab, that he's able to code AI coding into these self-learning models into our software in NinjaTrader language. So he's just a brilliant software developer. He has his master's degree in computer science. And our team is led really by just such a great guy, a personal friend, a real man of God. He has his MBA from Cal State. He's an Army veteran, much better man than I am. And listen, this guy, you know, he took over Right Line Trading a few years ago. And Mark Sachs, who was the original owner, really left us a beautiful foundation. He built these indicators that were all based on mathematical modeling, multiple time frame analysis, very sophisticated indicators, and a trading platform. Well, he passed the baton off to Mark Miller, who happens to have his background in automation and robotics. And I'll tell you, it was like the perfect handoff. Mark Sachs passed the baton to Mark Miller, and Mark Miller has brought his experience and those core military values of honesty, transparency, and integrity into every department of Right Line Trading. So that's the team here at Right Line Trading. I'm not alone pulling the switches and flipping the levers. And I always like just to introduce myself. Who's the voice that I hear behind the screen? My name is Rory Powers. I reside in South Florida. I've been with Right Line Trading for about 10 years now. My passions are trading the financial markets and saltwater fishing. Man, do I love fishing. Before I get into fishing and my best catch ever is my beautiful wife. I've been blessed. I have a beautiful wife. She's a registered nurse with a really large insurance company. And we have 2 beautiful children, a 5-year-old and a 20-month-old. This is a recent picture here on just a few weeks ago on Halloween. We were setting out the candy for the trick-or-treaters that were coming by, and the kids just had such a wonderful time trick-or-treating. But really, my other passion, saltwater fishing. I live right down by the Florida Keys. And this is a recent fishing trip with Mark Miller, Sergio, and myself. We went out and caught some beautiful snapper and grouper. And when the boat got back to the dock, this restaurant here in the background cooked them up, and it was just absolutely the freshest fish that you can imagine. So enough about me. Let's talk about the AI auto trader. The genesis of the AI auto trader was our lack of consistency as traders. Listen, I always like to put myself in the first person, but I want you to know, and I'm not going to name anybody's names. I see a lot of people here that I know very well over the years, and I'm not going to put you out there. Don't worry. But really, I think the vast majority of us have experienced setbacks and blown trading accounts and speed bumps on our trading journey. And I'm going to put myself out there. I happen to be probably one of the worst traders. Everybody that preceded me, I can almost guarantee you that they're a better trader than I am. So I'm not going to claim that I'm a great trader. In fact, I'm almost going to claim the opposite. I'm a poor trader, and my track record proves it. And the reason I'm a poor trader, and I'm going to blame it on somebody, here it comes. I'm going to blame it on my old man. It's our genes. Listen, humans suffer from what we call emotional issues in trading. You know, when I first heard, hey, I think you have some emotional issues, I pictured a guy on a psychiatrist's couch with his legs propped up, telling the good doctor how it all went wrong in his life. And that's not what it is in trading. It's something completely different. In trading, emotional errors are we make decisions based on emotion. For me, I love to, leave money on the table. If I see my P&L and I'm watching my P&L, those green numbers start going up real quick, it's almost like a reaction. I can't help myself from grabbing my stop and squeezing it, only to get nicked out and then watch the trade mature in my direction. And I'm there getting sick on the sidelines of all the money that I just left on the table. Or vice versa. If I take a little heat, I start squirming in my chair and I see those red numbers and I don't want to lose my money. And I bail out, even when the technicals are all lined up and price turns around and goes in the direction that I had the position in. I can't begin to tell you the frustration. I think you can feel it through my voice. It's very frustrating to have those emotions get in my way of success. And listen, we've all had these issues. Well, if not all of us, most of us have. There are a select few. It's interesting. I was on Trader's Corner, and I heard a gentleman, a really, really brilliant guy. His name is Christopher Mullen, and he happens to be a professional in this niche. And he did a study. He did a study on human personality traits as it relates to trading, and whether or not the personality trait that you have, it lends well to being a good disciplined trader. Well, it turns out there's probably about 10 or 12 core personality traits that we all share to a certain degree and a different degree that makes us all each individuals, that makes us all unique. Well, it turns out, if just to name a few of these personality traits, you have the driver, the analytical, the emotional. So it turns out that only a few of these personality traits, maybe one or two, lends well to being a good disciplined trader that can channel out all the noise and in a fast moving market be able to identify an entry that has the least amount of risk associated with it and be able to stay in that trade and pull in the meat of the move without moving their stop or getting stopped out in the meantime. So it turns out that, I don't know, how many of you have that one or two personality traits as your core personality, but I can tell you for sure that I do not. And so that's really the most common issue that us traders share, is being human beings. Listen, these large institutions and hedge funds, they're not trading they're trading fully automated systems. 95% of these large institutions and even retail traders now, about 80 or 85% are trading automated strategies. And the reason why they're doing it is because there's no human emotion involved. Sure, we all have bought indicators that don't work or that lack the true proven trading methodology. But listen, it all leads to that same cold, desolate place of blowing out your trading account. You know, you've probably heard the old saying, the definition of insanity is doing the same thing over and over again and expecting different results. You know, how many accounts did I have to blow to realize, hey, it's time to find another path? That one's just not working for me. So this was the genesis of the AI Auto Trader, and it has been my team's commitment to bring this to an end. This looks like me in the female version. You know, after a day of trading on discretionary trading by myself, you know, you take a winner or two and you feel like you can't take a loser, and all of a sudden you pull one in that's just a massive loser, and you're ready to put that hammer right through the computer screen. Trust me, I know exactly how it feels. So we've narrowed it down to two things that we think, that we believe are going to create trading success. Number one, you have to have the proper tool set. When I say the proper tool set, I alluded to in the beginning, we want to provide our members with an edge. We want to have a system that's bigger and badder. To have a proper tool set means to have a trading system that's technologically more advanced than the next guy. Listen, if you're using, you know, let's say NinjaTrader 7 still, and when they have NinjaTrader 8, which is a much more powerful framework and technology, well, obviously, if you're trading on Ninja 7, you're going to have a disadvantage. So you want to have the most technologically advanced system when you're trading the financial markets. You need a system that's going to be able to identify risk, get you in at the most opportune times, and get you out before price reverses. And ideally, number two, because we all suffer from these human emotions that get in our way, ideally, we want a trading system, or in this case, a strategy. NinjaTrader 8, a strategy is an automated system, an automated strategy that can get us in and out, all on decisions that are based on the data, not emotions. All data-based decisions. And I bring this slide up on NVIDIA because I don't know if you're aware of it or not, but if not, I'll bring it to your attention. We happen to be in the midst of an AI revolution, the likes of which some people are comparing to the invention of the automobile. I truly believe that we're just scratching the surface on the full capabilities of this technology. If you look at NVIDIA, at the price per share, in just the last year, it's gone up 245%. NVIDIA owns they have the largest market cap in those chips that create the AI. So, and they're coming out, actually, they've already started delivery in fact, on November 20th. They're going to be releasing their earnings for the previous quarter. And they just started delivering in the last month of October, the new chip that they've just come out with that's 30 times faster than the one that they had previously come out with. So this earnings call should be very interesting to see. And I anticipate this graph to keep going up with NVIDIA. So this system leverages artificial intelligence. What are the benefits? Well, the benefits is, I like to call them bonehead mistakes. And man, can I do them? There's no more overthinking, hesitating, making bonehead mistakes. Even if you're not familiar with the trading platform, I've talked to hundreds of traders, and even myself, who's very proficient at NinjaTrader, still to this day in a fast moving market stumbles and bumbles and slips on a banana peel, and sometimes it costs me dearly. Well, this eliminates all of those overthinking, hesitating human errors that we make. It's going to place our stop and our profit targets in the most ideal locations, and that's predetermined by our proprietary AI technology. And I'm going to go into a little bit of the minutia on that, just a little bit, just so you have an understanding of the technology that we're leveraging here. So it's going to place your stop and your profit targets in the most ideal places. There's no more mismanaging trades, cutting our winners short, bailing out on a winning trade too early. And if you're a prop trader, stick around. I've got some game-changing prop trading strategies that we've integrated that we're actually going to include for free in our Black Friday special. So stick around if you're a prop trader. I've got some exciting information to share with you. I want to get a little bit into the minutia though, about why our system, how it works. How does this AI work? I get calls every day. You know, what's the logic behind this? And listen, the elephant in the room when you talk about an automated strategy is always what's happened in the past. You know, I've purchased strategies in the past too that just didn't work. They just weren't consistent. The problem with them being when market conditions change, they're no longer profitable. In a trending market, they might do wonderful. But then if the market goes sideways on us, if it's a ranging, choppy market, we get chopped to pieces. Well, once market conditions change, the strategy gets stale. Well, as a solution, this AI integration that I'm going to show you is going to change all of that. It's truly a game changer. And the way it works is each one of our bots runs in tandem with what we call a drone. A drone is just like it sounds. It's a strategy just like the bot that has static inputs on its strategy parameters. They're static, they don't change. It has a very wide stop and a very ambitious profit target. And it's going to take the trade in tandem with your bot. And what it's doing is sharing a database. And it's telling the bot a number of different things. Number one, it's telling it what the average true range of the market is. Listen, if it's a trending market, we want to be able to capitalize. It's going to tell the bot, hey, right now we're in a trending market. Put your stop up here, and you can put your profit target, an ambitious profit target, and move your stop up some because we don't have to take as much risk. So it's going to place your stop and profit targets dynamically. It's going to change the inputs of the bot to cater to the current market environment. Listen, this is a very news-driven market. We can go from a choppy, ranging market to one that goes off like a rocket ship and starts trending on a tweet. Now that Trump's back, on a tweet or a news report. You know, throughout the week, you know, we see the ABCs of the federal government releasing these economic news reports, and these investors and hedge funds and large institutions are doing what they call sector rotation. They're rotating their equity from one asset class to the next to take risk off. So these news reports are driving the market, and we want to have a system that's going to continuously adapt to the ever-changing market environment. So one way we do it is it's going to place your stop and your profit targets in the most ideal locations. The second way the second AI integration we've made is a self-learning model called pattern recognition. The markets are very symmetrical throughout the day, and throughout just about every trading day, there's repeating candlestick pattern formations that will appear on your charts. And when those appear, our system learns what happens next, and it learns the percentage of how many times it happens. And that machine learning model will start making reactions to those bearish or bullish engulfing candles. And there's about 7 or 8 different candlestick formations that the system is going to learn to get you out of trades to lock in profits, or to keep you in the trade to maximize your profits. The third way our AI integration works is the drone is running 23 hours a day. I know this is a lot of information and I'm talking quick, but very briefly, the drone runs 23 hours a day. The chart on my left is representing, on the x-axis on the bottom, is each half hour of the day from 8:30 a.m. to 3:30 p.m. So throughout the entire trading session, it's showing the P&L, how much it made or how much it lost and what time it did it. So over the course of 2 weeks or a month or 2 months, what happens is the drone will tell the bot when historically it's the most profitable. And the bot will only run during those optimal times. I always get, hey, Rory, can I enable this and go to work? I have a job, or I have to take the kids to school, or I get phone calls. The answer is yes, because the bot will dynamically change its inputs to only trade during the times of the day that it's most profitable. So those are the 3 core integrations of our artificial intelligence. Now, if you have a question, I know I'm talking a little fast, and I want to respect your time. I know it's been a long day. Please, it's only Anthony and I in the room. If you put your name and your number in the chat box, as soon as I'm done, I'll give you a call and I'll answer any questions that I just didn't have time to get to today. Just put your name and your number in the chat box and I'll be happy to answer your questions. So let's keep moving. I see a lot of questions in the chat box. Now, the AI Auto Trader, if you decide to come aboard, you're going to receive our full portfolio of strategies. The full portfolio, I like to refer to it as the full Monty. The system is trading 6 instruments simultaneously. All of the index equities, the futures index equities, the NASDAQ, the Dow, the Russell, and the S&P 500. And we've also added crude oil and gold. So we have a beautiful diversified portfolio of strategies that's really keeping its finger on the pulse of the market. And what I would like to do is just to show you the results that we've been getting and that our members have been achieving, so you get a good idea of what you can expect. The first one I want to highlight is the ES. The ES, man, I'll tell you, I've tried to trade the ES a number of times, and it's very, very difficult. The ES, man, we've got a strategy on the ES. It leverages a 30 range bar type, and it's an ABC entry, meaning it's leveraging all of our entries. And let me show you the results on this. Ever since the election, I'm going to start from the election and then we'll go back a little bit. Right after the election, from November 5th to November 15th, trading just one E-mini. Now these, keep in mind, they're very liquid instruments. There's a very small bid-ask spread. There's no problem getting our fills with these, even with stop limit orders. So trading just one contract, this strategy in just from the 5th to the 15th, probably 8 or 10 trading sessions, is up $6,500.30 after commissions. After commissions, trading one contract. This isn't a hypothetical or a back test or a strategy analyzer. This is the real deal Holyfield on a live market. In fact, I'm going to go to YouTube because we're very transparent. I think something that distinguishes us from our competitors and our new owner, Mark Miller, God bless him. has all of our traders live on YouTube every day of the week, Monday through Friday. And this is Mark trading our system live on YouTube. And just to give you an idea, this happens to be the NASDAQ strategy, but you can see he's trading our NASDAQ scalper here. And our NASDAQ scalper, you can see he's trading his live account. Whether you trade a prop account, a live account, or a sim account, it makes no difference. This is going to get almost the exact same fills. On the left is a sim account, on the right is a live account. And he's in this trade here on his live account. And you can go back on our YouTube channel and you can see historically every session for the last 4 or 6 months. So, and I want to personally invite you, I'm going to put a link in the chat box. I want to personally invite you next week to come check us out for free on YouTube. And I think what you're going to find is this system is going to blow your mind. Anyway, let's get back to it. The ES30 range, $6,537 since election day. Let's go back. You know, a lot of people say, Rory, you know, that doesn't impress me. It had a good couple days. But what about a month? What about 2 months? Let's look back a couple months. From September 14th to election day, it was up $21,000 trading one contract on a live market. $21,000 on the E-mini. You add those 5,000 or 6,000 since election day, you're looking at about $26,000 or $27,000 trading one contract on the E-mini. That's incredible. If it wasn't recorded, I'd have I could see where you couldn't believe me, but everything is recorded. The other strategy I want to highlight is our NASDAQ. Man, we've got some NASDAQ strategies that are just so much fun to watch. That's one of them that Mark Miller was just showing you. We have a 2-minute bar type leveraging our retirement plan. We have a scalper strategy leveraging an 8-unit Renko. We have a 15 range. That's a really fast one on a haymaker, and a 30 range. So we've got a number of different data series that the system will fire off trades on. But to give you an idea of the results in October, from October 1st to the 31st, trading one contract on that 2-minute retirement plan, we're up $5,297.50 on an Apex account. 2-minute retirement plan, just under $5,300 trading one contract after commissions. Okay, and that's on the retirement plan. On the 8-unit Renko, that's the one I just showed you, Mark trading live on YouTube. $9,328 in the last month, trading just one contract. Trading just one contract in full automation. Full automation. And I want to touch on the prop trading. I promised I would. The 1-day pass. Let me set up my next video, and I'm going to respect your time. Don't worry. The 1-day pass. What the 1-day pass is, prop traders, no more blood, sweat, and tears passing your evaluation accounts. We've got a solution to get you funded and get you funded quickly. We call it our 1-day pass. The 1-day pass, and I'm going to set up our next video, leverages the maximum amount of contracts allowable for the size evaluation that you're running. So for example, you have a $50,000 evaluation. The maximum number of contracts that you're allowed to trade is 10 contracts. If you're trading 10 contracts, in order to pass your evaluation on the NASDAQ, you need 60 ticks for $3,000. Okay, so this strategy is going to trade 10 contracts, and we're going to add in a couple of ticks for slippage and commissions. So it's going for 62 or 63 ticks. And it's only going to trade, listen to this, during the half hour out of the day that historically it does the absolute best. And it's right around 10:30 in the morning. It's about an hour after the market opened. So this video shows the spirit of that 1-day pass. This is Mark again. He's using a trade copier. He's trading 6 evaluation accounts on a copier. His system takes the 1-day pass, gets into the trade. When he gets within 10 ticks of his profit target, the stop pops up, and we call it our profit window. All of our strategies have what we call a profit window. If we get to 10 or 20 ticks to our profit target, our stop swings up and locks in some really nice profits. On that trade, Mark passed 6 evaluations on the 1-day pass, trading the NASDAQ. So the 1-day pass can get you over the hump in very short order. And then we also have, once you've passed your evaluation, we have what we call our PA account templates. The PA account templates are much more conservative than trading 10 contracts at once. Now we want to sustain the funding, and we want to get you consistent payouts. We're not going to do that going for an all or nothing trade like we could do on an evaluation. On the evaluations, we go all for one, and statistically, we're about between 30 and 50%. I always like to kind of under-promise and over-deliver. So I always say, statistically, let's call it 1 out of 3. 1 out of 3 evaluations. If you buy 3 evaluations and you traded them all on our 1-day pass, 1 out of 3, you have a very good chance of passing. So once you get the PA account, everything changes. We have integrated into our software. We will follow the rules that Apex and these other prop firms makes us follow. Let's face it, the main advantage of prop trading is we're not risking our own capital. If we take a big loss, it doesn't hurt as bad. It's not as painful. The downside is they have these rules. The trailing drawdown, the 30% consistency. We've integrated in our software safety precautions that will prevent you from blowing out your account or breaking any rules. So you don't have to worry about that. We have very conservative strategies. To give you an idea, to show you one just over the last week on the PA account, our PA account strategy was up $784, trading just 1 contract. It has very little drawdown, $167 of drawdown to make $784. That's on 1 contract. It only took 12 trades the whole week. A lot of people vision a strategy that fires off trades like a machine gun. This one took 12 trades the whole week and was up $784 with very little drawdown. So if you want to keep your funded account, having these PA templates is going to be key. Those are going to be included in this Black Friday special offer. So all of the robots that we're offering today have all been integrated with this advanced machine learning algorithm that's going to run on your computer. And let me tell you this, if you haven't seen the system, it is, it is a powerhouse. That's the best way that I can explain it. So let's get to the special offer. Traders Corner, we love you. Black Friday, in the spirit of Traders Corner and Black Friday, this is our best pricing you're ever going to see. We're going to provide you, number one, with probably the best customer support of any vendor out there. And don't just take it from me. Go to Trustpilot and check out the reviews on our AI Auto Trader and our customer service. I'm not bragging or boasting. I'm very proud to be able to show you those type of reviews because not only do we do a white glove installation, if you're totally green at trading and you've never traded before, or Ninja Trader gives you the goosebumps when you hear the name Ninja Trader, don't worry. We, we have a team that's going to remote onto your computer and set the entire thing up for you. We're going to meet with you on a regular basis and go over the performance and guide you and teach you the methodology of how to extract money from the markets using the AI Auto Trader. So it doesn't just stop after we've installed it. We're not going to wish you good luck and wave goodbye. That's really the beginning of our relationship. We want to establish a win-win relationship that's ongoing, where you could tell your family and friends that you're making money with us. You're going to get the masterclass modules. We go into depth of the indicators the system is leveraging and all of the conditions and triggers of our strategies. In fact, even how to backtest and optimize your own. You're going to be with us every morning on YouTube Live. This is the full transparency. Even before you buy the system, come and take a look at it. I've talked to so many traders that have jumped in head first and wound up with a big bump on the head. That's not the case with us. Everything is transparent. Go to the YouTube channel, watch a couple of weeks or a couple of months of the system, see the results that it garners. There will be no surprises. We're going to trade the system with you live every morning from 9:30 to 11:30. And then after that, our options trader, David Wise, comes on and does a magnificent job trading the SPY Super System. But you're going to trade it with us every morning for free as part of your membership. You're not going to pay anything extra to trade with us on YouTube. Here it is, the full Monty, Black Friday. This is the special. This is the pricing. I'm telling you, if you've seen my presentation before and you haven't come aboard, this is the best chance. This is the best price. This is our Black Friday special. Site-wide, if you go to rightlinetrading.com, it's not just the AI Auto Trader. Site-wide, we're offering free trials to all of our trading rooms, 50% off on all of our software. We're blowing out the best pricing in the company's history right now. So let's get back to our special offer for the AI Auto. The AI Auto comes in 3 sizes, the membership. I want to make it clear, though, that whether you do the monthly or the lifetime, you're going to get the same thing. You're getting everything, okay? Everything. For the monthly membership, normally it's $6.99 a month. We have a coupon code that's already embedded in the link, and my associate Brock, who happens to be here, is going to place that link in the chat box. So that link will be in the chat box. With that link, you can sign up for $4.99 a month. A much better value is going to be the annual membership. The annual membership is normally $29.99. And during this Black Friday special, it's $14.99 for the year. If you do the math on that, divide by 12, it breaks down, I think, to about 100, if I remember correctly, about $115 or $120 per month. For $115 or $120 per month, to be able to have this trading system do your trading for you, I'm telling you, it's going to be a game changer in the trajectory of your trading career. If you have the means, the best value is the lifetime. Normally it's $49.99. We're giving you a 50% discount for Black Friday. $24.99. It's a one-time payment and you own it forever. One-time payment of $24.99. We do accept PayPal and PayPal later. PayPal later, isn't that great? You don't have to pay it today. Well, I pay today. You can pay it tomorrow. The best part about pay later with PayPal is there's no interest. They'll allow you to pay over 6 months interest free. So if you have decent credit, I'm not sure what type of credit rating you need to have, but it's pretty easy to get. Most of our members get it without a problem. So that will allow you to pay any one of these 3 options over the course of 6 months, completely interest-free. And I want to just end my presentation with just a few more testimonials, because I think it's important to see not only Marcia, but some of our other members and the success that they're having. One of our members, Steve C., brilliant guy. On the spectrum we were discussing between beginner and professional, I put him at the far right of that spectrum. He can design and develop these strategies on his own. In fact, he shared with our community the NQ scalper that everybody's been crushing it with. He shared it with the community on November 4th. And by November 12th, not even about a week later, my good friend Sood was able to trade that NQ scalper and get 3 accounts funded, put them over the hump at $53,000 in one day using that NQ scalper drone. So Sood, congratulations. He's having tremendous success. Simon, my good friend across the pond, he's in the UK. Simon, it's not unusual for him to make $15,000 or $20,000 in a single trading session. In one day, leveraging our most powerful bots. Very doable. Simon does it on the regular. And Limit Up posted in our Discord some game-changing results. So we have a lot of members that are getting very nice payouts. They're passing the evaluations, and also we have members trading a live account, completely automated, doing extremely well. This is Steve on his own account here. And the last testimonial I wanted to show you, Suzanne is a great member of ours. She was trading Take Profit using these bots. But one of my favorites is from Gary Sparks. Gary has been a member with us for many years. He's very quiet, very humble guy. And, he was on YouTube, and one of the other people that were on YouTube were asking a few questions because the system was doing really well, and he was very curious. And he was asking Gary some questions during the session. And Gary mentions to him, if you look at this testimonial of this thread at the very bottom here, Gary mentions that he has purchased bots from some of our competitors. But what he says at the end is that right line trading is superior to these other vendors. And I have to credit that to this AI integration. This technology that we've integrated into our system has been a complete game changer. And the system, the more data that's fed into its brain, into its engine, the more powerful and more precise the output becomes. The more data that runs through that engine and the more optimized that bot becomes, this thing turns in to a trading system on steroids. I started out by making a confession that I'm probably one of the world's worst traders. And listen, in the month of October, trading my Apex accounts, I was able, using this automation, all live on YouTube. You can go back in November and check it out. I was able to make $12,826 on my Apex accounts trading this AI auto trader. Let me be perfectly honest. There's no way in God's green earth that I could put up numbers like that on my own on a discretionary basis. So I want to end with a message of hope. If your trading journey has been a rocky one, if you've hit some speed bumps and roadblocks, and you've blown out some trading accounts, I want to tell you that there is hope. I have a viable path to profitability. Right now with our Black Friday special, it's the best time to come aboard. And I want to thank you, and I want to thank Anthony once again for allowing me to present here on on Traders Corner. God bless you, everybody. I hope you have a blessed weekend. If you have a question, please put your name and your number in that chat box, and I'm going to give you a call. Thanks again, Anthony.
Thank you, Rory. I did see some questions in there, so you'll have to have a look at that.
I will. I'll get to them. Thank you.
You're welcome. Those strategies look amazing, and so do those results. And team, congratulations to you and your team over Right Line Trading on developing such a sophisticated system. Ladies and gentlemen, if you struggle with human error over trading inconsistent results and blowing out your proper live accounts, which I've done more than once, then Mr. Rory Powers over at Right Line Trading has a solution for you. You can learn more by clicking on the link in the chat box. Thanks again, Rory, for making such a generous Black Friday offer for us today.
Thanks, Anthony. One last thing. I just wanted to put the our YouTube channel. So if I want to invite everybody that's in attendance to come join us live, and I'll put that in the chat box now. Thanks, Anthony.
You're welcome. All right. Well, while Rory is doing that, sorry, we'd like to thank everyone and say that this concludes our online trading summit. The staff at Traders Corner wants to thank you all for joining us today. It's been an information-packed event, and we hope you all enjoy the rest of the weekend. The replay will be on our YouTube channel, which I'm going to put in the chat right now as well. So if you want to do the replay, have a look at that. Here you go. And yeah, thanks for being here. Have a nice evening. Continue to work hard at becoming a better trader. It's a lot of discipline. I think that was kind of a common theme today. Have a blessed evening, everyone. We do appreciate you being here with us. And together, let's make some profits.